Good morning, everybody. How are we doing? Let's just wait until my screen can load. Just trying to load my terminal up for you guys now. My computer doesn't want me trading today, apparently. How are we doing, everybody? It is a terrific Tuesday. Hope you are all doing well. Those of you who have traded Asia session already have taken profit, and those of you who haven't are about to take profit. So let us know who is in chat this morning. I have now got my screen up. There we go. That is a bit better. Let's start the day on a high, shall we, guys, with the market open, or let's say the London Open. So let us know, guys. Drop us some comments in chat. Come say good morning to us. Let us know who is in chat this morning, and let us know if you have already placed your trade. I know a few of the guys that I do chat about trading with have already made money and lost money this morning. So I hope you are all doing fantastic. First things first, make sure you smash that like button and make sure you subscribe to the channel. So big welcome to the Fivers, everybody. But first things first, it is myself and myself only at the moment. So you know what? Come chat with me, guys. Come have a bit of a conversation. Meanwhile, I am going to look for some background music. Is it this one that I usually use? It is. There we go. It is indeed. Let me know if I'm getting any lag, guys, as well. By the way, my Wi-Fi seems to be all sorted. So that is all gravy, baby. Let's go ahead and bring my screen up for you guys so you can see. Let us know if you want me to do any analysis for you guys today as well, while we wait for the one and only LJ to come in. Gotta try and remember where I want to be on my... trying to find where's central. I feel like... there we go. That's a little bit better. So, guys, we got 50, nearly 60 of you guys in already, which is absolutely awesome. Make sure that you guys are going to smash that like button and make sure you come say good morning. I have already got my morning coffee, even though it is 20 to 6 in the evening. It's still my morning coffee. It's still London. It's London Open, so that's a bit hot. Yummy. Right, let's have a bit of a catch up with chat. Let's see who is in this morning. We have got Unbiased Trader in. What is good, my man? Good morning to you too. Solaris saying, yo, what is good? How are you doing on this terrific Tuesday? Or is it a terrible Tuesday? Let's know. Have you hit stop loss or take profit? Or have you stayed out of the market for now? I don't blame you if you are staying out of the market because, like a wonderful trader once told me, not trading is still trading. Henry, good evening. Yes, Henry. Henry, let us know where you're from because it is also evening for me here as well. So good evening to you, Henry. I hope you are doing well, my friend. Hi, everyone, and welcome to the Fivers Trading Room. Absolutely. Big welcome. As you guys know already, my name is Will Davis. And for those of you who do not know, my name is Will Davis, and welcome to the Fivers live stream. Hope you are all doing very well today. We've got Sniper VWAP saying, hi, everybody. What is good, Sniper? Hope you are having a fantastic start to the day, or end to the day, or middle of the day, depending on where you're coming from. Ty coming out saying, or Ty Keith's coming out saying, hi, guys. Ty Keith, hope you're well. Big hello, big shout out to you, my friend. Hope you're doing well. As the Fivers are saying, hit that like button as you join. Let's make the stream popular. 100%, guys. We are super close to 100,000 subscribers, and can I just say that is amazing. Like, we would not have been able to do any of this if it wasn't for you guys and your support. So make sure that you're going to smash that like button, give us a big thumbs up, and share the channel, share this live stream. Let's really try and push it to as many traders as possible, because not only are we the best prop out there, we're also the best trading community out there. You heard it here first, people. So make sure you go and share it with everybody you know, because it does mean a huge amount to us, because we really want to try and push our good vibes and positivity in the markets out to as many traders as possible. Tian Pips saying, hi guys, how are you doing, my man? Good morning, good afternoon, good evening. Whom the giveaway will Samir do? Samir said in live stream. Whom the giveaway will Samir do? Samir said in live. I don't know. I must have missed that. Maybe was that yesterday evening? I was probably having some food and getting ready for bed. at that point, so I missed that. So wait until Samir comes back, and I'm sure he will drop some more information on that a little bit later on. Every help likes us to reach more traders on the road to 100k. Dude, talking about giveaways on the live stream, there's going to be some massive stuff going on once we have our 100,000 subscribers. So if you are new here, make sure that you go ahead and subscribe to the channel, and make sure you share it amongst other traders as well so they can subscribe to the channel, because we are currently sitting at 95.4 thousand subscribers. That is unbelievable. Like, that is super cool. So make sure that you go ahead and smash out that like button. We need an absolute tidal wave of engagement to hit our 100,000 subscriber goal before our anniversary, and I think we can do it. I really think we can do it. So let's go ahead, guys, and smash it out. Absolutely big W coming from Z Life. What is good, Z Life? Big welcome to you. Good morning, good afternoon, good evening, wherever you come in from. Hope that you are well. Scott, what is good, my man? Good to see you in. Scott, good morning. How are you? Good morning and happy Tuesday to Iona. Good morning to you too. I hope you are well, Iona. Unbiased Trader, William, nice to see you start the day. What can I say? What can I say? Well, to start the day. Z Life, let's go. Absolutely. Well, that is the vibes we want on a Tuesday morning. I want absolute loving the fish, my man. Jude saying good morning. Good morning, Jude. How are you doing? Good morning, Sigma FX, the man himself. Sigma FX, yo, Mr. William. What is good, my man? Hoping you are also keeping well. Currently in gold longs. Okay. Currently in gold longs. I tell you what, this is the first shout for price action of the day. Let's go straight into it. So this is gold. Oh, I'm still trying to recover from that bit of a coldy cough that I had going on. So this was my analysis on price action yesterday, and wow, we had breaking news. I think it was this morning my time, which would have been about 11, maybe midnight UK time, maybe a little bit earlier. But we had breaking news that gold had just jumped around 2%. So that was absolutely incredible. But more importantly, what did I predict? We had my price action labeled out here. We didn't get it. So none of this trading would have been valid for me. However, we tried and attempted to move above, pulled back. Now, this is on the 50-minute. I tell you what, let's go down to the 5. So there we go. This is the 5-minute price action, and we still didn't get it validated. How unreal is that? So we had consolidation here. I wanted to see price at a bare minimum. So here were my sort of opportunities in the market. I wanted to see a break and close above this high. We didn't get it. We got a break, but it whipped, and then we came back down, consolidated for a little bit, then moved up. But ideally, I wanted to see price come and break above the all-time high. Now, let's move back up onto the 50-minute, just because it looks a little bit nicer and a little bit more clean, in my opinion. So there we go. So yesterday we had, or like overnight, we had this sort of price action coming through here. Finally got the break and close above. We didn't get a pullback, but those of you who had the break and close entry criteria, you would be sitting on some beautiful price action right now. So let's go ahead and jump down onto the 5-minute chart and see if there's any potential opportunities for buys. Now, we had some consolidation here. I mean, technically it was quite nice if we wanted to get in on, let's go ahead and just exit and borrow. There we go. So let's just mark out the highs here. So I mean, this was pretty nice. This was pretty nice. I do like the look of this. Now, however, the price moved above, broken close. We didn't get a pullback, but look at the price action. Look at the size of the candles as we move higher. They were very, very if buts and maybes. They were very high wick intent, which means that there was a lot of wicks to the high side, showing maybe a little bit of attempt to rejection, even though we were moving higher. Only until this area here was I interested in gold. Only until we got to this area here did we start having some like bigger candle pushes to the bull side than we did to the bear side. Now, this was super nice because we had this nice big bullish engulfing candle, which we could have now looked at closing above this base, as Richard Butler calls it. You know, we had that rally, base rally, break and close on the 5 minute above this base here. Here would have been a really nice area to be trading from, which was 47.04. So that would have been quite nice. Oh, that's a good cup of coffee. There we go. So that would have been really nice for me. So maybe a buy opportunity around 47.05. Where else would I wanted to be buying? I mean, we've got a little bit of consolidation around here, which was quite nice. Let's see where the guys were trading from. So where did you say Keegan said that he was in from 47.20? Let's have a look for that. 47.20, should we? 47.20. So around about here. Okay, that's interesting. So what is your reasoning for the buys at that level? Why 47.20? Just gonna have a look now. I'm assuming it was on the potential breakout. So we had the break and close above this consolidation zone. We had the break and close above these highs here. It was a bit wicky for me around this area here. So this area looked a little bit wicky for me. However, we pulled back into the zone and then we had this beautiful move back on. So if you, okay, you know what? I'm going to assume, that's 47.18. Let me see if I can get a fib out on this, because I think I may be able to guess where and why you traded this. Because this looks really nice, and I think I kind of agree with your trade. Let me see. I want to delete that. I'm going to keep the 5. I'm going to delete that. No, not edit, delete. I'm going to delete that. Okay. There we go. So, maybe not quite. Not quite. Okay, you know what? I'm going to go with you entered in. So we've got this area here. You got the 2 big bullish candle push above this consolidation, above this recent high, which showed a lot of buy-in pressure. We pulled back into what I like to call my golden zone on the fib tracement. So I don't know if you use a similar strategy with your fibs, maybe. But this looked like a really nice. So I'm going to go with you traded from 47.20 on the pullback after this 2 bullish candle push, and looking at longs from there. Keegan, tell me if I am. Keegan, sorry, tell me if I am wrong with that. That's what I'm going to guess that your price action was at. If so, beautiful trade, my friend. If not, please educate me on why. Prit Patel saying it is evening here. Well, good evening, my friend. How are you doing? Like I said, good morning, good afternoon, and good evening to all of those joining from all across the world. Let us know where you are joining from as well. If you are international, then welcome, my international friends. How are we doing on this fantastic London Open? Good morning, good afternoon from Ethiopia. Awesome, Z-Life, that's awesome. Big welcome, big shout out to Ethiopia. Louis, good morning, team. Good morning, Louis. How are you doing, my friend? And good morning, Jonathan.
Good morning, Will. How's it going?
Not too shabby, my friend. Not too shabby at all. I'm fine. I finally feel a lot better now that I got some Wi-Fi. You know, my Wi-Fi issues seem to have sorted themselves out. I've already been looking at some cool posters for the background. Really excited to go. Yeah, really excited to order them. But I kind of feel like, so you see your plant in the background?
Yeah.
Back in the UK, I got a similar plant. I got a plant hanging, but I've also got a plant in the corner. So if I get some like cool stuff, I kind of feel like I need some greenery in. So
Yeah, you
maybe.
definitely. You know what? Like, just get something on the wall and just a plant that's minimalistic. I think that's gonna be great for that background.
CC found me this plant, and she goes, "This is super cool." I said, "Yeah, well, how can I hang that on my wall?" But it was like some like ornament, like sort of like bonsai tree plant with like a water fountain on it. I thought, "Yeah, that's awesome," but I can't stick it to my wall. So I think I got to get some form of shrubbery, some form of some greenery.
Yeah, I think it's going to be looking great. Have you? I'm seeing the markets right now. We got a huge movements in the markets. I'm trying to figure out why, like what's happening. Surely there must be something going on. We got USD CHF. We got a huge move to the downside on the USD pairs. USD CAD. That's a very nice rejection right here. So I'm trying to figure out what is happening. If there's any, I mean, the only news event that we had was this morning. We had a UK unemployment numbers coming out, kind of shaking up the markets. We saw, GBP USD moving nicely to the upside. But if we look at Euro USD, there's definitely huge movement here today, and I'm trying to figure out what is causing all of this. We have the World Economic Forum on the way in Davos, Switzerland, where Trump is going to speak. We have he is going to speak. When is he going to speak? Let's see.
It's not a little bit later on, I thought, was it not? Let me have a look on Forex actually.
I don't think it's on. I think it's on there, but he's going to speak this week at Davos. And if you're interested in what's happening on Davos, you got Bloomberg coverage. But obviously, don't look at that. Look at us.
I will personally share my screen if I have to. Okay, Wednesday, I believe it is. Yeah, Wednesday at 9:30 p.m. President Trump speaks.
So yeah, we got a lot of interesting things happening right now, and yes, Trump will be talking about Greenland, of course, at that event. Let's look at gold. Look at gold with new all-time highs today. Again, we got silver, new all-time highs today as well. Absolutely, going crazy here. So yeah, interesting market. What are you thinking today, Will? Are you looking to trade anything?
Possibly. This is my first time at the market. So even though I'm currently living in Asia, I'm still not trading the Asian markets. I'm gonna start testing them after a conversation we had on stream yesterday. But right now I'm not feeling confident enough to trade them. I kind of want to see a bit of a pullback in, like maybe a pullback in sort of like London session, then a continuation, maybe like late London session. So maybe at like 11 p.m. UK time. So what we got, was it like an hour and a half, 2 hours maybe, before we like during that time I want to see a bit of a pullback on gold. Maybe going into the New York session, then we'll see some bullish price action, especially that we had New York closed yesterday due to Martin Luther King Day. So I think that maybe gold could do some cool movements now over the New York session. It's kind of what I'm hoping to see. But we'll see. If we can see that, I think I'd be pretty happy to jump in on and sort of utilize some cool opportunities. What about yourself, Jonathan? You looking at it at the moment?
Well, I am currently in a Euro GBP short. Now that looks not great. This is obviously, I think we're going to get stopped out on that one. And then I'm in a AUD NCD long as well. And that one is absolutely getting destroyed. So I'm waiting for that to maybe bounce somewhere here. I mean, the trend is still looking good on AUD NCD, so I'm not looking to exit this one. Euro GBP, however, probably is going to wait for that stop loss to hit, and I need to rethink the situation here, giving the overall movements we're seeing. But I'm definitely, I'm a little bit I wanted to enter gold here, you know, on that retest right there. And it's amazing to me that I've talked about gold for a whole year now, saying that just buy gold, it's going to be great. And I am, you know, 30% of my long-term portfolio is in gold. But why, you know, why didn't I just open like a big high risk trade on gold is what I'm wondering, because that's, I mean, I'm not surprised by the movements of gold. We have all talked about this, and we're all seeing the signs, but why am I not heavily long on gold? And that is, yeah, that sucks. Getting FOMO. I've been having FOMO on gold for so long. I just want to, you know.
Yeah, I know what you mean. So like, it was the same. Yeah, it was the same with me. Like end of last year, I looked at gold and like I earned, like I said, guys, I earned 7K or close to. I was like 6.5, 7K in the space of 2 months. That was like 6.5, 7%. I clawed back on my 100K account live on stream in front of every single one of you guys. So I looked at that, but then on a personal trading point of view, and like some of my other accounts that I trade off stream, I looked at it and I thought, why didn't I just pick one out of all the accounts that I have got? You know, I did my very careful trading on stream with you guys. I did my also very careful trading off stream on my other accounts. Why didn't I just pick one account, even if it was a small account, and just think, you know, guts to glory, and just think, you know, I'm going to see what I can do with this account, see if I can really push it for the stars. Who knows what sort of profit I could have had? Like, if I could have really used up some of like the leverage that was offered to me and thought, you know, I'm going to risk like 1, 2, 2.5% and see if I can just buy gold and buy gold and buy gold, because that's what I was seeing on social media. But then part of me also thought to myself, you know what, I'm super happy just doing what I'm doing, because like I say, slow horse for a long journey. You know, why am I going to try and sprint a marathon? I'm going to be done by sort of mile 2.
Yeah, I mean, I get what you're saying, but there's also this idea. I mean, I make most of my money in 1 or 2 months of the year, and that's when I see an opportunity, and I go in, you know, deep on that trade. Last year, I scaled one of my funded accounts by basically going, you know, making 5 or 6% profit on the account just on gold on one trade, and that happened in November last year. So I made almost all of my money last year was made on 2 or 3 trades in November on gold. And I think when that happened, I kind of became complacent and was just happy with that. But I forgot about forgot that the idea on gold was still very relevant, and I should have entered with more risk. So I took one trade, for example. I took a trade on gold. This one where I think it was this one right here, but I entered this one with low risk. Now, what I should have done here was to go in heavily on gold once again, you know, 1 to 2%, maybe even 2% risk on this one, and I would have scaled my account once again. Same thing happening here. Once we had that rejection or that reaction right here, I should have gone in, you know, with heavy risk here as well, because I'm happy with losing, you know, because it's just going to be, I'm going to have big winners until the trend reverses. The trend has not reversed on gold. So there has been multiple opportunities for me to scale my funded account. I would probably be at, you know, almost probably around $1 million in funding capital if I just took these 3 trades. And that, to me, I feel like I'm a little bit too risk averse, you know. Maybe I'm getting a little bit too comfortable, you know. Sometimes I need to figure out where's my edge. When that edge is 100% non-negotiable right there, I need to go in heavily, like 1 to 2% risk. And to me, that's heavy. You know, I usually risk 0.25%. But if I go in with 2%, it happens a couple of times a year. And I need to be more mindful of that. So looking at gold right now, I think, you know, obviously gold is rallying because we have the whole situation with the world just being crazy. Then we got, Venezuela. We had the Iran tensions, domestic uprising type of situation in Iran. And now we get Greenland and new tariff threats. So what I'm thinking is, what's the next step for gold? What's the next big thing for gold? And what I'm thinking is the situation is going to calm down. After Davos, I believe, Trump is going to go out. He's going to talk with everyone. Most likely what I think will happen is, Trump is the type of person that gives an extreme idea in negotiations, and then you will settle for way less, but it's still, pretty extreme.
So more than they were. Yeah, exactly.
Exactly. The taco trade, Trump always chickens out, right? And I think that's what's going to happen here as well. So when that happens, gold is going to pull down. Everyone's going to be like, oh, it's over. And that's when I want to be entering gold. So once the situation stabilizes, once we are in a risk-on environment once again, we see stocks and equities move higher, gold move lower, and everyone's like, oh, the world is a safe place now. That's when I want to start buying gold again, because it's just a matter of time before Trump does something else, or the situation in Iran gets worse. There is rumors of the US going into Iran or attacking Iran in any way. That will cause gold to fly. If I can get into gold before the escalations happen, that's one of those once in a year trade for me, and I'm looking to take my account, scale it on that trade.
Yeah, nice. I agree with you. I think it would be super nice if I can find the trade opportunity I want and be able to just confidently enter in with a little bit more risk, knowing that I can trust the process. So like on my other accounts, and like it started, like I mentioned this at the beginning of January, like my sort of New Year's resolution sort of thing was to be able to trust my judgment and understand, because on stream I'm like, yeah, cool, this is a really nice opportunity, realizing it's an A+ setup, but maybe not giving it the respect it deserves. Going in with quarter, maybe 0.5% max, going in, taking out at maybe like 1-to-1 or just under a 1-to-1, but that's starting to happen off stream as well, and it's starting to impact my trading in a negative, where I'm starting to look at A+ setups and go, yeah, this is pretty cool, enter, take out just under 1-to-1 R, or maybe on a 1-to-1 R, thinking like, okay, $500, that's great, $400, that's great, instead of looking at it and thinking, right, okay, I'm going to go for a 2R here, and I should be taking 2% return, or maybe a minimum of a 1% return. And I think that's what I need to start understanding and looking at myself and saying, well, look, hang on a minute, do this on stream as well as off stream, and don't hold to a full return on stream, and then you'll be able to hold to a full return off stream, instead of taking out quick on stream and taking out quick off stream. So I think I've got to have a little bit more confidence in understanding and remembering that I've got a profitable edge here.
Yeah, exactly. You have to, like I said, respect. I mean, you've done a lot of work to find that edge, and then of course, when the edge appears, you have to respect all the time and all the effort that you put in developing that edge. But it's very easy for us to. I mean, I think one of my biggest problems in trading right now, at least, and I do think we go through different cycles where we have different problems at different stages in the career and wherever we are in that cycle. And I feel like right now, maybe one of my only issues that I have in trading, and that has stuck with me ever since the beginning, is a fear of losing too big, which is not necessarily a bad thing. It's I'm mindful of making sure that I'm risking not too much, but sometimes I'm risking too little on trades that has very high probability of success, and I'm risking the same amount on trades that have way less probability. So what I want to do is just remove the trades that have less probability, focus on the trades that have high probability, and increase risk a little bit, because I know I can, because the max drawdown will not be as severe if I only focus on the best trades. But it's difficult. It's, you know, when
Do you grade your trade?
No, I never do that. I have, my philosophy is that if a trade isn't 100% perfect, it's not a good trade. So if you have a grade where it's like A, B, C, yeah, I mean, if you have like an A setup, A plus setup, it's like, why would you take the A setup? Why not just focus on the A plus and then risk a little bit more?
Yeah, true. I suppose. Yeah, there is that. Yeah.
Because in the live streams we do live trading a lot, and you know, sometimes we're live trading on like a demo account, sometimes we're on the real account. But you can listen to people when they're live trading, and when they say things like, I'm not really sure about this trade, but I'll take it anyway. You know what? I'll try this. It's like, that's a good sign that you shouldn't take that trade. You should
true.
Only take yeah, I mean, you should only take the trades where it's like you just, like, there's no hesitation, there's no internal blockage. There's just, you just take the trade because that's what you're supposed to do. And when you feel like it's effortless, that's the right type of trade.
Yeah, no, I suppose. Yeah, there is that, because like I will look at an A plus setup and I'll be like, yeah, boom, A plus setup. I'm gonna risk 0.5% to 1% on this trade. Whereas if I see an A setup, which maybe, and like what I mean by an A and an A plus isn't that it's less valid. It means that maybe I'm missing a certain confluence. Like maybe I want to see 4 confluences, but instead I got 3. Everything else is perfect. It all lines up. It's a trade that I would take, you know, every single day and twice on a Sunday. Maybe it's a case of I'm just missing one confluence. So it's like, okay, look, it's still the highest possible probability, but there's that little bit less chance because maybe the candle's not as strong as it could be. Maybe it's not tapped into the fib as much as I want it to. Maybe it's not quite flowing on the lower time frame as it is on the higher time frame. Maybe there's just a slight consolidation discrepancy, and that's usually where I'll be like, okay, look, it's still an extremely valid trade, but I'm just gonna grade it a B. And the reason I'm gonna grade it a B is because I'm not gonna put as much risk on it. It's still a very high probable trade, but it's my opportunity to identify that I can reduce the risk. I think that's that's why I look at grading trades. But at the same time, you know, like you said, if you're not 100% guaranteed willing to put a full risk on it, and it's not an A+++ super duper setup, why would you take it?
Yeah, but there's also this argument that you have. I mean, if you grade your setups, then if you have 3 types of grades, let's say you have A, B, C, with A being the best one, then I mean, if you look at statistically, if you look at the numbers of the system, you want to have different risks for different systems based on their max drawdown. So if you have, for example, a trade setup where you know that statistically, looking at the back testing data and the forward testing data, this system can have a drawdown of 20R, right? So you know that you have to adjust risk to 20R to make sure that you're not losing the account when you hit 20R drawdown. And then you have another system that has maybe minus 10R drawdown, which means you can have double the risk on that one. And I think that would be the proper way of grading the setups, to actually know, okay, this setup right here has a statistical probability of having 20R drawdown, therefore the risk is going to be this amount. So there's definitely logic behind grading the setups and using different risks for different grading. That makes a lot of sense, but it's very difficult to have, you know, multiple strategies running parallel and know the statistics of those.
Yeah, no, exactly. Just have a quick question here. Well, first, before I go into answer that question, I am going to drop back a little bit to Keegan's comment saying you are correct. I believe, Keegan, tell me if I'm wrong, this is regarding to this gold trade here. So big congratulations to you, Keegan, on the 5-minute on this gold trade. Hopefully you've either taken profit, got paid out, or maybe that you're close to a TV. Let us know on how that trade is going. But big congratulations on a very nice trade on the 5 minute. So just want to shout out to that one there. Well done, mate. Also got a question over here regarding your indicators, I believe, Jonathan, from 0, 12, 16. Can you please show what indicators you are using?
So I'm not really using a lot of indicators in my trading. I do have. It depends on what I'm trading, but there's a very specific system that I trade from time to time, and that involves having two exponential moving average. So that would be the 20 exponential moving average, which is this one right here, and then it would also be the 50 exponential moving average. And I like having two different moving average of different length, because it tells you if the slower one is above the if the faster one is above the slower one, then you know that the current price is on average, higher than price previously. So it means that you're in a trending environment. It's just a very, very simple way of looking at the trend. And then the nice thing about this is a lot of times the area between the 20 and the 50 EMA kind of acts like a dynamic support and resistance. So usually what I call is this area here would be like a cloud. If you have an indicator, you would know what I mean, where a lot of indicators, they fill this gap in with colors. Like, for example, I have my indicator where I've connected all of this. Let's see, there's a lot of indicators on here. I just have to find the one. So this one right here. So let me, it didn't get added. Let me add it. Then you will see that. So this is basically an indicator that I've coded to have my whole system like an all-in-one indicator, right? So what you see right here is the blue 20 EMA, and then the gray 50 EMA, and then you have that cloud that I talked about. So the cloud between those two acts as a dynamic support and resistance, because it's it's about the mean price. This is the historic price of Euro NCD. When Euro NCD deviates too much from the historic price, it tends to return back to the mean, which is this area, and then back down here, which is this area. What I do with this is I look for buying opportunities once we are in an uptrend and we're getting a pullback inside this cloud. I'm looking for buying opportunities. And here you can see this is a long signal. The only reason why I have coded signals into this is just to be able to give me alerts on trades that might be interesting. And it's based on very simple things here. And this is, you can do this without the indicators. You can add all the individual indicators to your chart. You don't have to have this indicator, but I've just combined all in one. So you add the 20 and the 50 EMA, and then on a pullback, you add the Fibonacci retracement area, and you want the area between the 0.618 and the 0.786. And then you want price to hit the fib area while it's inside the cloud. And then you want a bullish engulfing candle right here. And then you want stochastics RSI as well. So go in here and we add stochastics RSI. You want the stochastics RSI to be below 30. 30 is right here. When you get price coming into the reload zone, into the cloud, in an uptrend, while stochastics is below 30, and you're then getting a bullish engulfing candle, this will trigger a setup to me. So that's a very specific strategy that I'm using. I'm not using it much actively right now because I'm more focused on swing trading, and this is more of a intraday type of trading strategy. But it's just a very simple approach of using indicators and just combining different indicators to find confidence. So yeah, that's the main indicators that I'm using. But other than that, I use a lot of different indicators because I'm doing not just trading, I'm doing a lot of market analysis as well. That's not necessarily active trading, and for that I will be using a bunch of different indicators to find the signals.
Yeah, nice. I tend not to use indicators unless I'm. If I just bring up my chart real quick, so as you can see, like unless I'm bringing my trading view up, you'll see a little bit more on my trading view. Where I'll very much like Jonathan, I'll use my moving averages. I'm very much a naked price action trader, and I love to make the joke. No, I'm not actually sitting here in my birthday suit. I mean the trading charts. So the charts are completely naked. And
Wait,
what I mean,
birthday? It's not your birthday, is it?
no, it's not my birthday.
Okay. Yeah. It probably means something different. I don't know. I have no idea.
Your birthday suit. You're naked. Your birthday suit means you're not wearing anything. It's the suit that you wear on your birthday.
Okay. Right. That was funny. I love it. All right. Yeah, you're not naked either. Okay.
I'm not naked. No, I'm wearing clothes. All right. Oh my god. Oh man, I'm moving off that. So yeah, what I mean by that is just drawings. So I don't use indicators. It is solely drawings, and like all things, trend lines. More times than not, though, I don't use trend lines for the stereotype that trend lines are. You'll not often see me draw a trend line the way they should be used. So a trend line is usually to identify trend, hence it's in the name, trend line. And then people will look at tap, like 1 tap, 2 tap, 3 tap, 4 tap, and respecting a trend line. And then maybe if it breaks and closes under, maybe if it wicks it, there's lots of ways to use a trend line. However, for me, this is how I use my trend lines. They are horizontal lines that I use to mark out my highs, my previous high, my previous low. If you guys want to, you can dive back into yesterday, where I actually did a little bit of a breakdown on how I use my trend lines and how I mark up my sort of highs and lows, internal price, external price, and order flow. I did that yesterday on the live stream, but you can see a little bit on GU as well. I think I did it. I think it was GU I did it on. Yes, it was. There we go. So these were the see if I can. In fact, can I put a horizontal line on just so I drop down to the 5 minute and just scroll across until I see it? Is this it? You just hate that when you lose price. There we go. There it is. Cool. So this was what I marked out.
Yes. Sorry to interrupt, but just a tip: when you if you don't want to lose where you are, use the replay tool and then place the replay tool just a little bit forward from where you are on the chart. And then when you change time. Oh, you're a MetaTrader. Okay, sorry. No.
yeah. I was going to say, no way can I do that on MetaTrader.
Yeah, no.
Yeah, that's why I love TradingView. I do love TradingView, but because my Wi-Fi's been a bit iffy, I've made my MetaTrader look like my TradingView, and I'm just trading on that now, because my Wi-Fi seems to like MetaTrader. So
right, yeah, TradingView is it's obviously there's much more things going on.
Yeah, I was gonna say, I think it's more demanding on the Wi-Fi. It's like TradingView. I love it. I really recommend it. It's a great tool for analytics. And sometimes, like if you're on a personal broker, you can actually trade on TradingView and actually execute orders. I couldn't think of anything worse personally, but I've grown up learning to trade, or I say I've grown up. Like the start of my journey, TradingView is just for analytics. I couldn't trust myself to place on it and execute. However, MT, I can do everything. That's why my heart belongs to MetaTrader. So this was what I was looking at, and like I said yesterday's live stream, I did actually break down the highs, the lows, internal structure, and why I don't like it. But nonetheless, we can see that this was what I marked out yesterday, where I wanted to see a break and close above this zone, a pullback and a continuation. Or if I wanted to be trading to the sell side or to the bear side, I wanted to see a break under this low, pullback, a continuation to further break this low here, which was my swing low. and then I want to see a pullback continuation entry on either here or here. So turns out there was a lot more opportunity for buying pressure. Now we got the break and close above, not so much here. I mean, if you wanted to high risk it, and this is where your ABC setups come, if you really wanted to high risk it, which I personally wouldn't have, nor would I recommend, we could have been trading around here. Now, I wouldn't have wanted to do that, so therefore I wouldn't have traded this. All this would have been invalid for me. I probably would have waited for a pullback maybe around here. Now, this is clearly news because not often do you see genuine price action look like this. So this is clearly news. Maybe entry around here would have been pretty cool for some buy opportunities. So that's what I would have been looking at on GBP USD. Same goes on gold, and that's how I use the charts. You know, I don't like indicators, I don't like trend lines, I just like tools, horizontal lines, and order flow. However, if I was going to use trend lines, I'd move up onto the 4-hour, go over to one of my swing trade pairs like US30, and that's where I would have been trading here. Or no, I'd still be in this trade. No, I wouldn't have. I would have. Nah, maybe I would have cut out here. For still, nonetheless, still I would have cut out for some profit, which is pretty cool. But what I like to see is a tap of the moving average. I like to see a break and close above or below. Preferably when I'm trading indices, I like to be buying them. So NASDAQ, US30, I am testing them on the S&P. But I haven't traded it with the S&P yet. I want to see a break and close above the 200 EMA. That is the only confidence I use. That is the only trade indicator that I use. Now, this would have been a beautiful area. Marked up the consolidation on the 4-hour, break and close above the 200 EMA, and then trade the close or the open of the new candle. So this candle here. Don't know why I didn't take this trade. Really not sure why at all. Maybe I was, I don't know, maybe was this the time when I was moving? I don't know. No, it wouldn't have been because this was back in January, back in December. I don't know. But either way, there's a potential setup coming now for me on US30. Actually, you know what? There is a setup for me on US30, and I'm actually going to go ahead and take this. So let's go ahead and bring this up. I'm going to put a 1 lot on, and I'm going to buy. And then what I'm going to do is I'm going to drag my stop loss to 0.5% just down here. Now what I'm going to do is look at my 200 moving average, and I'm going to, if it breaks and closes under the 200 moving average, which is pretty likely, if it does that, then I'm going to close out on the trade because that is what I want. That's one of my confluences. I'm not going to go too in depth on my confluences and how I trade this because it's still a very new strategy to me, and I don't want you guys saying, oh my god, Will's got the holy grail of strategies, and then you end up copying it. Do not copy my strategy because this is still like, it's like 90% done in testing stages, but it's entered the live stage. Hence why I'm happy to show you guys on stream. So $4 up at the moment. That's my entry criteria on my swing trading strategy, which is US30. Other than that, I don't trade any other indicators. Let's go back down to 15-minute on gold. Catch price up. There we go. So that is now my first swing trading strategy of swing trade of 2026. Let's see how it goes. My first intraday trade was a loss, probably a little bit too more of a loss than I wanted it to be. But yeah, here's my trade. So there we go. That's my. Let's see how that can go. I'll probably update you guys now over the next couple of days, depending on how it goes. I'd like to see a fill of this gap as well. That would be really nice. You know, we've got a lot going on around these highs here, which is a little bit motivating because there's a lot of potential orders above it, so therefore liquidity, but at the same time it's a little bit worrying how we couldn't break and close above it. However, what is very yummy, what is very nice and motivating, is that we have got a beautiful 4-hour gap here, which in my opinion must be filled. No, why? hate it when it does that. No! Come back here. Oh, you know what? Screw it. There it is. Staying like that. There we go. So if that does fill, then we're going to be looking at about $600. Otherwise, if we can get a break of the highs, it's going to be about $1,100. However, because my strategy on my swing doesn't actually require a stop loss, I'm going to move it up to a minimum. What have I got to get to break even? 1,800, let's call it. So I'm going to move it to 1,900. Screw it. You know what? No, I'm going to move it to 2,000. There we go. So this is $2,000 TP. This would be a 1 to 4 R trade. Whether it gets to it, I'm not sure. But like I said, my entry criteria and exit criteria requires an entry, a stop loss, but no take profit. So therefore, what I like to do is put a just in case take profit. So what that means is if it just rockets up, then it's like, oh, yay, I'm now in TP. I've now been taken out. However, I will be managing this, setting alerts on my trading view, which does come through on my phone, and then I will manage over the course of the next couple of hours / days. Let's have a bit of a catch up with Chatteroony. Let's see what else everyone else is saying. Keegan, sorry, thank you. William, still in close to TP, aiming for 4,750. Big congratulations to you, Keegan. Hopefully that you can smash through that TP. Online Coaching TV said, I'm in my second evaluation phase, made 75 and lost everything today, trying to make it back some part with Bitcoin retracement. Big good luck to you, my friend. Hopefully that you can make it back. Just make sure to remember risk management.
I would say do not trade Bitcoin with the fibers. Honestly, I think I mean, at the fibers, we're all about transparency and helping you guys out. The conditions for trading Bitcoin and crypto is not the best with prop firms. I would recommend you stay with Forex. Then, if you want to trade Bitcoin and things like that, you maybe not do that on a prop firm because you know the spreads and the commissions. I believe you need to have a very good edge and make a lot of money on the setup to actually that to be worth it. So yeah,
truth be, this is me speaking as personally as a trader. So like, you know, those who love crypto, especially leveraged crypto, feel free to drop in chat saying, Will, shut up. But me personally, if you're going to trade crypto, especially Bitcoin, don't leverage. You know, trade it through a broker where maybe there's very low, like 1 to 5 leverage or 1 to 2 leverage, but don't trade outside of the money you have. Excuse me. Yeah, don't trade outside of the leverage that you already have. You know, I've seen way too many traders really get shafted when it comes to leverage. I've watched traders go into unbearable debt and just get ruined by leverage trading with crypto coins. So just be very careful. And yes, just stick to the cool stuff like indices, commodities, and Forex. If it's open on a weekend, don't trade it ever.
Well, interestingly enough, NASDAQ isn't NASDAQ going to be in April 24/5 trading now? So yeah, and I think they're using tokenization and crypto blockchain technology to enable that. So that's interesting. Unbiased Trader says only thing, leverage on Bitcoin. I don't know what the leverage is on Bitcoin, if I'm going to be honest, but yeah, it can be definitely limiting. It's not like, you know, I remember other crypto exchanges back in the day. We had 1,000 times leverage easily. That was
especially like Litecoins, or not Litecoins, like meme coins. Dude, some of the leverage I've seen on meme coins is embarrassing. Like it's savage.
We have a question here saying, Jonathan, I'm on the fibers 100K first phase. I made 6.5K, and then December came, and I am now at 1.8K. I only risk 0.5%. How to bounce back I feel low. So when you feel low, you're not supposed to be trading. You're supposed to be trading from a flow state of mind, and you're never going to be able to function um, from inside that flow state of mind. You have to function from a probabilistic mindset, and um, you have to be positive, maybe slightly neutral, for that to be possible. If you're feeling down, you're feeling low, you're getting a lot of negative thoughts around your your success and your process as a trader, then you're no longer thinking in probabilities, and that's crucial for you to be able to execute your edge. So I would recommend that you take a break. For most people, probably a week, and for some people, it needs to be a longer break. I took a break from trading, I think 8 months, when that was after having a very long drawdown. And I lost an account, and I basically said, "Okay, I'm just giving up. I'm gonna leave trading." And I took an eight month long break, maybe six to 8 months or so. It came back, and I've never traded this well ever in my career. And I think taking that break made me forgot about trading, forgot about everything I knew about trading, and then I started fresh with a completely new approach. And I think sometimes that's very important. If you have a system that you're trading right now, and you're down more than what you've seen statistically is possible for your system, then you have to think about two things. Are you in a drawdown because of you making mental errors, which is 90% of the case, or is the system just losing its profitability? And I think it's important to remember that 9 out of 10 times you'll be in a drawdown because you're making mental errors. And for that to be resolved, you need to take a break. You need to reset your psychology and get back into the right state of mind before you take another trade. Otherwise, it's just going to be this negative spiral where you're feeling low because you're in the drawdown. You're taking a trade and you're in the wrong state of mind. It's going to be a loser. You're deeper into drawdown. You're feeling worse. And you're going to take another trade to feel better, which leads to more drawdown. And you're going to feel even more worse. Eventually, you lose the account, and you'll ask yourself why you didn't take the advice to take a break. So what I want you to do now is just do not trade today, do not trade tomorrow, do not trade for the rest of the week, okay? Because you're going to lose money. You're going to get deeper into drawdown. You're going to lose the account if you continue, most likely. And you, like you're saying right here, I don't know why. Well, figure out why before you take another trade. If you can't figure out why, then you're just gambling, okay? And you don't want to be gambling. That's how you lose your account. So take a break, read Trading in the Zone. Maybe read the whole book before you take a next trade. It's not a game, We're not doing this because we think it's fun. We're not doing this as a hobby. We're professionals, and we're supposed to be acting as professionals. We're not going to the casino whenever we open the MetaTrader app. We are coming to work, and we're expected to work as professionals. So that's my recommendations. Take it seriously and take a break.
Literally that. Like, I couldn't have said it better myself. It's so many people will come on and think that trading is a game and a side hustle. It is not. Like, guys, this is our career. This is our lifestyle. This is our life. Like, if I couldn't trade, if I failed at trading now, that's me done. That's me screwed. Like, I'm in big trouble. Like, what are you? How are you guys gonna feel if you get sacked from your job? That's how we'd feel if we stopped being able to trade. Like, yeah, we may come on with a great personality, we may come on as fantastic streamers and entertainers, but behind the scenes, we have taken a lot of time and effort, a lot of stress, a lot of sweat, and a lot of tears and trying to get our heads wrapped around the market. I've taken months out of trading. Hell, I took years. I think my longest gap between trading is 1.5 years, where I had to stop trading because my mind was frazzled, and I thought, bro, I can't do that. And it wasn't until a friend said to me, Will, get your ass back into gear, otherwise you're not going to be able to get back in at all. You know, if you spend too long out, you're not going to get back in. I did. I got back in, and I just took it slowly, and I managed to get back into the flow of it. But this is our job. This is our career. We're very serious and very passionate about it. We just know, because we've managed to get past that barrier, we're now profitable. We're now able to have a bit of fun. You know, it's not fun when you're learning. It shouldn't be fun. You shouldn't have a smile on your face. If you're not crying yourself to sleep and worried about whether your next trade's going to hit TP or not, then you're not learning. You're not in trading. You know, you need to be stressed. You need to be upset. You need to be confused. You need to be stressed. You need to be all the emotions under the sun. You need to be a train wreck, because once you're profitable, it will feel so much better. And then you can join us here at the Fivers on live stream maybe one day, and have fun with us and chat with us. And like you guys in chat already, there's some of you in chat now who are full-time traders who have banter and chat and joke around with us, because you know that it does work and it does pay off, and you can enjoy it and have a bit of fun and be a fun personality. But until then, you know, until you're profitable, get your head in the game.
Yeah, definitely. So I'm gonna have to jump off. We do have Pedro in the background, and welcome, Pedro, and I will see you guys later. Take care, everyone.
Thank you, Jonathan.
Thank you very much for joining, my friend.
I was just
How are you doing, Pedro?
I'm good, man. I was just listening to both of you on the background, which is actually an important topic. Yeah, it's just an important topic. I'll just add one thing. Actually, last week we did on the Portuguese channel, we kind of did a path or journey of a trader, kind of how to progress within trading, and basically kind of separated in 4 phases, which initially we did it on a time zone, kind of 0 to 1 years, 1 to 2, 2 to 5, and 5+ years into trading. But then of course it depends on each trader. Some may take longer in each phase. Yeah, if someone is just in early stages, and one of the mistakes that I was trying to demonstrate on that when you did that lesson, that live stream, is that unfortunately there are many traders that are on phase 1 or phase 2 and they are thinking about phase 3 and phase 4. So they're not focused on what they should be doing to kind of progress on that step, and they're already thinking ahead on how to make money, how to become a full-time trader, how to quit their job and whatever. So basically what I want to say is like, if someone is still kind of in early stages, 1 year, maybe 2 years even, as you're mentioning, maybe the trading shouldn't be fun in that moment. I'll just tweet a little bit. I think one of the reasons why trading may not be fun is because they have the wrong expectations of what they should be doing and how they are approaching it completely.
Yeah, exactly.
If they kind of put in their minds that yes, the first year I shouldn't even be considering about being profitable. I'm just going to spend as many hours as I can in front of the charts, try to learn as much as possible, being curious, and kind of just try to focus a bit more on the process and kind of those small details, and don't think for even one moment about the outcome. I think the person is going to be a bit more, I'll take it a bit more with a happy face and smiley than facing trading with such stress and discomfort and anger, because they are not achieving the results that they want. The results will come afterwards, but that's the problem. Is kind of people are on phase 1, they're already like, you are still learning how to just even crawl, and you already want to jump 3 meters ahead of you. That's the wrong process all the time, and that's where the missed frustration comes in.
Yeah, 100%. I think when you're not managing expectations as you should, it can be quite difficult. And look, it's going to be difficult, trying to teach someone to understand the process and forget about the money. We had comments yesterday saying, you can't take percentage gain to the groceries shop. You know, you can't take futuristic expectations. You can't take the process down to the shops and buy, you know, your week's groceries with it. Of course, but that's, you know, you shouldn't be at this, you know, when you're learning, you shouldn't be at the stage where you're having to take trading profits to the groceries. You know, you shouldn't have to take that to the shops. What you want to be doing is waiting and focusing on the process while maybe your permanent or your full-time job or your main income is currently substituting that, and that's paying for your groceries, that's paying for your lifestyle. And then the trading is a process. It's like being at university, guys. You know, you're not gonna go to university and goes, well, I can't pay the bills with learning how to do a degree. It's like, no, I know, that's why you're there. You're getting a degree so you can have a better life in the future. Those who come into Forex trading or any form of trading thinking to themselves, yeah, absolutely, this is brilliant, I'm going to go straight into it and I'm going to earn lots and lots of money, there's a good chance you're going to get stung. Whereas those people who go into it and think, I'm building this now for a better future later, those are usually the people that are going to do well in the trading. But anyway, I'm going to have to shoot off now because I got to venture to the shops before they close. So guys, thank you very much. Pedro, I shall see your handsome face again. Have a fantastic stream, guys. And I shall see you a little bit later on. But guys, everyone in chat, thank you very much for joining me on this morning's open. And I shall see you a little bit later on at 11 a.m. 11 a.m. 11:30 a.m. UK time. I'm still losing track of UK times. So guys, yeah, thank you very much, and I shall see you in about an hour's time. In the meantime, make sure you smash out that thumbs up and stick around for the awesome wisdom that Pedro is going to be dropping on you guys.
Thank you. Thank you, Will. I'll see you in a bit. Thank you. Okay, good morning, everyone. So you already know, just share in the chat whatever asset you want us to look at. I'm going to update a little bit my views as well, looking at what's just happened in the last 2 days, which as we can see, there was a little bit of movement both on the indices, both on the dollar, the yen pairs as well. So I'm going to be doing a little bit of my analysis. But yeah, just let me know on the chat which assets you are looking for, but try to be a bit more specific, as I always ask. So don't just tell me I'm looking for buys or shorts on gold, for example. Try to go into, okay, which time frame are you looking for? If you want even to be specific on the levels, that would be great, so I can be a little bit more precise on the analysis that I'm going to do to kind of to your request. There was a question here from Gabi Jad. That's a long name, my friend. Sorry if I cannot. I'm the worst person to pronounce names, so I'll just say it, Gabi. Okay, so how long has it been since you become a successful trader? It's been a long time. So it took me kind of around close to 4 years to kind of see the consistency of getting it there. Before that, it was a lot of frustration, changing strategy, learning a new approach, which is kind of more into naked charts. Before I was using a bit more of a systematic approach. So then I went into more of a discretionary trading, looking at the support resistance, naked charts, price action, and so on. And it took me a while, a lot of hours in front of the chart to kind of make my head to understand what I was seeing, but it was with time. So it took close to 4 years until I got to that stage. And even then, there was kind of still ups and downs and kind of different phases that I went through. Until I get where I am right now. Okay, what's up, Luis? Welcome. All right, cheers, Steven. So we have, first and foremost, we have Eric also asking is the euro bull. So basically, we are looking for longs on the euro dollar. Is that your request? If yes, just let me know a little bit more in terms of which levels are you looking for and what time frame you are looking. Definitely that today we have seen, and even from yesterday, we have seen a strong push to the upside on the euro. Was that expected? Maybe yes. Okay, I think if you actually follow last week's live stream, there was certain level, especially with the Euro Index, that I was looking for potential price to get to and eventually turn, which was exactly this line. We got there and we start seeing bullish momentum. Then eventually I was still trying to see if price eventually comes down here, but for now I was looking initially for price to at least fill this range in here, and then we could find that reversal. We had it, and I'm going to be curious eventually how the Euro Index may react closer to this level to see if we're going to eventually have more continuation. But this is a good move to the upside, so we'll see how the Euro Index eventually is going to react somewhere close to this level or even in there. But let me know a little bit more in detail, so that would be great. DAX, don't even talk me about DAX. DAX 1 to 5 minutes. Which direction, Mixay? What are you looking at? Are you looking for long, shorts? What are you looking at? Because definitely the US indices and the indices in general today, as you can see in here, they're all negative. Okay, so basically the market opened quite negative. We talked about that last week with LJ. Actually, it was 1 week ago on Tuesday's live stream when we actually had the CPI, the US CPI that was about to come out. We mentioned that the market, it looks like a little bit quiet in terms of the data itself, in terms of NFP, CPI, and so on. It looked like the market was quiet and the Fed had a clear path of what to expect for the next interest rate. And the risks at this point, or the volatility, it will be more towards what Trump will do based on not just tariffs. Of course, he uses always tariffs in terms of kind of a negotiation approach. However, it was more towards what would be the next kind of invasion, the same way that they did into Venezuela. Then there was the talks about Greenland, correct? So that was where the risk would appear, and that's exactly what happened. Okay, so again, the market will never be quiet for that long. There's going to be always events that are going to create volatility, and those can be almost forced or created by economical situations, geopolitical situations, and whatnot. In this case, it's Trump and his attempt to get agreement from Europe, basically. So we are in this situation where a lot of volatility and US indices are reacting to it as well. The dollar is reacting, the euro is reacting, and so on. If you want to be a bit more specific also, if you're looking for shorts or not on the DAX, that would be great, because you can definitely take a look at that. Okay, there was eventually a big sell-off on the DAX. There was maybe a potential opportunity to sell it. I did got I did got a beautiful stop loss in this move. In here, so look at this. Look at this short. Kind of short it somewhere in there, and I got really stopped out in here. And I was looking already for price to twist to make this move with the potential, but this is the FTSE 100. Okay, so I kind of like the fact that price was starting to already to break these lows. This was last Tuesday or Friday. Price was basically starting to break in here. It kind of left a little bit of this supply. Initially, price was reacting in my direction, but there you go. One last fake out that took me out. There was maybe still an opportunity to enter straight away in there, but then I was not really paying attention in that moment. I just placed my order and moved on. And there you go. And then this is Monday already with this big move. That was one of the first trades I took this year, which was a loss exactly in that moment. And there was the possibility for price actually to extend more. And there was another attempt that I did on the S&P exactly there, and I missed my entry by a fraction of a point. Yes, initially when I saw it, I actually thought I was in the trade, and then I realized that I was not in the trade when I saw price reacting from here. So I missed my entry by a fraction. I did place a sell limit in there, and I was looking exactly for price to continue to move to the downside. I did mention last week that we had managed to take slightly this low. This for me was kind of opening the door for price to go further down. We also had managed to break this big upper trend line that we had, and the approach in general was good. I like that price kind of spend a lot of time within this range before going there, and we had this clear a little bit of a fair value gap in there. Again, by a fraction of a pip, price didn't react. It was also a shape of a Quasimodo pattern that we had in here. So yeah, that was me from last week. I did miss this wow, this beautiful trade, and that there is a potential of price actually continue to move to the downside even more. So we'll see. We had Zed asking for euro pound and dollar yen right now. Okay, again, if you want to pay attention just for the direction, that would be ideal. I haven't looked at euro pound for a while. What is euro pound doing? Okay, so euro pound, yes, it's moving to the downside all the way since November. Where is price reacting from? Just let me take a look into this higher time frame. Price actually is reacting from an interesting level. So basically you had this big move to downside from here. Price now retesting, and this was a valid supply, one of the last fresh ones within this level, and that's where price reacted. That's good. And since then, if you even look at some kind of symmetry, price already went there, so maybe we can even go a little bit closer to this one as well. But in my opinion, I think there's still a potential chance for this move to continue to move a little bit more to downside, maybe closer to this area. We did manage to continue to break now this next structure around here. So I think euro pound could eventually continue to push a little bit lower, even though if it is in this type of rangy stairway kind of a move, up down, up down, up down. It can range for a while. You already know how euro pound tends to move, not always in a straight line. Sometimes it's going to be bouncing around. Reasons for also this move to the upside on the euro. So we also had on the euro pound, I mean, again, we had this strong push to the upside on the euro index. So that also helps eventually for the euro pound to move a little bit more to the upside. If the euro index actually is about to potentially move to the downside from here, or to find some selling pressure from around this level, maybe we can see a little bit of that selling pressure also appearing on the euro pound. What also we had today, I think we also had unemployment in the UK. So we did have unemployment in the UK, which is starting to not show, it's not looking pretty. I think there was underlying data that we could see is that companies are not really hiring that much at this point. And unemployment is also slightly increasing. In terms of numbers, not in terms of percentage, just still at 5.1%, but I think there could see some information that companies are not really hiring that much, so it may be starting to be difficult to find new jobs in the UK, and that can eventually lead into the Bank of England to have an extra rate cut to eventually to boost a little bit the economy, and that eventually could even send a little bit up the pound to the downside. We'll see. But let's just go back to euro pound. Sorry, euro pound. Key levels in here. Price is now approaching back into this structure, somewhere around this level. Maybe this is still a valid supply zone where price may be reacting. We'll see. Okay, I think price may have already made a good move to the downside. So maybe instead of trying to look for a selling there, maybe we could try to look for price maybe to go a little bit higher before seeing a little bit more data or price action confirmation that price actually wants to go back into reversing. We did manage to break below this low, but then we just respected it straight away, kind of starting to create in here a double bottom or even triple bottom at around this level. And this may be sometimes this may look like a little bit of more of accumulation for price to go higher before eventually can continue to move lower. We do have this trend line that has been created around this level, so maybe that's a zone as well where price could react from. So yeah, I wouldn't really be that interested in looking for euro pound trades at this point, not on my radar. But if you're just looking into intraday, there you go. Maybe can bounce from this supply level all the way back into the next key structure, which is basically based for this top bottom. Basically, this demand zone, and we also have this previous level support resistance. So there you go. If there was a trade to take, maybe it could go from here to there, and whatever, this bouncing here, there's maybe a high probability that price could do that, and then you'll see price starts breaking above this level. Maybe there's a little bit more room to the upside, and from here maybe there is also a potential continuation upwards. So there you go. We have two ranges in here that you can be bouncing from and trade from. You're welcome. You're welcome. Euro dollar overview. Okay, we can take a look at that. One second. I can't. One second. Let me just read this comment here from Gabi. I hope you don't mind that I'm calling you Gabi. It just make it a little bit shorter and easier for me to pronounce it. So I hope that's okay. If not, I am sorry for just calling you Gabi. I can't count how many accounts I bought, but I keep losing due to daily loss. But yesterday I passed phase 1 and I'm in euphoria. Maybe I'll be lucky and be a funded trader. Gabi, can you read your sentence to yourself? So can you just read the sentence that you just wrote to us, or the comment that you just wrote to us? And can you see what is the problem or the red flags that you mentioned in your comment? Okay, so if you could, before I comment on your comment, just try to identify kind of what are potentially red flags on the way you are thinking and the way you are approaching or dealing with this situation that is just happening to you, and then I'll carry on answering or commenting on your comment. But first and foremost, congratulations on passing phase 1. Okay, but then try to identify what is the danger on the way you commented in here. Do you guys consider quarterly timing in your trading? You mean kind of literally 90 days, kind of a quarter, like having a 3 months candle stick? Is that what you mentioned, Peter? Because if that's what you mentioned, I don't really look at that. Okay, the maximum I have in here is the monthly time frame, which is something that I don't really look that often. Every now and then I may look at the monthly time frame, but it's not a time frame that I actually pay that much attention. Weekly, it's maybe a little bit something different. I may pay attention to some levels in there, but I do maybe spend more time potentially on dailies and then down. But weekly, sometimes I do kind of pay attention just to see where is the maybe beginning or the high or the low of those candles, maybe where we are or the structure that you are trading. Yeah, thank you. 1 second. 1 second, let me just think here. Something changed in me, and when I woke up in the morning, I realized that the market was moving the way I needed to, not the way I wanted to. Okay, the market was moving the way I needed to, not the way I wanted to. There's a lot of still needs and wants in there. Okay, 1 second. Let's just guys, I'm going to go back to your chart analysis. 1 second. Red flags: over trading and emotional trade when I have a minus day. No. That's not what I wanted to mention. Okay, so what I wanted to comment or for you to look at is this part. Okay, so 1 second. You just mentioned over trading and emotional trade. No, that's not. So you just said I can't count how many accounts I bought, which is okay. It could be or not a red flag, in the sense that if you are at least trying to learn from the mistakes you are making, okay, that could be kind of a lesson. If you are not even trying to learn from the mistakes you are making, that can be an issue. And if you just keep repeating the same behavior, expecting different results, kind of that's the definition of madness, correct? I think that's the one. But then you also say that you keep losing to daily loss. So automatically we can see that there is maybe a little bit of lack of discipline and rules on your plan, because to lose based on the daily loss, not even just by reaching the total drawdown, it looks like there is a little bit of lack of discipline on respecting the rules, which means that you are being too emotional, or you still don't have a proper system that is proper to trade at least the prop firms. Okay, so either reduce your risk management, find a way to actually implement some rules in there that tells you that if you do reach a certain level of drawdown in a day, or maybe if you lose 2 trades in a row or 3 trades, whatever that amount it is, you need to stop trading in that moment. Okay, and if you are definitely risking too much, just reduce the size and that's it. Secondly, then you're saying that you did pass your phase 1 yesterday and you are in euphoria. Okay, it's an understandable feeling for someone that passes for the first time, especially after losing so much. 1 second, where is the comment again? No, where is it? Okay, it's this one. which by the way, if you are in that state of euphoria, so basically it just went from, okay, so basically you would just let's pretend that, one second, let's pretend that this is kind of where your emotion should be, okay, kind of in the middle, and anything that is in here, this is a low, okay, low state, high state, okay. So it looks like that you are most of the time spending time in here, you spend little less time in here, and now you're already in here again. Okay, this should be your trading zone, okay, in terms of emotions. Okay, this is where you are emotionally stable, you are relaxed, focused, and being able to kind of make rational thoughts and decisions on what you are doing. This is kind of when you are in that revenge mode, kind of just risking way too much, over trading, having FOMOs and whatnot. And this is the euphoria when you are super excited, thinking that you are on top of the moon, and also like you're going to be making wrong decisions as well. It looks like that you may be spending a lot of time in between these two zones and not in the middle. So yes, if you are in here, that's maybe a moment to kind of slow down a little bit and maybe don't even trade. Try to come back, find ways to bring your emotions back into this level. Okay, whatever you need to do, find ways to come back into this middle range. And then the second or the last part that you mentioned is maybe I will be lucky to be a funded trader. So I'm using maybe, which it shouldn't really be a maybe, okay? Just try to find ways to have certainty a little bit on what you do, and the way you add certainty on what you are doing is by having a process that you trust and that you can follow to eventually get to the results that you want, okay? You don't really know when, but you know that it's going to happen, okay? It's not an if, it's going to be just a when. And the when is based on continue to do the process that you are doing. And then just to finalize, and then you even mentioned the word luck, okay? Of course, all of us in trading needs a little bit of luck. I just showed a trade that I literally got stopped out by the peep and then price reversed. Another one that I didn't get in the trade by a point as well, and price would reverse. Like, so I end up with a -1 in terms of risk reward. I could have ended up like with more than +10 in terms of risk reward in both trades, or even more. So I'm in a -1 situation where I could have had a +10. We can maybe consider a little bit of luck of me not getting into that trade, but that's kind of just sporadic situations. In general, you are going to have more control than you think in terms of actually the results if you are disciplined and you actually follow process. So words like similar to, so when you are using words as luck, maybe one day, it looks like it's a lot of uncertainty on your process, and that's why maybe there's no surprise that you actually are on this row of just losing accounts, because when you do then get the results and the outcome that you want, you don't even feel that you are worthy, okay? You feel like it's luck, that it's kind of a lottery situation that just give you this opportunity to pass phase 1 and maybe one day become funded. So you need to shift the way you're approaching trading completely, the way you're actually taking trading on a day-to-day basis, okay? Otherwise you are just carry on going to be in that cycle forever. Yeah, okay, let's just carry on. Yeah, let me know what you guys think as well on what I just said, and if you relate to it or if you completely disagree with me, feel free to share it as well. Hey mate, so we have Barsh in here. Hi mate, when the future will come to be part of the platform to trade? I think the futures are really close to be announced, okay? So there are steps by steps that you are doing in here, even in terms of, for example, we already have our own social media for the futures account. We already have our Discord for the futures program as well, and I think the program itself is going to be released quite soon, okay? I still don't have a date, but be sure that you are doing everything we can to, first of all, have everything ready to be a success and to actually be a program worth of trading for all of us, for all the traders of the Fivers, and secondly to again, believe me, many people are waiting for it, and they're doing the best we can and the quickest we can to release it for everyone. Okay, took the wrong entry on gold. I'm minus 3,200, but I'm keeping it open. Other block. Where is your exit? Do you have an exit that you have in mind, or you just are going to just now completely kind of swing around in terms of whatever, when to exit or not? If price goes much further down, or kind of if you get into much further drawdown, are you going to close it? What are you going to do with it? How are you going to manage your trade? So someone then asked about euro dollar. Okay, so before we go into euro dollar, I need to look at the dollar. I want to look at the dollar index first. So what do you have in here? Okay, as you can see, it was a massive move to downside. It continues to drop the dollar. Now, last week, as you know, we have been kind of looking for bullish momentum, or even the week before that, we were kind of looking for those longs. And this was actually one of the last supply levels that I had marked, if I'm not mistaken, that price could still react from. Initially, it could be a little bit of this one, but this was one of the last points, in my opinion, because actually this is the origin that managed to break below this structure. So usually these levels, they tend to be quite relevant because it's basically the kind of the decision point to actually manage to break this strong level of support, and a level that was left behind. These highs never really touched that supply level, and now price came back into the future and it actually reacted from it. If price had by any chance moved a little bit higher than this, I would expect eventually dollar index to continue to go higher, and maybe you're going to be retesting these levels in here. And then you can look a little bit at the approach as well. So we start to notice that price was struggling a little bit to go above this level, so creating a little bit of resistance, basically creating liquidity just above this level. And then you had one last push up, so just to collect all that liquidity. Price was also starting to have this beautiful trend line is here, kind of a compression move, and once price eventually starts breaking below the structure in here, I think then there was it's kind of, there is no surprise that price is just falling the way it is in here, or moving the way it is, because as you can see, every single, you can even go into the lower time frame. Okay, if you take in consideration every single demand that is being created on the way up, basically price has already retested it. Okay, this is basically one of the last ones, which was actually retested in here. So I have a demand zone in here, price comes back, retests it, comes back again, doesn't manage to break above, actually gets rejected, and then we open on Monday with the move to the downside on dollar. We finally break this low, and basically start opening the door for price to move to the downside. But if you start tracking every single demand, basically every single one of them had already been retested with the previous low, which means that everything in here has been taken, and price is just free to fall all the way, potentially until the next key zone, which may be around this low, somewhere in here on the dollar. Now the question could be, are we going to have a continuation to the downside, or is price going to respect this move in here? Something that I also mentioned even last week is that in my opinion this low was good because it closed the gap on the daily time frame, weekly time frame, to actually good level to at least have a bounce. But I was still not entirely sure if this would be the bottom, or if price still would have in the future the potential to go even further down, maybe a little bit closer to some kind of these lows in here. Okay, maybe around this level, because even though this is a good level, kind of a bit more in the middle, is not exactly the extreme of this move. The extreme could be a little bit further down. What I want to say with that is that if price by any chance does want to continue to move a little bit lower to the downside and gets closer to this level, I wouldn't be surprised. And then from here we'll see price actually, if the dollar does want to continue to move higher or not. However, there's still a couple of levels in here that price can still react from. One of them can be even this one, or even a little bit of this structure. Now, that doesn't mean that price will just move like this. Maybe can have a little bit of a reaction and then continue. So I want to see, again, similar price action that you had in here. I would like to see it now around this level. Okay, so that's what I would like to see before even considering trying to look for a long. Otherwise, the dollar might just continue to move a little bit more to the downside. And what does that mean to the euros? Then basically the opposite. Whatever I just said, we can look at the opposite on the euro. Now, looking at the euro, a little bit of the analysis on the euro index. So here we are. Okay, so we do have this potential level somewhere around here on the Euro index that we could see some reaction and then a little bit above it. So that's another one. So I'm going to be curious to see how this Euro index is going to react from here. And whenever price comes back or gets close to this level, I want to see where the Euro dollar is going to be, or even other Euro pairs, Euro Aussie, Euro Yen, Euro Pound, Euro CAD. Well, there's several Euro pairs that you can try to look for to see if there's going to be any bearish pressure in there. We did manage to break below that level, so I'm still going to be looking for potential more downside eventually on this Euro index, which can still be, which could mean eventually for the Euro pairs to move a little bit further down, maybe closer to these lows in there. And I do like this potential structure that we could look for. Yeah, so that's one. So when then you look at Euro dollar, now there's a little bit of a difference in here on the Euro dollar comparing with Euro index. Okay, so we can see that the Euro index still has this good supply level in here, and maybe then a little bit close to the top. Now, when you're looking at Euro dollar, the way it's moving to the downside, as you can see in here, is full of compression. Okay, so basically, price, as you can see, price is moving down, but it's retesting and moving now. So basically, a lot of this has been taken on the way down. So that makes it a little bit tricky, because maybe there's not enough orders in here to look for sales anymore. Maybe price needs to go a little bit higher than the top before moving to the downside again, which then we can look a little bit more into the left side, and I actually would like to see that, to be honest. I actually I wouldn't be upset or surprised if price actually maybe could go a little bit higher than this and maybe get a little bit closer to, which level is this? Maybe 118.30 something. Okay, maybe a little bit higher than that. I wouldn't be upset at all if price will do that. Fake out this top and maybe potentially try to find more selling pressure above that zone. One of the levels in here within this level is maybe price could go above this level. Actually, where I have this alert. Okay, maybe above this high, somewhere around there. Maybe I could see maybe a little bit of selling pressure. Price is reacting from this last supply level. This is literally one that is still fresh. Aside from that, almost everything has been touched. But maybe around here there's still something. But yeah, so that's a little bit of what I can see in here on the euro. Is this low good? It's kind of okay. Well, again, I would have preferred if actually this euro dollar had gone a little bit closer to this level, which kind of never really went there. But that's basically what we have. So am I going to be looking for sales within this zone on the euro dollar? Quite difficult. I think I would prefer to see price going a little bit higher, a little bit closer to this level before aiming for those sales. Unless there's literally some price section around here that you start seeing some weakness, and then eventually we can try to look for that selling opportunity. Yeah, that would be my take.
I was just waiting until you finish to not jump.
Okay. Good morning, Anastasiia. How are you?
How are you doing?
Happy New Year, by the way.
Sorry?
Happy New Year.
Yeah, Happy New Year.
First time I see you.
It's been a long time since we've seen each other. Already been
Exactly.
a year, so good to see you. How are you doing? How has your new year been treating you so far?
Yeah, a bit quiet, to be honest. So I've been taking a little bit more easier, trying to look more for swing opportunities, opportunities that I can see on the higher time frame and try to take advantage of it. Maybe I did have some opportunities last week, some with the yen pairs, which I didn't manage to catch anything because the moment of the reversal it was kind of 5 a.m., 6 a.m. in the morning. I'm not trading at that time. Yeah. And then it was 2 trades on the US indices, one on the FTSE 100 that had just got stopped out literally at the top of the top, and then price reversed, and then another one that I missed on the S&P. I didn't get in by like a fraction of a pip, but this is the style of trading or the type of opportunities of trading that I'm more looking for. More of those. I'm a content trend trader, so it's more of the reversals close to the extreme to then capitalize on the bigger move. So I'm going to be patient. I just need to find a way to be maybe more aggressive with my entries in order to not miss these opportunities, because I don't want to miss them that often. But yeah, that's a little bit me. It's going to be my approach for this year. to be honest. I want to spend, as I mentioned last week, I'll try to spend a little bit less time in front of the charts to be able to, well, to do more things during the day.
I can imagine. Trading takes a lot of time, especially if you're really focused, you know. Also, if you're studying, I think, and when you're learning, I remember it was all my days. But also when you are trading, intraday trading takes a lot of time. Sometimes nothing, because you just jump in and see the opportunity, but sometimes waiting for it, like if you get stuck in some trade that you don't want to be in, that takes the whole day around. So I can imagine that you want to cut it a little bit this year.
Especially because if I'm doing the same, like if my work desk, basically where I'm trying to do things not related to trading, is kind of in the same spot as I have on my monitors, my focus is on trading. Like my focus is kind of on looking at the charts, and it's quite hard to then focus on maybe other things that I should be doing, and then those things I start doing it kind of like maybe after 6 p.m. or 7 p.m. or whatever, or then I need to do them on Sunday that the market is closed and I can be more focused. So I'm trying to be more disciplined on that aspect, kind of managing my day-to-day a little bit better. But how is trading for you? How is the 2026 trading so far?
Regarding trading or regarding something else?
Anything.
I broke my leg 2 days ago.
Sorry, what did you say?
I broke my leg 2 days ago.
Oh, okay. So you went literally full extreme when they say break a leg kind of as a good luck. No, you went actually full on.
It's a good
are you feeling better? Which one was it? Was it left or right?
Yeah, I actually didn't realize it because I was playing paddle and I won the tournament.
Are you playing paddle as well? Okay.
Yeah,
good.
I played half of the tournament like this. I not realizing. So I finished it. We won the first place, but now since yesterday night, I'm actually like completely demobilized. But regarding trading, it's actually been quite good since the beginning of the year. You know, I really like the period of January, February, March, April until May, and even until the half of June. So the first half year usually my favorite. Whether it's I find July and August usually the most difficult months. And then in autumn, there are lots of opportunities, but sometimes it can be tricky, depending because we are going into the end of the year. There are many elections sometimes happening, you know. They are reevaluating the monetary policies lots of the time before the end of the year and reports and so on. So I find it a little more tricky as well. The first half a year is usually the most favorite for me. So now, since the beginning of the year, I actually decided to go in the same direction as you, but not in a sense of swing trading. I decided to cut the amount of asset that I trade completely. Okay. So the only things that I trade for me, which doesn't mean I cannot analyze something on live stream, for example, but I normally only trade for myself gold, silver, Ethereum, Bitcoin, and that's about it. So nothing else.
Fantastic for those coins and for those active and volatile markets. That has a tendency eventually to always keep on going up, but there's a lot of volatility in there. So no more US indices for you. You're not interested in the US indices at this point.
You know what? I'm not cutting it completely because I am assuming that there will be coming a period when I will be actively trading indices as well. But I figured out that the best way for me to get the result that I want is to focus on one market when the market gives the most opportunities. For me currently, it's Bitcoin, Ethereum, gold, and metals. Whether it's for indices, there was a period of time when I was solely trading indices and it was fantastic. So I'm assuming that later this year, perhaps in the second or third quarter of this year, I'm gonna switch back to indices because I'm overall expecting the growth of the US stock market in 2026 due to the Trump policies and so on. So I'm pretty much expecting this year to be good. So I have big hopes for this year, but normally not this US stock indices, I think, in the beginning of the year yet, because with all the uncertainties and they are still doing some crazy things around. You know,
Do you have more tendency to look for longs or for shorts in general? Do you prefer to buy or to sell?
Depends on the market. I wouldn't say the longer period, looking at the longer period of time, I wouldn't say that there is a bigger like value towards one or the other side. It depends on the market. So if gold is going up now, then majority of my trades are buying. Of upwards mostly, whether it's like if something is dropping, like when oil was dropping, I'm still expecting it to continue to drop this year, and most of my trades in this market will be shorting. So I would say it depends more on this than on my preference first.
Okay, it's more focused on trending then. They're trying to see where the trend is, kind of where the direction is, and then kind of just literally ride that trend. Yeah, that's good.
I know that majority, like some traders have the tendency more for the shorts, longs.
Yeah,
better as well.
Yeah, I would love to actually touch point eventually on paddle, because I literally just started playing paddle like 2 months ago. I'm super addicted right now. I cannot stop thinking about it. I just want to be playing almost every day. But yeah, so you do play. How long have you been playing paddle? Just kind of a quick one, and you already compete in tournaments. That's interesting.
Yeah, I've been playing since at the end of June, but I'm playing 5-6 times a week, sometimes 3-4 hours in a day.
Okay.
It's a lot.
That's demanding. That's physically demanding. Because I wear a whoop. Anytime I finish like playing paddle like for 90 minutes, like my whoop goes, like my strain goes to like 16, like out of 23 or so 21. So, and it's really demanding. So you are in good shape then to play 5-6 times or 4-5 times per week. You need recovery, and it's amazing.
Also for social aspect, is amazing.
Yeah, I love it.
That's nice.
Yeah, no, that's amazing. That's another aspect as well. Like you get to know so many people, and for anyone that is competitive, that's a great sport to play.
Exactly. I would rather put competitiveness there than in trading.
Yeah.
So it's a balance.
No, that's great.
It's a good effect of my trading as well for my mental state.
Yeah, so whenever eventually the Fivers organize kind of a live event, physical event, I think we do need to organize kind of a paddle tournament or something like that for us to go. I think that'd be great. So okay, what is your take then on gold? I think many people in here are asking about gold. We did have that massive gap over the weekend. What are you looking at on gold? If you want to maybe, let me just can I bring your chart? No, not yet. You are not sharing.
Yeah, one second. I'm gonna share my chart. Okay. Overall, I'm not expecting gold to fill in this gap. That's what people are basically talking about. So I was not trading. I normally trade from Sunday to Monday night. This is a gold futures chart, by the way, but it's a little different quotes, but the principle is exactly the same. So I normally trade from Sunday to Monday, but I didn't trade because I wasn't sure if the price is not gonna go and fill in this gap. Whether it's yesterday, I was taking longs here. I closed it a little bit premature, unfortunately, but I was seeing this long, so I'm a little bit bummed down by the fact that I closed it way too soon, because that would be a lot of money. But overall, I'm expecting some kind of correction and then the continuation until, for the futures quotes, at least 47.70, 47.90, maybe 4800. So that's another basically 40 to $70 move to the upside. So I'm not really seeing any correction coming in soon for gold, to be quite honest with you. And looking at the strengths of the trend and looking at this range of the consolidation, I don't think this is rational to be looking for filling the gap that we had over the weekend, because as we've seen, the price had an opportunity to go fill it in earlier, but the accumulation that happened yesterday due to the holiday, but also there was volume in this consolidation, so it's not an empty consolidation just due to the holiday. It was also accumulating more money here. The big players, they pushed the price higher during the Asian session already this overnight. So I'm not really thinking that anytime soon we are going back to the same levels where the gap was formed. And to be quite honest with you, and also on the previous stops here, we had massive volume. So this was the support that got created for the new range that was formed. So this is also something that has been holding the price. So I'm looking only for the upside opportunities. I'm not long at gold at the moment because, again, I closed it unfortunately prematurely. Would have been lots of money, but it is what it is. So I'm looking at this area here now to see if the price can come back and retest this area before continuing to the upside. I would even say this area here, preferably. So if I get the confirmation here, I'm going to be looking for the move to the upside back. This is 30 minutes, and on the 5-minute time frame, quite similar situation. So I'm expecting the drop. What was it? Levels. So it's struggling to go back up. It was trying here, but it's a little bit struggling at the moment. So here, this area here, I'm looking for the move retest and for the price to continue higher afterwards. So for me, it's not yet ready for more longs. Overall, I'm long, and the same for silver. So this is silver in 30-minute time frame, also futures. A little bit different prices, but again, principle are the same. So we also had consolidation a little bit more tough than the gold one. We also had a chance to go back to retest this gap that was formed earlier. This is a monthly point of control. The majority of the volume was traded here, so we need to also see that the volume that was created over this big range was the volume accumulated for longs, probably for big institutions. And I was looking for the overall expectations from the 12 major analysts, like JP Morgan, and all the others, for gold in general, for different kind of assets, class of assets, including gold and silver. And they are expecting gold to go higher, but they're expecting silver to go lower over the year of 2026, which I don't particularly agree with. I'm expecting both of them to continue to go higher, and silver as well, because silver is one of the metals that is used mostly also for the productions. So it's actually technically used not only by speculative approach to the safe haven, like gold in certain ways that people still see it. So I'm expecting silver to also continue higher. And at the current moment, I'm looking for goals for faster longs even on silver than on gold within today day. Unless gold does something really good and shows me some opportunity. But for the rest, if you look at the silver right now, closer. So this is again 30 minutes. If I look at the volume distribution, what I can see today, what I can see is that this is the majority of the volume for this whole move to the upside. So we are holding 94.99 level. So we are below the value area high, so which means that we didn't exit the majority of the volume accumulation area. But first of all, here is a very good enough opportunity for me to buy. But if the price goes above 95,330 and closes above, I'm also going to be looking for the more continuation to the upside. I don't necessarily see silver coming down here, but if it would, in any case, I would also take a trade in this area. I would look for more longs again from this area to the continuation once again. So,
yeah, where do you see them going? Like in the silver basically is going to definitely get $100. It's going to be 150. Who knows? But it's already 95. Like it's been crazy the rally that we have seen in the last few months, even just beginning of the year. And then we have gold as well getting really close to 5,000, correct? So gold at this point is 4,700. I think everyone eventually is going to be aiming for that 5,000 mark, and potentially is going to get there. So basically, the question is kind of maybe at the end of this quarter or something like that, where do you see gold eventually, gold and silver, the metals going towards to, and what will be the catalyst that either is going to continue to make it rally? Of course, I think if you continue within this uncertainty, geopolitical uncertainty in the market, most likely we're going to continue to see this the metals rallying. So what would be the opposite? What would be the catalyst actually to kind of make these moves to slow down and potentially see some bearish behavior?
I would say the catalyst for the bearish behavior would happen. Oops, it's kicked me out. Reason my screen. I'm gonna switch to yours for a moment. So the catalyst for the price of silver and gold going down, I would say in the first place, would be that people get used to the Trump's politics in the first place. So what now is continuing to push the gold and silver high, and metals, precious metals in general, is the uncertainty that is happening around the world, plus Venezuelan situation and the gold reserve in Venezuela. that were taken also when they made a deal. Let's call it a deal between US and Venezuela. Everyone knows how it goes. But this is the catalyst that are pushing the price higher, where there is in any stress event, people eventually get used to it sooner or later. The same as people got used to COVID, the same as people got used to the high interest rates, the same people are going to get used to eventually Trump politics and the way that he is, one day say one thing, another day another thing. So people are going to stop reacting so much. That's first of all. That secondly, what I'm expecting is when the situation with the Federal Reserve is going to be cleared between the government and the Federal Reserve, and there will be a clear direction towards the monetary policy, where the monetary policy of the United States is going. Because now, assuming that Trump is going to continue to push his line, we are going to see the bearish dollar eventually over his presidency. But when this is going to be cleared out, I also think that majority of the money is going to be flowing out of the metals towards the higher risk assets. And that's when I'm expecting stock index futures, or stocks in general, cryptocurrency, and US dollar also to get more inflows of the money. Because at this very moment, everyone is still expecting it to be bearish. So obviously, money is flowing out of the US dollar. Because why would you keep something that is eventually going to continue to go down? Because Trump wants, and everyone knows that he wants something, he's going to keep pushing towards that.
Yeah.
We can see this with the situation with Powell. So I think those two things are the main aspects of the next kind of closest quarter. Also, the situation with Colombia and Mexico and Greenland. What Trump is trying to, to also put his hands on those. So when this is going to be a little bit more stable, that's also going to be a reason why people will stop being massively buying like metals and will be ready to put the money in something that is going to eventually give them more returns. So I'm still looking at this also from the perspective of the risk on, risk off. I wouldn't say we are completely risk off now, because the stocks, we can see it, it's not a risk off, but I wouldn't also say we are completely risk on. We are hovering somewhere in the middle, and when it's going to be leaning towards risk on, this is when I'm expecting gold and silver to decline, whereas the rest of the assets to get encountered.
Yeah, it has been an interesting last year or so, especially in this case of what is risk on, risk off, because it looks like that we have been in this gray area or uncertainty, but the reality is that we have seen US indices and gold, which usually they wouldn't move together, but both of them keep on reaching new all-time highs. Of course, recently the US indices not so in such aggressive way, but the reality is that both these asset classes, which again they usually don't really tend to move that much in alignment, but the reality is that they carry on. So there is kind of this gray area. We'll see when eventually it's going to get into more clarity. And again, if this kind of risk on, then you're going to see even more expansion on US indices, and maybe a little bit of a slow move on gold. But meanwhile, gold is just taking advantage of all this uncertainty that is going on, which is interesting. And again, it carry on. People are trying to again trade gold as much as they can to try to take advantage of this route. And silver as well. Silver is definitely on the radar of many institutionals as well. Even traders, I think, even kind of a large date, like people with big accounts and day trading, even from Wall Street to whatever. I think there's definitely paying attention to silver, because they always like to trade the kind of the hot asset in the moment. So you start seeing maybe slightly different price action overall as well, and some squeeze either up or down, just because people like to they know that there's volume in that asset. There's a lot of attention, and traders just like to trade those type of assets in general, regardless of how they trade. Richard, good morning. Welcome.
Hello, everybody. Hello, Anastasiia. Hello, Pedro. How are you guys?
Good. How are you doing?
I am the stiffest person on earth today. Don't mind me.
Another workout day?
Oh, yeah. It was another early morning full session workout session. I am stiff. I'm still stiff from last week. I don't know what I'm supposed to be doing. My body, like every time I like stretch, my lats are on fire, and there's just a block every now and then. It just kind of like blocks you, and you're like, can't go higher than this.
Yeah,
but it's a good feeling.
Yeah, just keep your head down and just keep on working. Like don't try to feel perfect right now. The feeling is going to come eventually. And Richard, wait until you actually start introducing paddle into your routine as well, because then it's going to be a different one.
We have a paddle court like 15 kilometers from here, and I was listening in, and I heard that you as well, Pedro, also got into paddle.
Definitely. I'm so addicted. I have a court I kind of really close to my... I'm starting... I go to play now like at 7 a.m. in the mornings when I play in the morning. I go even early because I know the courts are empty, so I just go even early just to practice a little bit more. I'm fully addicted. I'm just fully addicted to it.
So I've been considering going and doing paddle as well, because I jog. So I have a park run every Saturday that I do. I jog every single day as well in the morning when I'm at the gym. It doesn't have to be the longest distance, but just some jogging, just to get the muscles nice and loose again. But when you guys were talking about paddle and I saw that we had a paddle court, I was like, maybe.
That's it. Yeah.
Maybe.
Pretty good
fibers,
very good cardio, honestly.
Yeah, it is.
And it's that short-term bursts of energy as well, because you're not running permanently, but you've got these short start and stop movements, which I think is really good. So
and you need to go down constantly as well, kind of just to hit the ball, and then again the competitive side of it's amazing. If someone is competitive, and then there's the teamwork as well. So that's great. Yeah,
I used to play in like school, and okay, but that's like 20 plus years ago, so let's not talk about that. But doing paddle, I think now might be and I played squash after school.
So that's a great combination.
It's gonna be good. Yeah.
That's a great combination. The only thing I did, I played on the beach. That's my only thing that I did with tennis, with a racket. But I play football, and I see a little bit maybe different. It's about space. Paddle is about space. Where is the space for you kind of to throw the ball towards you? And it's a bit of confined. Yeah, it's what I heard was kind of a bit similar to chess, because you need to kind of move the players around a little bit until you kind of win the point eventually.
Yeah, kind of yes. But also we had a discussion about this another day with the team, that people who did any kind of sport, like especially if it's a strategic sport like football, for example, or even squash, very intense sport, tennis obviously, but football, for example, is not so obvious because it's not a racket sport. But people who play football on a higher level as well, they are usually extremely good on paddle, because first of all, the physical side of things, or you're prepared for the intensive runs, and put in the energies for the longer period of time. But also it's a team sport, but also you're strategically thinking about how to move players around to win a point. So football players,
so that's my stance.
League where I'm playing, they are usually amazing paddle players as well, and they are always top of the ratings.
Yeah, that's kind of what I feel that are my strength. Guys, I need to leave. Anastasiia, it was great to see you. I hope you recover quickly, okay? And then kind of now it's time to rest. I hope your leg gets well soon. Richard, I will see you most likely on Thursday. Enjoy your trading day. And we have someone else as well joining in the background in a bit. Thank you very much, guys. There you go.
Have a great day.
Well, hello there, people. Goodbye, Pedro. Have a great one, my man. Enchanté, beautiful people. How are we doing?
How are you?
How are you, Anastasiia? How was your paddle tournament? I saw on your Instagram.
Yeah, I won it for the first time. It was a first tournament. But
well done.
I broke my leg, and I didn't realize it that a crack happened in the middle of the tournament, and I played another 5 games like this.
Anastasiia, when they break a leg, they don't mean it
break your leg.
Sorry, I can't hear you guys talking strong.
Sorry, I'm saying when they say break a leg, it's to wish you well. Don't take it like literally. Go and break a leg.
Yeah.
Literally.
Yeah. So you won it though. You won it, but you
Yeah.
broke a leg. Like, did you do like, was it like the Karate Kid? Did you break your leg just before the last tournament, or did you break your leg at the end, or like, yeah, how did that work?
Actually, I didn't even realize it. I was really focused on winning this, and
Oh my
three
god,
games,
you
I
absolute
didn't even know
master.
how it happened until I went to the hospital because it wasn't getting better. I thought it just because of the shoes. So I played like I couldn't
Wow.
walk, and last night I was like, okay, you know what? It's hell, like pains like hell. I need to go to the hospital. So the guy made an X-ray and he said that it's basically broken. And he's like, "How did it happen?" And only thinking back, I realized that it was completely stupid. I didn't even follow anything. I stepped on the ball. 3 games in, I stepped on the ball, like twisted the leg, and I didn't realize that it cracked at that moment. And I played another 5 games like this.
Oh no.
Finals.
Oh.
Now that you
Ouch.
mention the idea of stepping on a ball, many years ago, a friend of mine was having a bachelor's party, and part of the bachelor's party was action cricket. So we went to go and play action cricket for his bachelor's, and this friend of ours, he was at the wicket, like receiving the ball to hit it, and he just stepped forward and started to run after hitting the ball with the bat. And as he was running, he got a hairline fracture up his leg. And it's just like, how did this happen? It's like, he doesn't know. He just stepped forward, and he just thinks that he just stepped awkwardly.
I think you guys need to stop playing sports. Like, oh my god, like wrap yourself in bubble wrap. Oh my god, you guys are fragile. What's going on? Touch wood. I mean, I say that I'm gonna go break a leg now. Touch wood. Guys. I'm glad you. Hopefully, fast recovery. I'm glad your friend's okay, Rich.
To be fair, I never broke anything in my life, and funny enough, I said it last week to someone, and they said, "Knock on the wood."
Oh
So-
no.
Later,
I've been saying the fact that I haven't broken anything my whole life. So whenever I can bring it into
knock on
conversation,
the wood.
I'm just
I used to say
karma
that.
right now.
I used to say that. I used to say I've never broken a bone in my body. Never. Went to the doctors once and he said, "Do you know you've got a broken collarbone?" Didn't know it. I didn't know. Cause I knew that I dislocated it because I've said this a few times on stream. Like my collarbone, instead of like that, it's like that. And so I knew it was dislocated. And every time like you went to push it back in, you can feel it. It's like really spongy. But it turns out I've got a break a little bit higher up from rugby as well. So for my entire life, I thought I'd never broken anything until I went to the doctors and goes, "Oh yeah, you've got a broken and dislocated collarbone." I'm like, brilliant.
Tell the doctor.
So I can no longer.
Doesn't count. It's dislocated. No, it's broken. Nope, it's just dislocated. You said it's dislocated. No, but it's also broken. Didn't hear that.
No,
part.
doesn't count. Because the thing is as well, they were more interested. Yeah, literally. Like they were more interested at the time about scanning my brain because it was a really nasty head injury that I had. They were more interested in scanning my brain that they actually forgot to scan like the rest of me. So yeah.
This poor boy thinks that
NHS
his collarbone is dislocated. Better scan his brain. There might be injury.
Well, the thing is, I landed about 10 foot down onto my head and I was throwing up every time I sat up. So I had like severe concussion and they thought I had a bleed in the brain. So
Anyway, moving on from that horrific
yeah,
accident.
they had like hundreds of scans on my head. They just completely forgot about the rest of my body.
Anastasiia,
the
now
market
that you're back. Sorry, Anastasiia, now that you are back, have you had an opportunity to do any trading whatsoever?
Yeah, absolutely. During you mean this year already, the new year?
Yes, like since the beginning of the year.
Yeah, we've been talking about this with Pedro that I actually really like the period of time from January until the mid of June. For me, it's usually the best period of time in the year. So I find that the best, the most profitable, statistically, the easiest, the cleanest, and so on. Whether it's afterwards, and July and August are usually the worst. And then in autumn, there are lots of opportunities, but sometimes it gets tricky with all the reports before the end of the year. The monetary policy changes and shifts, the discussions, sometimes elections, and so on, usually also held in the end of the year. So, I find it more tricky, although it might be profitable. But this half a year, I usually the best, and I'm having big hopes for this, honestly. So since the beginning of the year, I modernized a little bit the system that I'm using for my personal trading. So I went off and cut off the amount of asset that I trade. So for myself, I completely cut it to only 4 assets, which is gold, silver, Ethereum, and Bitcoin. And for me, I don't trade anything else in there. So there are 4 assets that I touch in the trade, nothing else completely. Which doesn't mean that for the stream I cannot analyze it or something, but I'm not gonna trade it myself, which I found the most profitable. Which again, it depends also on the asset specifications, because there was a period of time when I was only trading oil. There was a period of time when I was only trading U.S. stock market, S&P 500, and NASDAQ mainly. So it depends on the period of time. Whether it's now, I see the very good performance on gold, silver, and so on, and that's a reason I'm focusing on those as well. And I'm expecting it to continue for a little bit until the situation shifts eventually to the opposite side. And then when the risk on, like when we lean more towards the risk on, I might go back, for example, to the LSU stock market, which I'm expecting to be in second, third quarter, 2026 this year as well, when there are certain things that Trump is going to put into place as well, and people are going to get used to his politics and know what's coming ahead, because a lot of push into the precious metals is coming from the uncertainty from people's side, from Venezuelan situation, from the uncertainty between Colombia and Mexico, Greenland, and so on. So I'm expecting this to continue for a while, and then at some point to shift massively and have a huge drop. So it's been good start of the year. It's been calmer. I can't say that it's been super intensely trading period for me so far. Last years were more intense in the beginning, like more active. It wasn't too active, but it wasn't too bad. It was good. It was a good start. So I'm having a big hopes for 2026, to be honest with you. I'm expecting the year to be quite good as well. How is it for you?
My start of the year has been good. I have multiple accounts, personal accounts. I have a stream account, some prop accounts as well. Some in an evaluation, some in funding phase and whatnot. I'm using different strategies and different assets on different terminals. So no one terminal is being traded the same. Some of them have been doing really well in the beginning of the year, and some of them have been, let's say, optimistically mediocre. They're just not there yet. Some assets have just not been going the way that I like to trade them versus the strategy that I've been using for them. But overall, it's been a good start to the year, I think. Which is weird for me because generally January is not the greatest trading time for me overall. So my general strategies require a little bit more trend following, and not all of the assets have been trending. Yeah. So touch and go, but it's good. It's one of the better starts of the year so far, even though some of the accounts are kind of like drifting around break even for the month, and some of them are in profit, and then one of them is in drawdown. But other than that, it's been going well.
Yeah, awesome stuff. Yeah, nice.
How about you, Will?
Yeah, pretty much the same, man. I took my first trade last week. A bit of a loss, as you guys know, on gold. However, I don't know if you guys caught, or if there's any of you guys in from this morning's open of the stream. I was in a really nice trade, or I'm currently in a really nice trade. If I just bring my screen up real quick, you'll be able to see. I'm currently trading US 30 long, which is part of my swing strategy. So really nice, and I'm about $93 up at the moment. If I can hit a full TP on this, like I explained a little bit earlier, and as some of you guys already know, I don't trade this strategy with a TP. However, the TP I have got on this is a break-even TP. So it's to the point where if this hits TP now, my account will be back to break-even, flat zero out of drawdown. So that's a really nice feeling. However, I kind of want to see what happens at these highs, target these highs preferably. That's like a discretionary TP, see what that looks like. I think that's around about 500. No, it's about $1,100. So that's going to be really nice to see what happens there. However, I'm just going to see what happens. You know, I'm close to $100 up now, but preferably I want to see this like reach 10x. You know, I want to see this reach like 5-6 grand. That would be awesome. But who knows? You know, my entry criteria has been met. If this drops and breaks and closes below the 200 EMA, then I suppose, you know, I'm going to have to close it because that's that's part of my rules. However, if this can keep on moving up now, I'm going to be a very happy puppy, you know, especially if we can get back above break even and maybe even higher. That would be really nice because my US 30, Euro, JPY and NASDAQ, usually when they get entered in, they don't come that often. But when they do come, they really do start to stack up on orders, which is really, really nice. So hopefully this can now just continue that path to the upside and reach for the moon.
Sounds good. I like that.
Yeah. But I actually entered this live on stream earlier on this morning at 9:30 a.m. UK time with you guys. So that was really nice. So for those of you who watched me enter this trade, we are now $100 up officially, $101 up.
This is only on US 30, correct?
This is this is one lot on US 30, risking 0.5%. So this is half risk. This isn't even a full risk. If I was 1% up, or if I was like 1% in profit right now, I would full risk this. I'd have a one lot risk on this. A 1% risk on this. But due to the fact that, you know, I'm still in a little bit of drawdown, I took a $700 loss last week. I'm just gonna risk 0.5%, see what we can do.
Nice.
We had
did you say
questions in the chat for you?
One for me?
Yeah, one especially for you, which is a very interesting question that I'm also interested about because I have on my system. And at the end of the year, I made it very easy for me. I finally connected all of this to the copy trading. So it's ultimate. Finally, I'm not managing 10,000 accounts separately. But the question for you, how do you manage trading on different accounts using different strategies?
It's quite simple. I have different times during the day that I focus on a specific account. So to give you an example, I will use the one account from London Open for about 2 hours or so, or just before London Open for about 2 hours or so. And I will only focus on getting a trade on that account. I have very specific rules for that specific account, which I've like ingrained in my brain entirely. Once I find a trade on that account, I enter it, I minimize it, and I go on to my next account for the next time slot. I have one account that's purely for swing trading on EJ that I enter a trade once every week or so, maybe. And then I just kind of like leave that one. So I open up that one every now and then just to see whether or not the trade has gone down to hit my stop loss or because it doesn't have a take profit. I just kind of like let it run. So I open that one up every, let's say 2 days or so just to have a look at it. So I don't really micromanage that one all that much. My 5K stream account, I only trade while I'm on stream. So that's also quite easy. I just make sure that whenever I'm on stream, that's the one that's open. And all the other accounts are either minimized or closed for the time frame. So that's how I generally go about it. I have very select times. And in terms of the strategy itself, it's two of the accounts share a strategy, but their approach is a little bit differently. Or I approach them a little bit differently. The one I would adjust risk slightly more often. So I would be a little bit more risk on with one of the accounts, where the other account is more of a low down, bring your risk way down and then just kind of scalp your way through. But they generally follow the same core rules. I'm looking for the same amount of pips, same amount of stop loss, all of that kind of like stuff. So, but in general, it's just a nuanced version of a strategy that I'm already trading. I would say that I have roughly 3 strategies that I'm jumping between pretty much. One is a purely swing strategy, and I'm only using it on the one account. And then there's 2 accounts that share a strategy, but the risk approach is different. And then there's another 2 accounts that have a similar strategy as well, but also their risk is slightly adjusted, just a little bit different. That's how I do it. And I'm never looking at one more than one account at a time.
Okay, makes sense. So that's how you can manage it. So basically, you are specifically dedicating the time for the specific strategy. But I think it's still difficult for me. Probably would be to shift my mind from one system to another system and not looking for, whatever I'm usually looking for that account into the other account. So you need to be able to quickly shift your mind between certain things. It's very impressive.
So my approach is usually in the line of I look at one asset per terminal and one strategy per terminal. So it's just those 3 things that I basically... So which terminal am I on? Account or which asset am I going to be trading with this account? And then I have a spreadsheet with all of my rules and everything. So when I open up that terminal, I also at the same time open up that exact asset on TradingView that I need to look at, and I only look at that one. And then at the same time, I do the same thing with the rules and whatnot. I'm a very systematic approach person, so I look at, I will... People might think it's OCD or whatever, but it's like the idea of I open up the terminal, I make sure I've opened up the right terminal, I go to the right spreadsheet, I go to the right asset, and I purely focus on that. I've not screwed up yet in terms of accidentally taking a trade on a different account with a different strategy, but like touch wood, that kind of like thing. I've not screwed up yet, but if there's another way for me to manage that a little bit easily, then I would probably do that. But as it is right now, it's sort of working. So, happy with that.
How long have you been doing this kind of trading? Different strategies, different accounts?
So, the stream account is the latest one. So, I would say 4 of my accounts, I've been doing this for about 8 months or so. Of which one of them was newly added maybe 3 or 4 months ago. So, let's say 8 months I've been doing that across different accounts, give or take.
Okay. Wow. Really impressive.
Oh, it's Steven. Well, congratulations. Will, hoping that trade you are in are going to recover the drawdown you had. This is for you, Will.
Will is so focused. Look at his face. Look at his face. I'm so focused.
Yeah, I was going to say, I was in deep concentration. I've just entered in on a quick gold. I've only put 0.1 of a lot on. It's just, I'm going to be popping out shortly. So I don't want to be in this position.
In a sell, what are you taking?
You're in a sell?
No, are you in a buy or in a sell?
Oh, sorry, I'm in a buy. Yeah, I'm in a buy.
I'm in a buy on silver.
Oh, okay, nice.
So we are aligned, yeah, somewhere.
Silver's been doing really well at the moment.
Honestly, I'm a little bummed out because last night I closed long prematurely instead of holding all of this way up that it made through the Asian and London session. So that would be a lot of fun.
If gold can really pump, especially above these new all-time highs, and if it can do it before I go to sleep, I'll just move my stop loss to break even and just, watch it either go up or hit break even, either one. I'll just make it a risk-free trade. But we'll see.
Yeah,
but like I said, I'll be. In fact, have you got silver on the chart now?
Yeah, I have a silver on the chart right now. Wait, I'm gonna shift it. And then hourly candle just closed quite good, so I'm expecting it to continue higher. Wait, this is a chart, but a different type of chart. This is 30 minutes on silver. and I was basically long here already. So this is the point of control of this whole upper movement. This is where majority of volume was traded, so it was holding above. I took a long, and now it finally got outside of value area high, so the majority of the volume was traded below, so they finally were able to push it higher. I was normally long yesterday already here, but I closed it too early. And this, with a lotage that I had before on all the accounts, that was a lot of money missed. Like, trust me. So I'm a little sad about that, but now I'm back in a long again. And as long as we hold above this gray box here, I'm gonna continue to hold silver. I'm planning to break even right now just in case. But silver, I'm expecting today to go to about 96, maybe 400, 500, still a little push to the upside. Approximately same as we did before. So what was it? We had first push here, which was eventually 400 ticks. A second push, which was almost the same. It was also from this low here before the correction. It was 450 ticks. So I'm expecting also around 400 ticks here from the low, which is 400 is somewhere here. So that's 97, 600, 700. Something.
There's a question here from Scribbles asking, you guys think gold will continue or pull back today? Now, I know that gold and silver have been a little bit correlated and running together, but what is your opinion looking at gold today, Anastasiia and Will as well?
For me personally, I'm expecting the continuation, but maybe even the pullback before, because what is now is a decision. I'm not in a gold right now. Now the decision-making point for me is this area. If we break this area and we hold above it, I'm expecting the continuation to the upside. We had lots of volume on this week. Right now, gold is trying to pull back from there, which I don't particularly like yet. So if we close above the zone, so that's approximately $5-6 higher than the current level, I'm gonna continue. I'm gonna take long once again on gold. So one of the scenarios for me is if the gold, one second, if gold, hello, here. If gold continues here, I'm gonna take long again afterwards, and take a buy. Or if gold pulls back, eventually I am going to take a buy from this gray zone here. So I am looking for overall long continuation, but either through the breakthrough or through the pullback, one of the two.
Yeah, that makes complete sense. And you, Will, what are you looking for?
Again, looking for the continuation. I think we're going to get a pullback of this area here. If I just bring my chart up real quick, you'll be able to see. Looking at a bit of a pullback into this area, test this area once, and then see if we can try and pull up a little bit further to the highs, and then show that continuation. So I'm about to be tapped in. Bosh, there we go. So I've just been tapped in now. I'm kind of anticipating now that we're going to start heading up. If we don't, okay, so be it, that's fine. If we do, even better, because then even if we take out these highs, that's going to be looking at close to about $180 just on the gold trade alone. That's just going to be a little bit closer to break even. It's just going to be that step in the right direction. So if we can push higher and have that continuation, I feel like we've had enough of a pullback for the day. I'd like to see that higher price now.
I'm inclined to agree with both of you. I do think that gold has all indicators point towards the continuation. For me, it's geopolitically, there's this unrest, and generally during unrest periods, gold tends to rally. We're still within that unrest. Yesterday's Martin Luther King Day, it did exactly what we thought was going to happen during the New York session, which was just consolidation. It was just running flat. Those two sections that we marked up yesterday, the top end and the bottom end of the range, it stayed within there until this morning during Tokyo session where we started getting the breakout. So my same thoughts. I think that we're going to potentially carry on. However, if we look at the hourly chart, we've kind of slowed down ever so slightly here where we are right now, which could potentially stay there for a little while, 1 or 2 hours while we wait for the New York session to open up, start getting fresh input, start pushing price a little bit higher. But I can also see the potential of a pullback as well. How deep that pullback will be is really not up to me to decide. But I did like Anastasia's levels that she marked up for the potential pullbacks, which I think could potentially play out that way as well. But we are more reactive traders, so we tend to wait for the reaction and then play off of the reaction rather than trying to predict.
Yeah, exactly that. Right, guys, I'm gonna have to jump off because we're having food a little bit earlier, so we can just head to bed and then just take a chill for the rest of the evening now. So I'm gonna love you and leave you because we do have another fantastic guy coming through. So I'm gonna jump off now before my Wi-Fi decides to have an absolute fit. So guys, I'm gonna love you and leave you, and I shall see you all tomorrow. Thank you very much for joining, and thank you very much for having me on, guys. Make sure that you smash that thumbs up. If you liked the open session with myself this morning, make sure that you smash that thumbs up. And if you do like Anastasiia and Richard Butler with Griff in as well, then again, smash that thumbs up. And make sure you share it, guys. Do not forget to share the channel. Do not forget to share the video. And we shall see you all, or I'll see you tomorrow. These guys, stay tuned. So thank you very much, guys, and I shall see you.
Thank you so much. We'll see you tomorrow. Great.
See you, Will.
Cheers, Will. Have a good one. Griff, how are you, mate?
Yeah, I'm alright. How are you both?
Amazing. How are you? How is the beginning of the trading session today?
Well, I trade on the hourly, so I'm not really trading any specific sessions myself. And as Richard knows, I don't really have very many trades. I literally get like 2 trades a month, Anastasiia.
Okay.
So, Griff, as always, you know what question is following. No, don't shake your head. Don't shake your head.
I didn't give you the opportunity.
Are you in a trade right now?
No.
Well, that was Griff, guys. We'll see.
Nice seeing you. Bye. Nearly, actually. On EU, it was looking pretty good. But this last candle right here, I needed it to close a little bit better. But that wick was a little bit too large.
For the continuation. Because yesterday
Exactly.
sells, but I didn't take it. Continuation you're looking for, guys.
Yeah. But I don't know if this is showing enough momentum for me. I would have liked a little bit more evidence. Maybe this next candle will close solid. Who knows? If it closes like up here with a nice close, then I would set a pending order. But yeah, we'll have to find out.
Sorry, Griff. When you're looking at this like already movement that happened, coming out of Tokyo into London session, like this real nice bullish movement. Do you not feel like you could have gotten in a little bit earlier? Or is that not like generally a time frame that you're at the computer or anything like that? So,
well,
because
for me,
the move has already happened on EU today. That's what I feel.
I know what you're saying. I feel like sometimes there isn't always an opportunity to get involved at the very, very beginning of the trend. And I like to trade reactively. I'm trying to get in on pre-existing trends. And then when these trends continue, that's where I make my profit. In these cases where you just have like one impulse and then it ends, that's not where I'm trying to get involved. So yeah, that's why I'm looking for this continuation for an established trend in the hopes that it will continue trending up. Yeah, because when it trends, it really trends, like I think everybody likes to kind of call the top. You can see it with gold, like everybody every week was like, this is the top, this is the top. Yeah, that's my trading style. But I think a really good rule of thumb is to look at previous highs, especially from ascending channels. I feel like we can quite often retrace to around 90% of maybe I can get a Fibonacci tool here. We can usually retrace like 90% of the size of the ascending channel. So in my opinion, I think we've still got a pretty good amount of space for us to continue moving up. But yeah, I'm not putting any trades down yet because I need to see momentum continue.
Fair. I write that. I think that's good. Anastasiia, you said you will do analysis on other pairs, but you won't really trade them. What are you seeing on EU at the moment, or even GU, any other of the EU, or let's say major pairs connected to the dollar? What are you seeing at the moment?
I was just looking at it as we are speaking about this. I would say I'm looking for. I'd like more GU, but I'm actually looking for the reversal on GU at the moment, rather than the continuation. So I'm gonna pull my chart. So I was looking for sells already yesterday. However, we didn't get this sell after the gap that was formed. Here we go. We didn't really want to fill in this gap after we had it over the night. So it continues going higher. So what I see right now is that, first of all, if we are looking at it, sorry, it's just a lot of data and on the screen sometimes it just...
We thought LJ's paintings were lovely.
Yeah, we are like somewhere together on this with LJ. So if we look at it, it kind of is moving is in a channel, a little bit rough channel, but it is a kind of channel that I would say for myself. So if we look at it like this is where we had the bottom of it and eventually the top. One sec. So kind of this is what I'm looking for, more or less. And if we look at how the price reacted over the previous volume, so we had lots of volume here, that the price has reacted here. This week was a touch of this specific dynamic level and the point of control. Now here we had more volume accumulation and the price tapped into it earlier today. And again, on the tops, we had lots of volume coming in. This is the current weekly point of control, which means this is for the 2 days in a row, the majority of the volume has been traded here. On the break, we've seen the volume that was trying to push the price higher, which failed, and the price went below it. So right now we are located below all of the previous volumes, and for me, that was exactly the same pattern. So we had a lot of volume here. The price tapped into it, accumulated, and dropped. We had more volume here accumulated. The price tapped into it, more volume, and it dropped. So now we see on the drop, we had more volume coming in as well on this week here. So the price can come back and retest this week once again. I'm going to be looking for a sell for GU with the stops just above the previous highs and the continuation all the way back on the bottom, and maybe even renewing the low that we were creating yesterday overnight. So
okay,
so
yeah. Okay, makes sense.
Yeah, I would say towards the previous yesterday's week that were created on the manipulation of this, the weekend events. Yeah.
So is this your futures chart?
Yeah, it's a futures chart.
Okay. Because on the CFD charts, we've exactly reacted on GU on a what I call bases. And we've already, this is now the second reaction that, the second time we've come to touch this specific area of resistance. So if the futures chart and the CFD chart are, relative to each other, even though the pricing would be different, if they're relative to each other, then your reaction is exactly as expected from what I'm seeing as well.
Yeah. So you're looking also for the short for GBP/USD.
So for me, I'm a little bit more like Griff in that sense. I want to see the change and then the continuation of that change. So if we are going to start turning bearishly from here, I would like to at least see a second leg that builds up, and then I will jump in on the second leg as an example.
I see. So you're looking for the existing trade already to be formed, and then go enter.
Yeah, because I mean, today, the whole of today has been very bullish. If we just look at today in a nutshell, it's been quite bullish, and we've had this very strong upward push. A bit of a slowdown coming into London session, and now a strong bearish candle. But I want to see whether or not this is not just a pullback and then a continuation, but instead a complete reversal and then pushing lower.
For sure, I see.
Gold is still stuck in this upward section. What's the time now? Yeah. New York session is opening up in roughly 2 hours, 15 minutes or so. So we should probably see a little bit more reaction either prior to, so the establishment of a reaction, and then as New York opens up, a good strong reaction, or we should see a stronger reaction only in New York session.
I would also gold market, futures gold market opens in 1 hour and 45 minutes.
1 hour, 45 minutes. Okay, so you
30 minutes before the US opening. So we might get the reaction already from that point. Some kind of volatility coming in, so that might change the situation on gold side.
Yeah, nice. I think we skipped over a question. Unbiased Trader asked about 25 minutes ago. Sorry, Unbiased Trader. Do you guys trade based on correlation, like DXY, USJPY, DJI? Let's start with you, Anastasiia. Do you trade correlations?
No, not anymore. I used to trade it. I used to look at it. It didn't really matter, to be quite honest. I mean, I look in the sense that I look in the correlation between silver and gold, for example, and Ethereum and Bitcoin. I don't look in the correlation between like gold and for example, dollar and the GBP USD, dollar and Euro USD. I'm looking more long term for dollar, I would say, but not intraday fluctuations within the US dollar, unless something is happening specifically for the US dollar, obviously, like the releases of inflation, the data, like unemployment, labor market is coming out. So that's this, yes. But for the rest, no.
And
What
yourself,
about you?
Griff?
Personally, I don't really consider currency correlation, and that's just because I've studied and backtested all my pairs independently of one another. So when I get a buy setup on, say, Euro USD and a sell setup on pound dollar, which are inversely correlated, not inversely correlated, but say I have two positions, a buy on one and a sell on the other, I'll kind of treat that like a hedge. And that's kind of my approach towards it. So I don't have to decide which trade to take. I'll just take both and then they hedge each other. And whichever wins takes out the loss, hopefully.
I mean, fair.
What about you, Richard?
I don't anymore. So Griff, you might know this already. Anastasiia, you might not, but I'm gonna inform you now. I'm primarily only focusing on NASDAQ during the day. And then I have a different pair for a little bit later in the day. So my stream account is purely NASDAQ. So if I'm going to look at a trade for NASDAQ, I don't really look for any other correlations. I know that US 30 tends to correlate a little bit. S&P 500 also is correlated to NAS, but I don't even bother looking at any of them. So I just purely look at the one chart and I base all of my analysis on what that chart is showing me. Now, I do understand the concept of correlation. So let's say hypothetically you are seeing that there is GEU, so pound euro, and you're looking at GE and you're thinking to yourself, okay, the pound is really weakened against the euro, just as an example, and then go back to the Euro USD chart and then trade according to that one and say, okay, well, I'm more inclined to look for EU buys than I am for sells because euro is stronger than pound, as an example. But those correlations hasn't always worked out for me. Even with GU and EU, those two are very correlated. I used to trade both of them together, and then just found I think I'm just over risking on the day on the hope that the dollar is weak. If it is weak, yes, you can have both of them, but there's too many facets, I think, that is being taken into consideration with these correlations for you to really trade one of them in an optimal way. I think the hedging makes a lot more sense. Hedging your, the cross-correlated pairs a little bit more. So if one is to go in your direction, that's great. If one doesn't go in your direction, the other one at least, is going to make up for that. But if I'm doing both EU and GU, which is a little bit more correlated, and both of them I'm going along, and both of them decide, nope, dollar is strengthening. So I think the hedging idea of it makes a lot more sense. Oh. Ooh.
I still didn't get a hang of hedging, to be honest with you. I was trying to test some things in the end of the last year, but didn't completely make sense for me. I mean, I understand the concept and everything. I didn't find a way to apply it in my personal trading. I tried, and it didn't bring the result that I wanted anyway. So I'm stepped away from the idea of hedging for a moment.
I've tried hedging before in only one account specifically, and it was the swing account. So while we're swinging, say we're buying up, I will see if there's an intraday sell opportunity, and I will try and do that. But the 2 times that I've tried that, I kept thinking to myself, but hold on a second. My bias is overall bullish on this account. Let's just stick to swing trading on it. I think I had one successful hedge on that account and then one unsuccessful one. And just decided, you know what, this is one strategy on one account. I'm happy with that. Just let's just do it like this, and let's not play around.
Yeah.
Scribbles saying, thank you for your insight. It's a pleasure, Scribbles. Anytime you have a question and Anastasiia or Griff are up and you want to ask them a question, by all means, they're always here to give their insights, and their insights are limitless in its value. And it's all free. So all we ask is just a like, a subscribe, a share. Get us to 100k subscribers, and we will provide you with even more value in the sense of giveaways. We're going to have like a crazy good giveaway if we reach 100k subscribers. So please help us to get there. Steph asking, Richard, are you South African? Yes, I am. I am very South African.
You often get that question.
I do. It's the moment I hear the accent, and then they're like, "This guy's not from England. This guy's not from England."
He's got a slight twang.
Yeah, there's like a little. What is that at the end? What is that at the end? Oh. The Drive Vibe motivation. Hello, the Drive Vibe. How are you? I don't think I've seen you in. Maybe on a different session. Stephen asking, Richard, are you a scalper or are you a swing trader like Griff? Like I explained just now, I have an account that I'm swinging on only, and then the majority of my accounts are intraday trading, and then I have a singular account, which is my stream account, which is a scalping account. So a little bit of everything, but I'm the most comfortable doing intraday trading. That's where I'm the most comfortable, just generally trading, I would say.
Very good, very good. You're always trying to bring me down a couple time frames, and I like to think I'm trying to bring you up a couple time frames. EU is moving up. Hopefully I get a continuation. This looks pretty good.
It does. You're on the hourly normally for this, and you're not seeing any of those like pullbacks at all. But on the 15-minute, you get these little bases that I like talking about.
You trying to kill my vibe over here, Richard?
No, it's continuing.
Okay, good.
I agree with you. I agree with you. You're so focused on the 1 hour, and I'm like looking at the 5 and the 15, and I'm like, please enter a trade, Griff. Come on, you can do it. Do it. Now you can definitely see that even though it is It's shorter time frame pullbacks. It's very, very, very little retracements. But overall, it's still making higher highs, still making higher lows, even though on the hourly, you're not really getting that like nice little swing point. Okay, it's dipping a bit lower and then continuing up, but you are seeing it on the lower time frames a little bit more. GU as well. GU seems to have flipped its bias exactly as Anastasiia has pointed out. If I go down to the 5 and the 15, it looks a lot better than it looks just on the hourly. Yes, the hourly had a very nice long bearish candle, but on the 15-minute, you can start seeing a little bit more structure being formed in terms of its reversal point. So it looks good. It does look good. So are you going to jump in on a trade? Am I going to get you to FOMO into a trade?
It depends how it's looking in about 30 minutes. Could look very different.
You're going to wait for this candle to close first.
Yeah, exactly.
Andrea saying GU pullback. Yes, it does look like it's starting to pull back. The question is, how deep is this pullback going to be? Is it a continuation? Is it a pullback for a continuation, or is it a complete reversal? So we have this last area over here. So this is a bit of an order block, bullish order block, and it coincides with a 15-minute base area as well. So you've had one reaction off of this base area, and then it's a strong reaction off of it. This is a base. Let me just mark that one. We have come into, if I go to the hourly, you will see this was the 7th of January. We had a little bit of consolidation in this area and then a strong break as New York opened, and then we continued lower from there. That was the last time that we had any semblance of bullish input on this day before closing the day out bearishly as well. We've had a singular reaction over here. It wasn't the strongest of reactions, but that's fine. We had a secondary reaction, which was a lot stronger as well. Had a bit of a deeper push into that zone and then a nice push lower. However, we did not really create a new low in relation to this low point over here. However, we did create a new low in relation to this little bit of consolidation that we've had there. And then on top of that, when we had another opportunity to try and bring price back to this point, it absolutely failed and started to range a little bit and then had a nice little push down. When was this? This was on the 15th. Unfortunately, since then, we went into consolidation down here. An attempt at a break up higher. Came back, retested, back into consolidation. Then we had the gap. So this is that Friday into morning rollover gap that we've had. And since then, we have been nothing but bullish upward movements. So in general, this area here, I think, is still strong enough that we are having a bit of a reaction at least. The question is whether or not this is actually going to be a follow-through reaction rather than we're just going to pull back a little bit and then continue pushing higher. So only time will tell. But it doesn't look bad, I think. It is a deeper pullback than what we've had recently. At least yesterday, this pullback that we had here didn't really break structure all that much. We still had the low down here, and then we kind of swung at the high without really breaking strongly. But we had zero follow through when price tried to push lower from that swing point, and then we just started pushing a little bit more bullishly, pull back, and then a continuation bullishly. So yeah, this is a much larger reaction than we've had recently. And it makes sense because we are at an area where we've recently had a reaction and a strong reaction at that as well. So strong reaction pushing it lower, even though this was news. But the news is reacting from that area. So I don't know how you feel about GU right now, Griff, in terms of your hourly look back. We do have a very nice base area right over there. that's just above the bullish order block.
Yeah, it was looking good, but then it's just one impulsive candle really, and I think if you remove that, there's not really much of anything going on. I'd say we're more corrective. So it just feels like a quick adjustment, and it looks like we're adjusting back again now. So I definitely feel like we're going to move short based on the slowdown with those wicks and the way that we've started pulling down back quite quickly.
Yeah, it does seem that way. And if you were talking about correlation between EU and GU, EU is way more bullish, and the bullish structure itself is a lot stronger every single time there's a bullish push. Every time there's a bearish retracement, it's weak, and there's zero follow-up. So if there is a follow-up bearish candle, it's short-lived, and then it continues higher. But with GU right now, you had this impulsive push over here, which was short-lived, and then when it had an opportunity to try and push price higher, it failed. One would have expected a nice bullish candle like this on the 15 or even on the 5 would it have at least tried to come and take the highs of the most previous push, the most previous leg, and it didn't. So to me, we've moved into a base drop. So to me, this is starting to really change over to bearish.
Yeah, I'm with you on that for sure. And it's so interesting when you have two correlated symbols going in the opposite direction. Like, I wonder how Euro Pound looks right now. I bet that looks, yeah. When Euro dollar's moving up, Pound dollar's moving down, Euro Pound, that's a recipe for a huge move. So
yeah. So it might be good to just jump in on, Euro longs and GU shorts. But that's that's the correlation. That's the correlation effect. If you're like just purely looking at correlation and you're thinking, oh, because EU is going up, I should be, in EU longs. But then you have to take in consideration the US has to also be considered. So is the US strong? Is it weak? Just because this pair, EG, is showing strength and weakness on one of the two sides, doesn't necessarily mean that the EU-GU pair is going to show the same kind of movement. Right now, it's completely correlated. So EU is absolutely smashing it, and GU looks like it wants to start pulling back. And in this case, EU, or EG, sorry, is quite bullish. So very interesting, very interesting. Gold is doing what I like to call an M structure. Push higher, try and push lower, try and push up yet again, fail, and then looks like it wants to push a little bit lower. So I just call this an M. And sometimes it's a follow-up push lower. Sometimes it's a very short-lived little bit of correlation and then another push. So Anastasiia, you're back.
I'm back. I had some
Welcome
issue
back.
with the small laptop. What are you guys looking at right now?
We're looking at the absolutely bullishness of EG, which is correlated with EU being very bullishly and GU now finally having quite a bit of a drop-off as well, or at least a bit of a pullback. Let's see.
Yeah.
So everything that we spoke about earlier is now kind of presenting itself.
Yeah, feels good.
We're all such good predictive traders.
But did you see GU though? GU actually started to drop as well. So
Yeah, that's the one that's on screen right now.
Don't you think that EU is gonna follow? Or you are expecting EU to still continue higher?
I mean, that's why Griff and I went over to EG.
Okay.
I mean, EG is quite parabolically bullish. So,
Yeah.
and I don't see the same slowdown effect with EU to justify the same movement as GU. GU has showed significant slowdown, and now at least a potential at a a push lower. So I don't know. I don't think EU is going to follow GU at all.
Okay, yeah, I see that. Yeah, EU is not showing any signs of weakness so far yet at all.
That's why I've been trying to get Griff to give into the dark side, you know, and finally enter a trade. His one trade for the year. I mean, for this month. I mean, for this week.
Yeah, no, you're right. I've had one trade for the year. It's crazy because you think having such strict criteria and being so selective would mean I'd have really high win rate, but I don't. I have a low win rate, but really huge trades. So quite.
You have a big risk reward.
Yeah, the average risk reward is around 5 to 6.
Okay.
Quite often, I get a 10% winner, which wipes out the last 2 months or 3 months of losses.
That makes sense.
It's not easy, but it works well.
It's not easy mentally, you mean, or technically to find this kind of opportunities? Or both?
Mentally, yeah, but I've done it for so long that I can do it now. Technically, it's very simple. A lot simpler than your strategy, as I understand from what you were showing us earlier. You've got a lot of different things to overlay and consider.
I mean, I think it's difficult until you understand that everyone finds something that clicks, you know, in their mind, the way that their mind works. So for me, this works as well. And for me, it's not so difficult, whether as I understand that if someone sees this for the first time, second time, until it's explained, it might look super confusing to some viewers as well, you know.
Are you guys in any trades right now? I mean, considering how the markets are moving this very moment, it's a good opportunity, I suppose.
A good opportunity for what exactly?
For trading.
Still looking for the deeper pullback on gold, since gold went on a pullback now. So I don't particularly think I'm gonna be waiting for this for the current moment. But perhaps it's gonna get more clear before the New York session when the gold market opens, and then New York, and then I'm gonna reconsider this again. So because it's approximately where it was all this time, so I don't really see any changes or any clear structure at the moment as well. So.
Yeah, I agree with that. This M movement that we're getting right now is not inspiring confidence, especially seeing as we have a high and then a slightly lower high. This does tend to like Griff talks about, it's that slowed point, and that was a horrible drawing. You have this slowed push and then a potential push lower, but I think this leg is most probably going to be just a bit of a retracement rather than a full-blown reversal, I think.
Yeah. Perhaps. Let's see.
I think it's fair.
Any bearish anyway, so in general, it does not look bearish so far. Just as we look at the structure completely, so I wouldn't necessarily take any shorts at the moment because there was no supporting momentum at all since the beginning of the day. And yesterday, this accumulation that we did also wasn't really, the consolidation, and then how fast we move to the upside doesn't really give me an idea that it's gonna retrace anytime soon.
Yeah, so you're not expecting a full retracement down to this area of consolidation down here.
Oh, no, absolutely not. That's something that I'm not expecting. I mean, never say no, of course, but I wouldn't expect this. Let's say like this. I don't see the high probability of going there today, at least, for sure. But again, I might be wrong. It's all probabilities.
Yeah, so the way that I like looking at it, and I'm not a fundamental trader at all, but the way that I do like looking at it is the idea that something forced it to do this movement, this strong parabolic movement. Something forced this. If the inverse were to happen and we have a trade or a pullback that is the same size as this, let's call it impulsive move higher, what needs to force it to sell off that much on a fundamental level.
Yeah.
And if I cannot think of something right now that is going to like really cause it to absolutely tank down the same amount that it's, you know, pushed up with, then I just don't even consider the idea of taking sells.
I like the way of thinking like this. A lot of people are looking for the overlay of the gaps just from the technical perspective, you know. But if it continues going high, I really love this quote that something can continue going higher longer than we are able to pay for it as traders. More often the times we are expecting the pullback just because we get this idea that it needs to pull back, it needs to test this level, it needs to go back to the same gap. But it can continue to go in the same direction where it went much longer than we are able to fund this ID, you know, and being stubborn. So, yeah, I always remind myself this when I'm looking for the reversals after very strong trends.
Yeah, so I agree to that as well. And that's a really cool quote, though. It falls in line with that, the market can stay, what's that quote? Griff, help me. What's the quote? The market can stay irrational longer than you can stay solvent.
Yes.
Oh, wow, that's a really good quote as well.
But it sounds so close to yours as well. Like the market can stay, you know, bullishly longer than you can buy in, you know, longer than you can actually pay for it. So it has a similar ring to it.
Actually, that's we're talking about it now. Do you think market is rational or irrational in general?
I
Big
don't
question.
think it's rational or irrational at all. I don't think it has the capability of thought. I think the ones behind the market, the ones that are the driving force behind it, are either rational or irrational. I think that rationality is based on statistics and data, and I think irrationality is subject to emotional thought. So maybe someone is reacting impulsively to a tweet that was sent out and all of a sudden wants to start selling a stock. Is that irrational? No, I don't think it's irrational. I think it's an emotional decision. Whereas the market itself is not a person, and I don't think it's got feelings. So, yeah.
I would say mostly rational, because I think the majority of the volume is going to be coming from rational decisions, and the people that are trading irrationally, like Richard described, are probably not responsible for very much of the volume, because these markets have so much money in them. A lot of that money is from few traders, and those few traders, to have so much money, you think that they will have gotten there by making quite rational decisions. So I'd say if it was a gradient, I'd say that the markets are mostly rational, which is why we can find patterns in them, but it's why those patterns maybe don't play out all the time.
Yes.
Big question, Anastasiia. What do you think?
I started reading about this a couple of days ago, actually. So that's very interesting thought, that how it's explained there, that market has moved. Basically, you know, for many years, people thought that the market is rational. They can describe it in numbers and algorithms and quote, like in mathematics. However, the market is moved by people's emotions, right? So people buy on stress, on hopes, on fears. They trade on fears, and if market is moved, I not necessarily agree with the fact that market is moved by those few who have lots of money. I think it's the opposite. The majority of the money statistically in the market, especially in US market, comes from retail traders. So that's just that's statistically sane. So if the majority of the market is coming from the retail traders, and retail traders are mostly irrational, which means that the market is irrational. So I don't, I think the market is mainly rational, basically, from my perspective. And that's why I think, there are no ways to make a trading system that is going to work 100% of the times, because it's not going to be, it's like, otherwise, if it would be fully rational, we would be able to describe it in a specific mathematical way that would continuously work.
If it was purely rational, yeah.
Yeah, if it would be purely rational.
Yeah.
I think Yeah, I agree with what you said, Richard, that the market is not obviously a person and it cannot be rational or irrational. But if you look at it from the perspective that the market is moved by people's emotions, we as humans are irrational. We mostly work on emotions, and this is why trading is super difficult. Work, it's difficult work, and because we make it difficult for ourselves.
Very much so. Very much so. Akram saying, I can confirm with trading DAX this morning, it is not rational. Trump make anything that way. I need a chill pill. Got cooked, by the way. Why? What happened on DAX?
What happened on DAX? I haven't looked at it for ages.
DAX was selling off.
Ah.
I mean, this looks like lovely price action to me, in my opinion.
It was just against him.
Yeah, it was just you were trying to buy, weren't you? You came into this area thinking that we were going to react off of it, Akram, didn't you? No, actually, I don't know. I don't know whether or not how your strategy works, but we had a bit of consolidation this morning. We had a very lovely break. We had what I call a drop-based drop. So if I just delete that, you can see this is on the 15-minute consolidation, break, a semblance of a retest, and then a continuation lower. So this to me is a drop after a reaction from a significant level. So you can consider this to be the significant level, the Tokyo high consolidation. We have a break, so this is the first drop. Then this over here is the base. It is the last attempt for price to try and break this initiation of a downward push, and then you have follow-up, and this is the follow-up. So it's drop, base, and then another drop. So DBD. And that's what we... And I love trading this. This would have been a trade that I would probably have taken either on this candle or the secondary candle for a sell. Now, I probably would not have traded DAX because I don't trade DAX, but the idea would still have been I would have looked for sells on this. Probably would have my stops just above that most recent swing point, and then either go for a 1-to-1 or a 1-to-2. But don't take this as how I exactly would have done it, because I don't trade DAX. But if I had to trade the same concepts that I would normally do, this is what I would have looked for. So yeah, I like this, Akram. This your horrible day is my, this is perfect price action. I see Akram did actually send a... Oh yeah, okay, now I get it.
Can you see his trade?
Yeah, he sent it on Discord. Yeah, he got cooked.
You've got to show us now, Richard. Expose Akram's trade to the Fivers live stream.
Yeah, no, it was in a DM, so it's a personal one. So, but suffice it to say, yeah. Sorry, Akram. What I can see right now, even though we do have this downward trend, basically, what we do have is we have a bit of a swing point here. Even though we have broken this most recent low, we've also at the same time broken and closed this recent high swing. But it is so bearish on today alone, just very, very, very bearish. But we are getting a bit of a break of this downward channel, so maybe we could have a bit of a retracement and then a push up. Maybe, just maybe.
I just want to say, because I love Wesley in chat. Every time he doesn't leave a comment very often, but when he does, it's just like a truth bomb or something very funny. And Wesley today, he said that he once heard a trader say, just because we gap does not mean we going back. And I think that's great.
That's
I
good.
love Wesley. He really makes me laugh. He just drops facts.
And
That's
Wesley is
so
a South African, by the way.
Is he? He's
Yeah.
so he's really made he's made me laugh the most out of everyone since I've been on this stream, like of the people watching, I think.
He's got some absolute golden nuggets. Like,
Yeah.
it must be a Cape Town thing, I
It's
think.
the fact that you just don't see him, and then he just comes in and summarizes the whole like 1 hour that I've been on the stream, like in a sentence, like so eloquently.
It just just straight to the point.
Yeah,
Very much
that's
so.
a skill.
Arjit is saying, laugh my backside off. The latter is right. The emotion matters, though. It does matter. Emotions matter. I'm not looking at it from the point of saying, oh, irrational versus rational. One is the right way, one is the wrong way. I'm viewing it more in the idea that each plays its role, and I don't think that the market itself can conform only to one. Everybody has emotions that they bring to the workplace, that they bring to the trading and whatnot, and there's always hope. There's always the idea of it's going to turn, but it's the idea of thinking that it's only the one or only the other is kind of like where I have the like the fence sitters approach, where I'm not on either one of the two sides. I'm kind of like walking on the fence, saying it's both, or it's neither. That kind of idea. Akram saying confidential. Rich and me and Rich have an NDA. That's true. Yeah, we have a non-disclosure agreement, so I can't tell you guys. We have Vidion. I'm just gonna call you Dion. What are those pink and blue zones that you have drawn? These are just sessions. So the pink one is Tokyo, the blue one is London, and then this orange one is New York for obvious reasons. It's just a normal sessions indicator. This one is market sessions by Leviathan, and then I have just the visual setup for the sessions. I just generally like having a visual representation, because I can have it out of the way, but then if I wanted to go and look at what was New York and what was London session yesterday, that kind of like thing, I want to make it a little bit faster for myself, instead of having to go like, okay, so the time is, okay, London starts at 10 o'clock, okay, so that's London, okay, that's the London Open. So it's just to simplify visually. Okay, this is what happened during Tokyo, great. What happened during London, great. Quickly see all of the information, and then so that I can have a little bit more mental energy to expend on actually taking the trade or actually doing my analysis, instead of having to go, okay, is this now the right time? Griff, you don't use sessions at all, and I don't think Anastasiia you do either, but I think Anastasiia you do like using the whole day or the previous day, or correct me if I'm wrong.
You mean when I trade or when I look at the...
When you do analysis.
When I do analysis, I use the overall chart.
Okay.
Also depends on the time frame, because if I look at the 5-minute time frame, for example, I'm gonna turn on my chart as well. It's just kicking it off sometimes because a lot of data. But I'm gonna wait. Move on.
We've got DJ in saying, greetings, highly esteemed Fivers team. Hope you're well. For me, the market is two elements. The buyers, rational or irrational, and sellers, rational or irrational. I mean, you're not wrong.
Fair enough.
Yeah.
I'm looking at the smaller time frames. Like when I'm looking at the high time frames and do my overall bias analysis, then I look at the old charts and I look at some elements for the specific trading period, like for example, monthly or weekly or contract like volumes. And if I look at the smaller time frames, like for example, 5 minutes or smaller, I look also at the volume distribution for the 4 hours. So this, for example, is 4 hours time frame in a period of time. So the last 4 hours, how that has been overall. So it depends. But for the chart, I'll use the whole chart in the terms of the candles, and that's what you are talking about.
We've got Shiv saying, hello guys, do you reveal your A+/best strategy to anyone? Because I don't reveal it. Is it normal or am I the only bad guy here? What do you think, Griff?
To be honest, the more people that trade my strategy, the more volume I have in my direction and the more likely I am to be right. So to be honest, I really don't mind. I think the market is so huge that it doesn't matter how many people are trading your strategy. It's very unlikely that it's going to influence the market much. So unless you don't want other people to succeed, I don't really see the harm in sharing it. I share all my everything myself, and I guess you both do as well.
And yourself, Anastasiia?
I completely don't mind, and the reason being is that there is a quote from one of the, I don't remember exactly who, Ray Dalio, I think I said that, or someone else, but they said basically that even if you write your rules of your most profitable system on the wall of the Wall Street, people will keep losing money anyway, because this thing is not in a strategy. I've seen this. I've taught thousands of people through the live streams and so on, and like academy that I was before and so on, and it doesn't matter. You can tell people whatever you want. You can try to simplify it however you want. Put it into steps. Put it into automatic systems. People will eventually, majority of people will keep losing money, not because of the system, but because people, like we as humans, most of the times cannot handle ourselves. And 90% of people, if not 99 at this point, come to trading because of flashy, Instagram reels where people believe that this is a space where you can make money fast without putting a lot of effort. So a majority of people are not looking for the system. They are not looking to learn. They are looking for something easy for you to tell them 1, 2, 3 steps, and this is how you find profitable setup 10 out of 10 or maybe 9 out of 10. So I don't mind sharing it. This is, finally I got the version on Mac of my trading platform that I use, because before I needed to run Windows and Mac to be able to share it. Now I have it, as you see. I completely don't mind. That's everything that I use on the daily basis. So what about you, Rich? What's your opinion on that?
So I'm a little... what Rich said, I'm probably going to give the fence sitter's answer here without actually giving an answer. What I tend to do is I already show everybody exactly how I trade. So every time I've marked up something, every time I've spoken about a trade, I have spoken about a trade that I've taken and discussed exactly what it is that I'm looking for. So in effect, I've already showed everybody exactly what I trade and how I trade. So it's not a secret, I think. The thing that I find is not replicatable is the psychology and not necessarily the risk either. So the way that I risk something is I can tell you, okay, I risk 0.25%, 0.5%, and how am I going to manage my risk? That is going to be a little bit different. How I view the market is going to be slightly different to everybody else. When I decide, it's following exactly what my plan is saying it should, but something feels off. I'm not going to trade this trade.
Yeah.
It's those things that you cannot convey to people. They will need to find that out for themselves. But I can give them my exact strategy, my entry criteria, all of the confluences that I use, the time frame, the risk, everything, and somebody's going to find a way to either not make money with it or break even with it.
I agree with this so much.
I feel it's that extra little bit that you can call the experience part. It's the thing of the trial and error. It's the give a man a fish, feed him for a day, teach a man to fish, and he'll feed himself for a lifetime. It's that idea. I can give you everything. What if it starts going wrong? What if it's no longer working? Do you know what you need to do in order to rectify or to adapt or to change? That comes from the experience that you go through on a day-to-day. So the strategy alone is just a portion of it.
It's why signals will never work, like signal services.
in general, I don't think signal services work in general.
Yeah.
Unless it's someone like an LJ or a Victor or an Anastasiia or, so one of the fivers, because I do trust in their ability to.
Yeah, but then the person,
analyze
I meant like the person copying the trades isn't immune from copying them themselves effectively, because they have to enter them manually, don't they? So they may experience doubts like, oh, I'm not going to copy this trade because the last one lost. That kind of mentality, There's so much that goes into it. Even if you have all the technicals down, the psychology is still the hardest thing for most people to grasp, and it's the most important thing.
I think copy trading only works if it automatically copies from your account to someone else's and you're a profitable trader, because then it copies all the trades with the same exact trades. Because I've seen it so many times that people eventually, they copy some trades and it goes really well, and the next one they're like, okay, you know what, it goes so good, I'm gonna put it all like 50% of my account because now I want to double it in the next trade because it goes amazing. And they don't understand that it's statistics and one of the trades is going to be eventually wrong. Then they go into revenge trading, even with a signal. So there's so much things. I completely agree with Griff on this too. I know people can lose their accounts, blow their accounts, even if you give them 8 out of 10 profitable trades. What to say about the systems that you have a low win rate and a high risk to reward? You know how to trade that. Like, for example, Griff knows how to trade that and how to be profitable on that. He has a mental capacity to be able to be in a drawdown for a couple of months and then get out of the drawdown. But people don't have this mental capacity, because majority of people, because it's difficult, it's not nice, it's not pleasant, it's bad emotions, it affects how they feel about themselves, about everything. So I also agree on that. But what you said very interestingly, that's amount of hours that you spend on the chart also determines how you view the chart. So it's about this too. So how they say 10,000 hours is a minimal that you need to spend on learning a skill. And I think nothing can replace the amount of hours that we've stared on the charts years after years. And this means some things that you just learn how to avoid. You just know that something is feeling off, even if the strategy is telling you otherwise. That's something that is almost impossible to teach. It's just something that people need to be able to put in the work and ready to put in this work to be able to figure this out themselves. So I think somewhere in the middle of all of this that we said is the truth about it.
Yeah. On that note, I've got to shoot off. It's the end of my hour. It was nice talking to you both, and thank you everyone that joined this conversation. I'll see you next week, everyone.
See you,
Griff.
Thank you, guys.
See you next week, mate.
See you. Bye.
Bye.
There's exactly what you were talking about now. There's a really, really good comment here from Buki saying people also have their invest profile, which follows their psychology because trading is personal and it puts you against the mirror. So it's very much that. Yes, you're a participant of this larger thing, but it's a bigger battle between yourself and yourself rather than yourself and the market. So I do like that comment. That is a pretty good one. Thanks for that one, Buki. Akram saying, any one of you, have you named your trading model? Genuinely curious. I know Akram or Void likes giving interesting names to his setups and whatnot. This is the Queen's Gambit, he's got like very interesting ways of like naming it. Do you, in any way, shape or form, Anastasiia, do you name your strategies? This is Anastasia's top one, whatever, name whatever you want to call it, strategy. This is my paddle +1 strategy. Do you give like a strange name to it, or do you just selling? I'm just putting a sell.
I have only one strategy, so I have no need for this. Just so I don't trade on multiple trading systems. I just have one system that I use again and again, and depending on the market conditions, sometimes I adjust it. But no, I don't necessarily haven't thought about this honestly. So.
I think it's like a very Akram thing. Thinking of, oh, I'm going to call this the Queen's Gambit because it reminds him of a chess move. I don't know. Or there's like a way that he views the market and I wouldn't say he gamifies it, but he makes references to either a game or to a chess move or something like that. Myself, I name it what I see it, or as I see it. I see a drop, I see it's making a bit of a base, and it's a drop, so I call it a drop-based drop. So it's just like a very, very uninspiring, very non-creative way of looking at it. It's just like, I'm seeing a drop, I'm seeing it's making a bit of a base, it's dropping again. Okay, cool, it's a drop-based drop.
Yeah. But you have multiple strategies, so do you call something? Like, do you give them different names?
No, I'm a very logical / rational, mathematical numbers person, and when it comes to creativity, it's probably going to be some very, like I explained, drop-based drop. It is self-explanatory. Where Akram is explaining Orion, 3 time frames alignment, the witchcraft is a mean reversion, heavenly resurrection is based on volume, and it's a chessboard based on the higher time frame analysis. I don't have like the creativity to go and name something like that. If I create a character's name in a game, it's like John or Peter, or it's names of people that I have interacted with in my life, and that's the character that I'm playing on my D&D game or something. So I don't have that creativity, unfortunately. I'm not the creative person. This is my wife. This is all of my wife's stuff. I'm the logical person. She's the creative person.
It's a shared responsibility. You have responsibility from the logical side. She is the creative one. That's good.
Yeah, I kind of look at it like you can't be great at everything, but you can be just okay. So I have some creativity, but it's not to this level.
Yeah. We all have our strengths, We all have our strengths and weaknesses, and also it depends on what are those things that you spend the most time on as well. What are the skills that you develop over the time again and again. So those, if you spend more time on learning how to be creative, I am pretty sure that most of these things can be learned as well. But maybe not to the degree of the people who are extremely talented and they're born with it, obviously, because everyone has their own strengths. But yeah, I'm pretty sure. But it depends on the time. What do we spend our time on?
Yeah, I mean, if you consider, you can learn how to draw.
Yeah.
If you sit every single day and you have a teacher, or you have a mentor of sorts, or even if it's just your own inspiration where you look at something and you try and replicate, you can teach yourself how to draw. But I feel like there's a difference between that person and the person that has like this natural talent that didn't need to spend hours upon hours learning that craft. They kind of like just grasp it very quickly, and then they build their experience on not on a framework of having to try really hard and put a lot of effort into it. They put less effort into it, and it just naturally comes out a lot more, I don't know, attractive, a lot more pretty or whatnot. So
yeah,
just call it final strat, then the next one final strat, final strat, and so on. That sounds like a graphic designer that has to send, I don't know, a logo to a client. The client comes back with feedback saying, "Oh, can you turn it green?" And then they'll change the file name from revision 1 final, and then they'll no, can you revise not this green, a different green? Okay, cool. Revision final, and then at the end of the day they have one that says final, really this is the final one, like a very long directory, like file name for their thing. So that's what that reminds me of. So Prometheus, are you a graphic designer of sorts, or have you ever done like graphic designing for anybody?
Final.
Yeah, it's the final, really, comma. It's the final one. This. And then they have like hundreds of those files. Just everyone it's the same thing instead of just replacing the previous one, because they won't do that because maybe the client wants them to go back to that original one and say, okay, you know what? Out of all of these changes, I actually like the first one the most. And they, okay, cool. We've here it is. There you go. Don't have to do extra input.
Rich, I will have to jump off because we are having another guest coming in. Our amazing trader, Victor. Hello.
Hello. How's everyone doing? How are you doing, Anastasiia, Rich, and everyone watching?
Doing amazing. I'm gonna leave you too. Thank you so much for today's live stream. I'm looking forward to be back on Thursday. Have a happy trading, and I'll see you back soon.
Thank you very much, Anastasiia. Good luck with that leg of yours. I hope it heals.
Thanks a lot. Thanks, Rich.
What happened?
Broke it on paddle tournament.
I'm sorry to hear that.
Demobilized for a couple of weeks. More time for learning and trading and reading, all of these good things.
I'm Anastasiia, you're gonna be so bored.
Oh yeah. Honestly, yeah. Okay, guys, thank you so much. I'll see you back soon.
Take care, Anastasiia. Hope you get better soon, very, very soon, and get back to your daily activities.
Thank you.
All right.
Vic, how are you, my friend?
Hey, Rich. I'm with an intact leg.
I'm very happy to hear that you are completely whole and not fractured in any way, shape, or form.
I said a intact leg, so the other one might still be broken. No, both of them are intact. Okay,
no, that's very good. You could have just turned around and you only have one leg, and that one is indeed intact.
That could be the case. No one has ever seen both legs of mine.
Very true. Very true. There's no evidence that supports the fact that Victor even has a lower body. We only see from here upwards.
Maybe I have no hips. Who knows?
Are you one of those Futurama just heads in the jar of liquid? I don't know if you know what Futurama is.
I don't know, but I do get the picture.
It's do you know The Simpsons?
Yes, I know that one. Yes,
yeah.
But I didn't know it. I didn't get a. If you said only Futurama, it would still not give me that picture. But I did get the idea of the hybrid or the person identity in a jar with only a few organs, which sounds very gruesome. Why are we talking about this?
So the creators of The Simpsons, Matt Groening, he also created another animation in the same style as The Simpsons called Futurama, and they're the presidents of our current time, maybe a few years past. They are all in these little green liquid containers. Just the head, but they're still alive. It's how technology has progressed. So all of the presidents in the Oval Office, they're all there giving their advice to the current president of Earth. In this case, it's now no longer just America.
That sounds difficult to navigate. I mean, politically.
They all do speak as though they've got like a little bubble, coming out of their mouth. It sounds as though they're a little bit underwater. It's a little muffled.
I see. I see. So they never get out of office? Do they become like permanent advisors for life? Not for life, for eternity, apparently?
Well, I think I don't know the logistics of it, but I think they are there for as long as they want to be. I don't know. But let's get back to the charts. Let's get back to the charts. Victor, I'm
not in a jar. Just to keep things clear, I'm not in a jar. I wasn't a president. I'm not a former president. And I don't know what the future holds, but I have no such plans.
Guys, if anybody would like Victor to become the president of any specific country, please put your votes in chat right now. V for Victor, for victory, for president, or it would have been better if it was V for vice president, but El Presidente, if you want. I wanted to ask Victor, have you been in any trades today?
I have a couple of scalps. I'm still jet lagged, and my hours are a bit off. So maybe you can see it on my puffy eyes and my on my lips, of course. Look at that. On my
I was
lips.
about
So,
to say your cheeks are not as rosy today, Victor. You're especially around the chin area. You're very pale today.
yes. I haven't shaven, as you can see. No, I'm just kidding. But I am jet lagged from that awesome trip, but still very long flight. So I have only been scalping because it takes less time, and I wanna deliver. I need to deliver high quality work when I'm doing my main strategy. So take moments like this, whenever I'm ill as well, I prefer to just step back than to just do it half good, have well.
Half-heartedly.
So, beg your pardon?
Half-heartedly.
Half-heartedly, yes.
Figure,
yes, indeed. Yes.
Mm.
So I prefer, quality above quantity. So I did get a couple of trades. I'm out of them already. They were EU shorts, scalps on, the expansion we had, a huge expansion early on the day. The market reaching a daily order block. I can talk about that later on or in a few seconds. And expecting that pullback to come in, which already did, and that was it. That was it. I took two trades basically on EU, 2 or 3 trades. I'm not sure.
Oh, on EU. Sorry, I thought you said
yes, EU.
Okay, so I'm assuming buys.
No, I went short. Both of them were shorts.
Oh, okay.
Yes.
Interesting.
No, but they're scalps. So I'm just looking at the expansion, the speed, the deceleration, and coming into a higher time frame structure. And I know I have a high probability that market will take a pause, retrace a little bit before either it retraces a lot more or pushes forward. So I know I can spot that, and that's where I get in and out, and whatever happens afterwards is okay.
Excellent. I've only had the singular trade this morning on a NAS. It was a sell. I'm actually a little gutted that I didn't go for a higher risk to reward. But yeah, like I don't want to live in hindsight, so I made my decision to take a 1-to-1. President Victor, there we go, Louis. You've got your first voter that votes for Victor for president.
We've got the and it's awesome to be the first one, Louis. I congratulating on joining this movement. This movement of 2, apparently.
Well, all you need is 2. 2 becomes 4, 4 becomes 8, and so on and so forth.
We're starting a fire right here, right now. All right, Rich.
Yes, sir.
We have a question by Peter Kiefschow, a very solid, regular viewer of ours, and I secretly, or maybe not so secretly anymore, admire our viewer who has been paying a lot of attention to how I trade and always has these, sharp questions that are, valid questions, good questions, deep questions, but also give away the fact that he knows how I trade in a deep sense. So I love that. Peter, is asking, let me put that on. I think there's an asterisk, so maybe there is it's a follow-up. Okay, so yes, it was a follow-up. So indeed, says EU swing idea on play already in. Price reached from the H4 bearish OB at the last line on the sand with a strong multi-time frame alignment, monthly, weekly, daily H2. Nice, nice, nice. This is my man. This is Peter is speaking my language. So I'm gonna be looking. Let me check here. I'm gonna put my screen on if that's okay with you, Rich.
You can
Hopefully,
do
I'm not
that.
interrupting your flow
Nope.
or analysis, whichever of them. Okay, so we are in what we're talking about. Let me go through the message. We do have a bearish order block on the monthly, the weekly. We don't have. We do have an order block here. Personally, I wouldn't trade that, so we don't have that in my opinion. There is a borderline. There is a borderline engulfing, and some people might take that as a bearish structure. Per my rules, I will not do that because it's it's not in enough price feeds, and it's not visible on the high number of price feeds. So I decide not to take it. But even if you do take it, it's I mean it's a borderline. So if you take it, if you do or don't take it, it's just a choice you have to make. The daily order block, we are coming back into a quasi. This is a quicker top-down analysis. Usually I go a bit more in depth, but this is quicker. Left shoulder, head, neckline. Both of these left shoulder, the left shoulder and the head, were reacting off of a daily order block on the daily, on the quasi. Right, there we go. And we are coming in. So this quasi, right, left shoulder, head, is within a quasi to the left. So we can understand why we had that reaction. Now the question is, the question to be asked or to be answered by price is, are we, we have both on both sides quasis, meaning the market is trying to go, is showing signs it wants to go up, because we have a quasi below here, very beautifully reacted upon the first order block, had a minor reaction, tradable, but still minor reaction, and a second one, very beautiful on the last order block, on the last entry order block, on that bullish reversal. And look at that impulsive move. When the price moves like this, that's like a confirmation that this reversal is at play, right? The stronger the move is, the more it says, not everyone, but enough people were seeing this reversal, and buyers did come in at the place they were supposed to confirm the pattern, right? To confirm that the pattern is at play, and that's exactly what happened. However, you have as good and as beautiful the reaction was on the buy side for this bullish reversal. You also have a even bigger reason for the sellers to come in at the current price and perhaps at a higher price if they failed the current one, which is the monthly order block. In my opinion, the weekly isn't there yet, but if not, you still have a daily order block that is still standing tall and strong, which is a bigger quasi, bigger than the bullish one we had. So it's still at limbo, both sides offering quite nice arguments in terms of technical analysis for the price to go in their way. Meaning, if price would keep on going higher, it would make sense, because we have, a nice bullish quasi that is reacting quite nicely. It would make a lot of sense. But so would if we had, for example, something like this happening, because you have the monthly, a beautiful left on the left side, a beautiful quasi, a secondary quasi or an internal quasi, which is inside the bigger one, head, left shoulder, neckline, that bigger quasi, and that smaller one that I just depicted here, all also making a lot of sense. So when the market is giving that, this is how I approach this. when the market is giving you reasons to go long from certain places, at the same time go short from other places, what I do is I try not to guess which side it's going to be, and I take both of them. So I would take the long from here if I had a signal, and take partials at logical places in the opposite direction structures. Meaning taking, that's where you see the macro target right here. That's where I would take either the whole position off, or I would take partials off of that at that point, and leave the rest for the remainder, just to see what happens. And I'll do the same with the sellers, right? So I'll take shorts if it is possible. Sam, we have. Hi, Sam. We're hearing all the details of the ASMR therapy that you're giving us with your.
Wow.
That's a very sensitive mic you have there, Sam.
It was funny though. Oh no. Victor has disconnected. Victor is reconnected.
Right, so are you guys able to hear me?
Yes, we can hear you, Victor. You kind of went quiet for a second, and then I think your stream restarted. But we can hear you.
Okay, let me double check here, because this happened yesterday as well. I thought I fixed this. Let me do some analysis. I beg your pardon?
It's been good until now.
Okay. All right. So maybe it's nothing. Maybe it's just a hiccup. And anyways, but what I would do, yes, going back to my train of thought and line of speech, what I would do in such a case is do both sides, right? Not taking a stance in this, if it's signaling from the correct level for a buyers, I would do that. And if it does that while I'm still holding that long, and if it's signaling from the sell side, I will take those as well. And since my trades are high risk reward ratios, it means it doesn't really matter which side eventually becomes the right one, right? Which direction the market actually goes. Because I would be taking a couple of longs with 1 to 5, 1 to 10, or whatever it is that the market is offering. And I'll do the same thing on the sell side. And whichever, in the end, what I will have is the average of 1 to maybe a couple of R's with the average of 1 to 5, 1 to 7, as I said, or even more. And the same thing on the sell side, meaning one side will get, I will get stopped out, or in this case, as I said, the TP half the position is already out, so I wouldn't be able to even lose on the one that eventually is not right. If price were to come back down, and let's say you already have half your position out, and since the risk reward ratio is higher multiple, that means that half would already put you in profit. So you'd be profitable in the move up. And if indeed it turns out that it turns around and goes the other way and you get stopped out, that's fine. You're already in profit. It means that you would be in profit on the buy side, as well as a lot of profits on the sell side, if it were to be, or vice versa, doesn't really matter. But you get the point. I take both of them, and that takes a lot of stress out of the way, because it doesn't depend on my choice whether which one I choose to trade. I just trade whatever the market signals. And in the end, price action is what I follow. And even it gives me mixed signals, I'll follow both signals and try to, profit on both of them if it allows me to. And if not, then it's just fine as well, because the higher risk reward multiple will cover the other side that wasn't the correct one. So that's basically the idea of how I would trade this. But coming back to what Peter was asking, or his question, I was going to, so I don't see the weekly alignment, but that's me and my specific rules, Peter. But if you do, that's fine. It's not wrong or anything. Monthly, weekly, the daily, yes. We are at the last line in the sand. Let me double check. Bearish price reacted from the H4 bearish OB. Let me go check to see which one you're talking about. Not sure which H4 bearish OB you're talking about. This is the H4. You posted this 15 minutes ago, so by then you had the same. All right, so probably you meant the last order block, which is this, which was stopping price. Indeed, I think that would be the one you referenced from, which has been broken. And the follow-up question or line is, there's a daily bullish OB below, which I'll use as TP. Okay, so you're looking to go short from probably from this area. If you're using that daily order block, this as the, let me go to the daily. Okay. You mean this order block as TP? The one that was created, the fresh one? If that is the case, let me know in the chat. Another confluence is the daily ATR is overextended at 150%, supporting a potential reversal. Yes, I see that. I agree. Where would you TP yourself? Okay, so as I mentioned, Peter, thank you for that in-depth question. I like that. Layered question. You have the as I explained, right? The bullish quasi. We had a beautiful reaction here. I'm still able to trade that, and I would trade that in advance intraday to get my trigger, even though if I have the H4 and lower time frames in alignment, I would be able to get in and drive this, right? Hold on and expand it, push it forward as a trade. Even if I didn't, when it comes back to this order block, I would be going long. At the same time, I would be going short because we have enough reasons to go short off of this a daily order block. And I'll mark all the structures, right? So you would have the, this would be the, let me double check here. Daily order block. This would be the, indeed, the order block to be, let me double check a couple of things here. So you have the daily ATR at 111, while the ATR is showing 54, meaning it's not 150%, but actually 200% now. Maybe when you posted it, it was a little less, although I don't think that. Maybe it's something else you meant. But it's 200%, meaning that price is very, very extended. Now, when price is very extended like this, it doesn't mean right away that price is going to go down. It can still hold up, even push further. But you can use price action to actually time that reversal. And we can go to the lower time frames to see if that reversal already happened. But this is exactly why I started shorting and scalp shorting it, because of this order block. Price came in, touched the upper border, and had a nice reaction that you could see coming from a mile. See that daily, that not daily, but the hourly engulfing. That's exactly what I was scalping.
Hello,
Going
guys.
back to the question.
Now it's
hey,
good.
Sam. Yes, it is better. We enjoy the ASMR session. I'll relax now.
It's a new experience. I don't know what it was about. I was just setting up my microphone.
Is that what you were doing? We thought that you were, building a new desk for yourself.
I was just, grabbing my laptop here and there.
Victor,
yes.
Sam, while I have a quick little gap, I'm going to love and leave you guys. Happy to see that Samir is also here with you right now. So I don't want to take up too much of your time. Guys in chat, if you have not already, please drop us a like, please drop us a subscribe. It really helps the channel first and foremost. And secondly, if we reach 100k subscribers, then we're going to have quite the spectacular giveaway. Maybe it's going to be aligned with the 10-year anniversary one. I don't know. I just work here. But if you want to see whether or not that's going to happen, you need to get us to 100k subscribers. So share this stream with everybody that you know, even if it is somebody that is not interested in trading. Get them interested in trading. Victor, Samir, I'm going to see you guys tomorrow. So you guys must have a great trading day. Do trade safely. There is one question from Ziku that's asking, can we trade tomorrow? It's a WEF annual meeting. It's an entire day, high impact news as per Forex Factory. I'll leave that question to you guys, then you can answer that one. All right, guys, that's me. I'm out. Cheers. Bye.
Take care, Rich. Bye-bye. We'll see you tomorrow, Rich. I will finish the question by Peter. So assuming, let me go check and bring up the question. It was around here. The the bullish order block that you're referring as a TP is the last one that I would take. It is a valid one if you're considering this to be a entry order block on. Let me mark that. Hold on. Yes. So the current let me hold on. What's happening here? We just had that impulsive move. I thought so. I thought market is very, very impulsive. That was the Open, US Open, most likely. Yes. Or not even. No, not even. It's not open yet. Sam, you trading
Yeah, we
NAS.
still have 1 hour, yeah.
Still 1 hour to go. So
time, yeah. Yeah.
what is this spike? Do we have some news release that I missed?
It is on the 1 minute.
It is on the 1 minute.
So let's see my chart.
I'm checking. I'm checking there is no news as far as
Last
I
100,
know.
yeah, there is no news.
Okay, so I'm not sure
This
why
is
that
$0.
was. Yes, it is euro dollar. That was
Okay, yeah.
That's a wild move right there. As soon we were
Wow, what is this?
not that's like a 40 pip move going from one order block from the daily to the next one. We talked about Peter. We just talking that the market, even though the market, when we were talking, the market was the high of the day, was the top of this order block. But we can see how beautiful. Actually, this is a beautiful testament of order blocks. Why do I say that? I know it's coming
There is
from
some news on Forex Factory. If you just go to the news tab, there is Danish pension fund, something like this. So maybe that is the reason it is in red folder. I think that is the reason, because that is the only information that.
Oh, Danish pension fund. Okay, to exit U.S. Treasuries. Okay, I see that, but that was 1 hour and 2 minutes ago. Okay, so that
my terminal is showing 2 minutes ago.
Really? Okay, I'm not
let me
sure, but
refresh it. Yeah, it's 2 minutes ago. My terminal is showing. Yeah.
Okay, let me.
Let's see what you're saying, Danish. Okay. I'm not seeing the calendar option. I'm seeing the news one.
I understand. I'm gonna share it. Let me check here. Okay, so maybe.
Now it's 3 minutes ago. Yeah, mine is. Yeah, it's good, I think.
All right, so you're totally fine. There was something wrong with my time. I'm gonna share it for the viewers. Probably that's what happened. Danish pension fund exiting U.S. Treasuries. That's what most likely made the reaction we're seeing on EU. And whatever the reason is, and that's probably what happened here. Whatever the reason is for that move, it's actually still. I know it's coming from OB Victor, but the nice thing about this, look at this. I mean, when price goes before the news came out, price was that was the high of the day, right? The price wasn't ready to go to the next level, and it topped at the ceiling of the supply zone, which is the daily order block that is highlighted by that what is it, brown kind of a shaded rectangle. And as soon as the market moves pushing forward, look at what the market does, right? So before, you can see it here, the market goes on the 1 minute, reacts very precisely, surgically almost, and off of that ceiling, right? Once there's news coming in, everything changes. This ceiling is no longer relevant. The market automatically looks for the next level, right? This is what I trade when we refer to supply and demand, right? Whether you use order blocks or not, or just other ways to highlight your supply and demand, this is exactly what happens. The only thing is, this happened in 3 minutes. You have one ceiling that was previously the resistance, right? The top of that supply, and then the market, something changes in the market, right? News comes out, and that level is no longer relevant. Price goes through it, and what is the next level that market participants are going to be reacting off? The next demand zone in the same time frame, the same context that we had before. Because we were reacting off a daily upper border of that order block, the next logical place that will have a reaction would be the next daily order block, which is quite close by. And that's exactly what we saw. This is the 1 minute, and it's actually beautiful to see how the market, this is not coincidence, right? Why does it that it spiked is because of the news, but why did it react coming back from that level? That's because of those order blocks. As simple as that. That's how I interpret that, and it's beautiful to look at the market doing acting this way very beautifully. All right, so coming back to Peter's question, Peter was asking me what would I be TPing if I'm going to be going short this order block. Peter, let's take a look. Yeah, if considering, there's a couple of things. One thing is that the left shoulder, even though I have here as a daily neckline, and it is a daily neckline, right? You can see it clearly. However, I do have some of my reservations with this quasi because of the impulse, right? The speed at which, and the aggressiveness at which, or the lack of thereof, of the sellers coming in and showing that they're taking control. They did, but not the way that I would like. If you still consider this a quasi, and it is a quasi, but if you're going to trade it from quasi, then, well, now we have more information. But I would say is look for the alignment. Look for, if you're trading a daily order block, a daily supply zone, wait for the H4 to actually convert and transform, or switches back to bearish order flow, the H floor, or at least something on the H1. And if you go to the lower time frames, you can see that the H4 is definitely not ready to go lower. The H2 not ready yet. The H1, we had the first indication of possible sellers coming in with that engulfing, but how did it react off of the order block that was created? Didn't really do a great job in containing price. So I would say that price is not, even though it is expanded, and I'm there with you, It's 200% the ATR, the usual ATR. So I can totally get on that bandwagon to go short, but the only thing is the timing. To me, the time frames, the hourlies need to actually show us and start. They started with creating this the order block right here, but the next step they need to do is they need to react to it and not close above it, right? Not in invalidating it. And by the looks of price action after this news, probably you already changed mind as well already, but you can see that the order block that we're talking about isn't exactly the area that the market is reacting off, right? Bearishly, right? The level is not that order block, but the daily order block we have above, which on the second time, let me take this off. This order block, that's the now. I know things have caught up with us. Before it was indeed the order block on the H1, but ideally you want that order block to have been reacted upon successfully to take your short, and then TP, we could be looking for TPs on H4, H1. To answer your question, if you are now or later going to be in a short and you're looking to short this move because it's overextended, and it is, I would still wait for the timing. But when you do get the signal, you had the transition from bullish order flow to bearish order flow, you can then start looking for the daily order block all the way down here. That's a bit of a stretch. Why do I say that? Because it makes sense, but that's the last target you want to have, because this push can still have another push, and we don't. That's difficult to assess in advance, because we could be looking for something that is, may or may not react to this order block alone. You want to see it happening first, and then you can short. That's one thing. So I would be a little bit less ambitious with the target and start looking for something on a lower time frame, not the daily as the TP, but perhaps the H4 or even the H1, meaning you would be targeting perhaps this order block and take either the whole position off or take a partial off of that level, right? And targeting something like that, which is much more sensitive and more likely to be hit. Even if the market continues to go up eventually, that level is higher likely, has a higher probability of being used on its path going forward, going upwards, something like that, right? Let's say it did do that. In this case, it already went to the next level, so likely it would need something higher if it's going to go higher, to target, right? So I hope that helps you, Peter. To recap, I would wait for the bearish structures to be created and then start looking for the direction. I like it, but I want the market to confirm that it's getting ready for that retracement, which is not really there yet. We have how many minutes for this close? 11 minutes, so we can actually see if it's going to close above this level and invalidate or not the H1 order block, right? So we can look at it and watch if we're holding that line or not. Maybe that was everything we're going to be seeing today as the high, but we'll have to wait. One of the line in the sand for at least the next line is whether or not we can close on the hourlies above this level. To me, that's going to be the first sign. If we can, then we're likely to be, perhaps retesting that level again. And if we can, that could be the first reaction, the first ideas of the first indication that price does not want to, has put in the high of the day and is likely to be, drifting lower coming hours. Sam, do we have some questions
Vic,
here?
let's go.
How are you doing, my friend?
I'm good. What about you?
I'm a little bit jet lagged, maybe a little more than a bit, but I'm doing fine. I'm
Yeah, I see
happy.
you are in your usual setup now.
Yes, yes.
How was your trip?
Um, great, great. 5 weeks and a couple of days of traveling
5 weeks.
is awesome. It's long though, but it's I enjoy every bit of it. Um,
That's amazing, actually.
yes,
So you was
you know,
analyzing Euro USD. So you're looking for buys on this one. I know it is a waiting game, but what is your general bias on this one?
say that again.
I mean, what you are looking at Euro USD? What is your general bias? Maybe for a long term, or if you wanna call it a mid term, or maybe intraday.
Sure,
I know you was
sure,
doing
sure.
analysis. Maybe you can
Yes,
just yeah.
yeah. Let me go back and start from where we are currently on the higher time frames. We are actually in a supply zone on the monthly time frame.
Okay.
So I'm eager to look for the weekly alignment, but in my
Yeah,
book,
yeah.
that weekly alignment isn't there yet, because this engulfing or almost engulfing isn't a valid order block. Does not create. It's not an engulfing to me. It's a borderline, but it's not. That's why I the the weekly and these order blocks to the left are no longer fresh, right? Not fresh enough for me. So I would not only they're not fresh, they're it's the second retest of them, right? So the monthly reason for me to look for a further alignment and to go short isn't exactly there yet. So I'll have to wait for that to happen, or simply I'll just be waiting. And on the
All right.
buy side, I do have not on buy side, on the daily time frame, I have two quasis on both sides. One is this order block right here, and that's for the short. And we did have a beautiful, beautiful reaction off of the second bearish quasi, bullish quasi, which is this. So this is the left shoulder, the neckline, the head breaks all the way up and comes back. Had a minor reaction here, but eventually reacted upon the second one, right? And so to me, because we have a quasi as well, a short within a bigger one, it's kind of tricky, right? I didn't get a signal here, but I could have traded that short. I didn't get a signal, but we went already to the next level. So to me, for the sell, the levels we need to be watching is this is no longer relevant. Okay, the market already reacted upon this. This is the one that we need to be watching. So I would be taking a short from this level today for
Okay.
sure. Or it doesn't have to be there to get the entry, but I mean the structure needs to be created taking that into account. And we have a much bigger, much higher, much bigger quasi to the left, which gives us the area above. So those are the two areas for me to be looking for a short, but we cannot be trying to short a move like we have right now, because the market has been very, very bullish. Look at that awesome move. We are 200% ATR. Yes, at some point it's going to come back, but until then it can keep on pushing even further. I mean, the reasons, it's the EU-US trade war,
Yeah,
basically,
yeah.
that is unfolding in front of us. That's huge. That's a huge thing. So this move may not be everything we have coming at us. So, but I would be interested in taking, well, break. The proper way to do this would be to look for the H4 and wait for the H4 to tell you the signal, right? Meaning, wait for the H4 to start creating bearish order block on that daily time frame. And yes, you can see that there is an H4 here. However, I believe that quasi has already been it's too big of a structure. Let me double check that. That would be right here. We have one. Actually, this would be the first one. second one, third one. This is the one, third, and the last one. Okay, so we do have a quasi on the H4, but it's not a great one because okay, so this one is no longer relevant because it already touched the second one. All right, so actually you do have, Peter might be even, Peter is keen. I like that, Peter. There is that H4 order block that these are the two areas, and both of them are in the respective daily structures. So I like that a lot. We have the alignment. You automatically have the alignment already there. You have the two daily areas of interest with their respective H4 levels to be used by price. So we are already in one. What I then want, I want to see the H2 or H1 create a bearish structure while interacting with these levels. So it's already touched it. So maybe we can let me mark it. Right, so it's going to be this level.
So you're looking for shorts if, of course, we
Yes.
shifted the market structure to the downside.
Yes, yes, but it not right now. I needed to actually transform. I need to transition it to transition. So it may take a day or even two to do so, and it may not even do that. So, but my since we're getting into that supply zone on the daily, I'm looking to short. If the market is transitioning, I want to be on the short side. No longer this order block. This to me is no longer relevant. Same as the daily order block. Those are gone in terms of the. Let me take away this. All right. So let's take a look. What can we say? Do we have any indication yet? Nothing, right? We do have the daily, the H1, but it's not interacting with the level that I just indicated. So we'll still have to wait. It's too early to be looking for that short, but I'm very keen on shorting this level, right? So right here, I mean, somehow my back doesn't move back my objects, which is kind of annoying. So here, this is the area that I'm looking for to go short.
All right, makes sense.
To see if the market wants to short from that level, not go lower from that level. But if I get that, I would be going for the first trouble area, which would be based on the H1, not the H4 or the daily, but the H1. And then if we have a transitioning from H1, H2, H4 in the same direction, then I can extend it if it hasn't been hit yet for a daily target or something bigger, in any case an H4 or maybe the pattern on the quasi. I'm gonna be moving the target we had before. I'm gonna be taking away because we hit that target already, just to keep things clean. Let me take that away as well. And what are you looking, Sam?
I'm just seeing as you was analyzing Euro USD. I was also on the Euro USD. I was on the weekly time frame, and I was trying to figure out what buys I have if I would have if I wanted to get involved in this pair. You can maybe share. I can share my screen. Let's do the analysis with our viewers. What I see, I haven't really seen it. I'm just seeing it right now. Now you will see how I analyze the charts. This is my fresh look on the Euro USD. I don't trade this pair a lot, but let's see on the weekly time frame. This I would normally do if I have no clue what the price is doing. Right now I have no clue, so I have to take the previous data in consideration. So previous data we have right now, I can see here there is a small fair value gap. Let's go to the monthly first if we do have any areas that we can deal with. Oh yes, this is a really good supply area that potentially can take Euro USD to the downside. If we have marked this is a monthly supply, and if I go on the smaller time frame, then yeah, let's go to the weekly. Now we have the monthly supply. Right now we are moving higher. On the weekly we are making higher highs. As you can see, this was the last kind of resistance area, which price is kind of using as a support. So right now we are in a consolidation phase. As you can see, this was impulse to me and this is consolidation to me on the weekly time frame. Now if we go to the daily time frame, let's see what daily is trying to do. As 200 EMA is to the upside on the daily time frame, which indicates price somehow is showing more, price is kind of bullish, in short, in simple words. So if I draw some trend lines here and there, this is the trend line we are having, and as price failed to touch it, so I think it is gonna fly like this only. But if we even liquidate this move, still I am looking this pair as at least till here. So I am bullish at least till here, or maybe at least till here. This is a very good area which was never tested, this area. Maybe price can test this area and can fall and can liquidate this trend line. That analysis is also valid. And how will you know? We have to shift to the smaller time frame and we have to see if the market structure is shifting. Let's say if you want to sell this area, you cannot sell it blindly. If we go to the 1 hour, wait for the market to shift in your favor, let it come here and let it show you sellers are stepping in, and then of course it is gonna give you some kind of pullback, and then you can get involved in that area. Or if you are a breakout trader, then you can trade a breakout. If you're a trendline trader, you can trade a trendline. I myself am a trendline trader, and support resistance here and there I follow. So this is a general bias on euro USD. On the other hand, if we, let's give you some intraday bias. Let me delete everything. I'm gonna erase this tool that I have here, as I am bullish at least till that area, so we can also take advantage of longs. So if we go to the 4 hour, let's draw some areas. Okay, we have this area. Right now I'm seeing this area and we have a fair value gap also. I would like to see if price kind of give me a pattern here. What kind of pattern can be a consolidation or a correction pattern? Then I can take a trendline break on that. That will be wonderful on euro USD. And of course, if we just fell to the downside, and then you might can take this low as your target, and then of course the same thing, you just wait for some pattern and trendline breakout and then just take the advantage of shorts. But right now pattern to the upside looks good, as we are having good bullish momentum. So I like to be with the current market structure, which is bullish to me. This leg I'm talking about, this leg was bearish. Now I don't see the previous legs. Right now this leg is having more momentum to the upside, so definitely looking for a bias will be good. And if I talk about gold, as many people are interested in gold is at all-time highs. Look at this, it also did the same thing, impulse correction. Now we are breaking out. Definitely you are, this is an impulse right now. Right now you cannot really get involved in between of this impulse. So it's an impulsive phase. Let the impulsive phase cool down, and similar to something like this corrective phase, and then you again can get involved in bias, because right now we're on a very strong trend again. So I think you should always stick with the trend, as there is 70% chance that that trade can go in your favor if you are trading in that particular trend which the price is in. Right now we are in a bullish trend, so there is 70% chance if you just take longs here, you will win. So let's talk about indices also. Okay, NAS 100, we have this support, and I have two areas right here. I am interested in buys today. Why? Because I want to see a gap fill of this area. So how will I get involved in buys right here? Let's analyze on the 1 minute, because I draw my patterns on the 1 minute. So let's see. On the 1 minute, I will just see some kind of impulse move, and then a kind of a correction. Then I will be taking a break out of this area. So this is very simple bias that I have. So yeah, I trade very simple concepts: impulse corrections, trend lines, some areas to just you know, have some pause areas. I have this can be a pause area, as you can see. So I like to trade until this area. I don't want to trade in the pause area. Of course, I have to wait. If it gets to the pause area, then of course we can wait for another. Then I have to wait for a confirmation. And what my confirmation is, this simple trend line breakout, some consolidation patterns, that's it. And yeah, that's what I'm looking for, these pairs. Gold, don't get involved in it right now because it's in the middle. It's in the impulsive phase. And right now I think you should not touch gold. If you was about to trade it, you might could have traded this trend line breakout. As you can see, this candle was your entry. Here might be your stop loss. So right now we are in the impulsive phase. Don't get involved in it. I don't like this price action on gold. I would like a deeper pullback here, and then at least till these areas, and then of course buyers stepping in. How will you know buyers are stepping in? Impulses, you will see some impulses, and where you can get involved in the trade, just wait for some kind of pullbacks, and there you can get involved in the trade. So that's how I do analysis on charts. I don't like this area to get involved in gold. So even if I use my liquidity strategy, let's talk about it. We just broke this area. If we go to the 1 minute, let's see what kind of FVG's price is printing. So this is the first fair value gap. Price close below it. I would like to see another run to the upside. And if there is another fair value gap and price close below it, then maybe you can plan for shorts for 1 to 2. This was the strategy that I was using probably 2 months ago. And this strategy works. So maybe this session, this strategy can give you good moves. Let's see how it develops. We'll wait for some time, probably 20 minutes. What's the time right now? Let's see. Yeah, it is 7:30. Yeah, let's wait for the NYSE open. Then only we can have some real momentum. As I like to trade indices, I like this consolidation, but I want it to break to the upside and then give me another consolidation so that I can get confidence that yes, buyers are stepping in. Now maybe there is a pullback and more buyers can step in. And how will I know? Just simple corrections, that's it. Impulse correction, that's it. All right, let's see if anyone has to somebody saying GBP USD shorts. Yeah, you just pinned that. Let's see if what GBP USD trying to do. Let's go to the daily time frame. Okay, I don't want to look at these price action. I just want to focus on the current price action which we are having right now. Let me bring this to the upside. Okay, we just broke this kind of trend channel which was to the downside, and we have a very good momentum to the upside. If you go to the 2 hour, we have a very good leg right here. If I draw my Fibonacci, I do like this leg, so I might can use Fibonacci today on this one. I want to use the 70%. Okay, so I think this is the area which is good for longs on this pair. Let me erase everything. This 618 and 50. Yeah, I want to go long here. I mean, I don't trade Forex, so I'm not trading this. But for the sake of analysis, I would have got involved in this trade if we test this area. I would have placed my limit order right here. And let's see what we can target. We have a psychological level which is 1.35. This can be the target. So this is the, let's see. Yeah, I like this trade. GBP USD, simple. I'm just taking the current information. I'm just using the current information which we have, which is showing we are having impulse to the upside. And I just want to use that information in my advantage, which is I'm planning for buys. So yeah, let's see.
I'm gonna be right back, Samir, if that is okay with you.
Yeah, it's fine.
We'll be right back.
Greeting highly estimated Fibers host Victor and Samir. Hope you are well. Yeah, thank you for saying that. DJ, hope you are well too. And yeah, the spike is also on gold. Yeah, it was some kind of news as we mentioned in the stream. But I like this GBP USD trade. So if your analysis, there is some, I think, some lot of disturbance here in my area. Anyways, I might can shift here and there. Let's see. But anyways, we just having good price action on GBP USD. If your analysis is correlating with this analysis that I did for you guys, then maybe you can take advantage of this and you can use this as a confirmation that okay, this person analysis is also the same as mine. So I'm not seeing the charts in different way. So yeah, you can use this information. And guys, if you haven't smashed the like button yet, just smash it. We are almost close to 200 likes. Let's go, guys. Let's do the 200 likes. And yeah, I think we are almost, yeah, we are also close to 100k mark. Once we reach that, there is gonna be a big giveaway for you guys. So make sure you are tuned in a live stream and you are part of our community. And if you are not a part of community, what are you waiting for? Just be a part of community. All these things are for free for you guys. We have Discord community, and for Indian people we have Telegram community also. So if you want to be a part of it, so it's free actually. You get value there, you get information. If you have any question, you can ask. So yeah, you can join it. Let's take some questions from the chat. GBP USD short, as I have already covered that thing. So 30-minute breaking structure for NYSE, maybe on EU. Tubakur is a regular viewer. It's really good. Let's see, it was on EU, right? Let's see. Our host Victor has broken down EU in a very detailed manner, so I hope you listen to it carefully. But my bias, I don't like this impulse where I'm gonna place a trade. I don't like these areas. Look at these areas are like consolidations. I don't know if it is gonna break to the upside with the impulse. Instead of this, I would focus on GU today. I like this area. Yeah, I like this. Oh, we have Victor is back.
Yes, I'm back indeed. Checking. The market is reacting. The initial reaction we had on the daily order block, on the one we talked about after the spike, after the news on the Danish pension fund decision to sell some treasuries. The reaction is still at play. I'm gonna show my chart so you guys see what I'm talking about. The market is on. This is the spike. Let me go with on the 1 minute. That is the spike, of course, of the news right there. And if we look at the daily order block, it went nicely to the next structure, the next level, which is the order block. That's where it went to. That's where it was stopped in its track. So it seems now. And now we're talking, because we were talking, Peter, for those who are listening, Peter, you mentioned, right, you want to be, and I'm looking for that short as well. We want to be looking, we want to wait for the H4, and the H4 will be the last one. We want to see the H1, the H2 start creating bearish structures, and them at least being respected, and hopefully also being used as impulsive moves. And we have one bearish order block on the H1 that was created and was respected, although it hasn't done a nice job in holding price back, but it's still there. I mean, it was created and it held. And on the 2 hour, there's nothing to see. There's a big pin bar with a small body, but it's on the H4 that my eyes. Now we still have 3 hours and 45 minutes to go before this order block is then created, but that would be my next step. Until this is closed, I have nothing to do. So as you can see, even though I'm excited to go short, excited may not be the right word, even though I'm very interested and curious to go short, the trade plan tells me I need to wait for the next level, the next time frame to level to align with the idea I have, and that's the H4. And I still need to wait 3 hours and 40 some seconds, 45, as you can see on the chart, before I can build my case, build my setup, and actually execute it eventually. That means that maybe it will not happen today anymore. Maybe it'll be something of tomorrow, and that's fine. And that's the importance of having a trade plan, because it will keep you in check, that you do not get ahead of yourself. You see a setup coming, but there's a time, a moment to get in, and it's not when you are excited or want, when you the first time you see it and you think about it. It's when the time is right, when everything is aligned, confluence, time frame alignment, and structures transition, and then you get your trigger. That's not here yet, but it's looking good. I mean, it's showing a nice pin bar on the H4, and it's too early. It's only 50 minutes into this H4 candle, but it's showing right now a possible reversal. So what I would be then watching this here, to then go back and then perhaps take my short from there, and who knows how far that could be. But that's only me, the reversal the reversal trader in me talking. We'll have to wait for the actual move. And let's look at GU. Some people were talking about GU. Samir, you broke that down a little bit. You saw some opportunities.
Yeah, GU was
Let me take a
better
look from
than EU.
Let's take a look. We have a GU also reacting off of the monthly time frame, which is a bearish fresh order block. The GU has an almost that's a nice place. The opportunity you're looking for, GU, was that short or not? I think you're muted.
I'm sorry, I was muted. I was looking at longs on GU.
Okay.
Just want to catch this particular leg that we have. I think
perfect.
we can get one push. Yeah.
No problem. Yes, I see. All right, so we have the daily. The weekly doesn't have alignment the same way as it is with EU. So both of them do not have the weekly alignment, at least not for me. There is a structure there, but it has already been. We have been already retesting. It has been squeezed. It's no longer fresh, by the way, in my book. So the daily order block, we only have one structure. This is the quasi. Right, that's the quasi. And we only have one structure, and that structure is not above the 50% retracement, meaning this looks weak for a bearish reversal. Weak for a bearish reversal actually opens the door for a move up, right? Because the reversal is not lining up nicely to have a high probability. This order block will have its effect, but it's not above the 50% retracement, and there's nothing else to stop price. So that tells me that there isn't it's still fresh and we can still trade it, although you need to watch out, because look at that squeeze. You need to make sure that the market actually tells you that it wants to reverse before you go short this. I'm looking for short, yes. Why? Because of that supply zone that is being actually not reacting too well. But that's the for me to take a long, price would have to come back to some area of demand. Which, do we have this one already in place? No, we don't have that. See, the 50% of the order block is above the 50% retracement, so that means that this is just a regular order block, but not an entry order block on the quasi. So I have nothing here to trade on. No alignment for a bearish sign based on this order block, and nothing on the bigger quasi above us as well. And to be fair, my daily structure to go long would be way lower. So That's the way I trade. I wait for the market to actually go to these extremes to take the trade. So I would be looking for longs here, right, on the lower time frames, and I'll be still be looking for shorts here because of this daily order block hasn't been invalidated yet. Price has come back into it after being squeezed, plus it's still fresh. For all of those things tells me that, you know, this hasn't been discarded yet, and until then I'm gonna be looking for reasons for alignment. And if I go here, price action is telling me it is at all not interested in creating reversal patterns, right? So there's nothing for me to do on the sell side. On GU, if anything, I would be looking for longs here, right? This is with the daily alignment, but for an intraday move, I would be looking for longs from this level. Let's take a look if we can find areas. Yes, actually, there's a nice little H2 here. It's not in alignment, but there is a little slither there, which then, if touched, that allows me to take the trade. Right, so we have this and this right here. If this line is touched, then I would be looking for a long from that level, right? That's the that's the level. H1, actually H1 does not have anything. That's not a quasi. So I'm left with only that level, the one that I just indicated to be trading. We'll have to see. We'll have to see if the market is... I don't think it will, but who knows? Maybe we can have that reaction. Let me mark this with a fib tool. Market is making some great moves today. 1, 2, 3. No, this is too big of a structure for the 5 minute. So that leaves us with the market just needing to reach this level. Let's put an alert. Reaches it, then we can take it long from that level. If and when the market reverses with triggers and bells and whistles as it should do. Going back to EU. Let me take a look. We have a question here by Nico Nexus SG. Smart money concept. I wouldn't say so. I mean, order blocks is discussed in smart money as well as in ICT. But no, I wouldn't say it's. What I'm using is quasis and order block. Quasis to indicate the transition from short to long, meaning the reversals, and order blocks to indicate with more precision where the market wanted to go one direction, where one side took control, basically, right? So if you have multiple levels and you can see in advance that the market is reacting off of these order blocks, right? You can go lower time frames and spot the reversals that are happening. Let me move this back because, right? And that's what I use. So order blocks and quasis, both of them are indicating supply and demand. Quasi is the way to get in because it tells you in advance with a high degree of precision and accuracy where you can enter and if or not the market is building up its case to transition and reverse from one direction to the other. That's what I use in multiple time frames. The name of the strategy, I haven't put a name on it. It's it's a personal combination of using these two concepts. Thank you for your question. We start every day. We should check let me check. Sam, what is the GMT time we start every day? Do you know?
I think it is 11:30 maybe.
11:30. That is your. Let me double check before we
11:30 a.m. Yeah, let's see.
GMT. Let me double check that since I'm not in GMT. Let's double check that. Maybe Sam is gonna check that in the background. In the meanwhile, I'm gonna
I'm
look
just
at
working on it.
on EU. We have the reaction of daily. That's a beautiful reaction we had. The market is still playing with that, showing us a possible engulfing being created. We still have a lot of time, so it's not something you want to be um, waiting for too long. The market so far, though, on the 2 hour, and you'll see it on the 1 hour as well, is creating higher lows. So it's still looking strong for continuing to push higher. So we'll have to see. There's a nice reaction. There was a nice reaction on the H1 base of this, although that wick is a little bit concerning. But it's still holding up and making higher lows. You can see it clearly. Look at those higher lows, meaning that the market is not ready yet for a breakdown. And it's not too crazy because look at that impulse. That's a very strong impulse. You wouldn't expect the reversal to come in just like that, a V shape, as easily. Sometimes it does, but not a lot. Someone wants us to check EuroCAD. I like the request. Thank you very much, Divanti Hassan.
The live stream was at 11:30 GMT plus 2. I
Okay.
just checked the WhatsApp. Yeah.
11:30 GMT plus 2. That means 9:30 GMT. So it starts from 9:30 GMT, and we go until 3 o'clock GMT. 9:30 to 3 o'clock GMT. Yeah. So that's the. There we go. Let me check.
I have an issue with finding the correct order blocks. Did you cover this question?
No, I haven't yet. We'll take a look at it right away. Nico Nexus, let's take a look, is asking, you're having an issue with finding the correct order blocks. What the issue was, I think I was looking in wrong time frame. Can you explain about order blocks? No problem at all, my friend. Thank you for the question. Okay, so first of all, let me explain a couple of things. The order blocks when I talk about order blocks, they are not the ones that are, the typical order blocks that are discussed in, other places like ICT or SMC. What I use is a bit more simple, and I did that deliberately. I defined my order blocks by, let's take a look here, because the price is reacting nicely. I like that wick while I'm talking and being distracted by price action. No, but the order block that I use, the definition that I use is two things: engulfings and outside bars. Very, very simple. Very, very simple. What I do is, and that's it, right? So I'm not looking for that impulsive move, the last candle in the opposite direction, which is the other more popular definition. I deliberately chose not to do that to keep things more objective and easier, faster, more efficient, and simpler. So so this would be an example of the engulfing, which is which creates one of the definition of the order block. And what I do is I look for the area, right, that starts from the open of bar number 1, which is this one, and the lowest low of those two, and that creates the order block. That's it. And if you do this from higher time frames all the way, you don't have to go from the monthly, but I do from the monthly all the way to the lower time frame, and let's say to the hours, you can build your case and understanding where the demand zones are. And you can one of the things that I use as well, because if you mark all these order blocks and you just leave them for eternity, your chart is going to be all over the place. You won't be able to see price anymore. But what you have to do is You only want the fresh order blocks, one, meaning until they are 10 candles old, you still want to be using them, and afterwards they're no longer useful as reactions for demand zone, right? They're too far back in the past for people to react to them. They're not fresh in their memory anymore. So that's one thing, keeping the order blocks only when they're fresh. And if within these 10 candles you have a reaction, right, a retest where price comes back and moves out and stays out for the whole candle, then that order block as well is to be discarded because it already had its first retest. You only want to be trading first retest of these order blocks, and then you discard them unless they're part of a quasi. And what I mean by that, I'll explain this very quickly. The quasi is a the quasi is this. All right, so if the market actually it is this one. So let me start all over. All right, so that's the quasi line, left shoulder, head, and neckline. If it breaks this lower order block, I would be this swing low. I mean, it will activate the quasi, and I would be wanting to look for the reversal to come back. Price would likely go a little bit lower than where it is. Don't know where exactly that would be. The only thing is there is no entry order block here, so I need to use for a different example. Let me go to the daily. Maybe I can use that more quickly. So in the case of, this may be a better example. So this is the quasi, which is a reversal pattern, very simple, which is a variant of the head and shoulder, right? So you have an established downtrend, lower highs and lower low. The significant swing point to be broken, that's the neckline, which is the highest point in a bullish reversal between the left shoulder and the head, which is this point. And then whenever it's broken, you have the possibility, the indication of the market trying to make a reversal. And then you can go back from the highest point it's made after the head to look for, using the order blocks, which I just indicated, outside bars and engulfing, to indicate areas of higher probability that are, if the market is going to reverse, which you don't know in advance, but if, then these are higher probability areas to be trading off. That's one, and you can see that on the second one, it did have that reaction. These order blocks, the reason I'm explaining this, these order blocks do not expire because of the amount of candles after its creation, right? So the freshness rule does not apply to them. They can still expire or be invalidated if the structure becomes too large and you have too many of them, right? And then you have to choose a cutoff time and not trade that pattern anymore. But those are the two types of order blocks, fresh ones and part of a quasi, which is a bigger reversal pattern. Let's take a look at the lower time frames. We have Hikima markets talking or asking us. I've entered short on EU. Let's take a look. 1.1741. Okay, so that's the stop loss. I think there's a little delay here. 1741.13, stop loss 50. Okay, so that could be a, let me take a look. You've entered in a short, but the market hasn't reached that yet. Does that mean you entered way before? I don't think so. Or maybe you if you don't mind letting us know what you mean. 117 is above current price, right? That's way above. That's around here, which price hasn't reached yet. So maybe it's a pending order. Maybe you're talking about a pending order. If it is, let us know. your actual entry and whether or not it's a pending order or a market order, because it wouldn't be able to be a market order if price hasn't reached it, or you entered, you know, a long time ago, which I don't think that's what you mean. I think you meant here. So let us know in the chat, Hakima. I appreciate your message. I'll be sorry, TP 11693. Okay, all right. So I understand that. That makes a lot of sense. But still, the entry, I'm not sure I understood your entry. Since 1741, it hasn't been reached yet, right? So it must be maybe 21, maybe 31. Let us know in the chat, and we can continue that question. Let's take a look. All right, so shall we break down EuroCAD for Divanti Hassan? What do you say, Samir?
EuroCAD really showed a very massive move this London session. I think I was looking at charts. Let's see where it is at. If we go to the if you go to the 1 hour, I was planning for shorts here. See, I knew that's why I knew this EuroCAD is, you know, shown a massive move to the upside. If we delete this, if we go to the daily time frame, actually daily time frame is tapping this area. I maybe have ignored this area. If you go to the 4 hour now, 4 hour is also having a very beautiful pause before this huge impulse to the downside. I think this was a perfect entry for shorts, at least to this imbalance. Could have been a quick scalp, but again, I don't like this momentum right here. I have seen in past price rebalance and continue to the upside. So keeping my experience in mind, I will go for longs on this one, just based on my experience. Technicals are showing me this is a good area. Then if we show a shift in market structure, can go to the downside. But I have taken losses on these kind of setups, so I'll just take a lesson, and I'll just look for longs on this kind of market condition. So where can I plan longs? Let's go to the 15-minute. I think this is a good area. If we get here, look for a change of structure or some kind of patterns on the 5-minute or 1-minute. You can take your trade right here, place your stop loss maybe below this or even below this, and you can easily go for 1 to 1.5. If markets offer 1 to 2, you can take it. And if you want to know the longer time frame or kind of a swing trading bias, if you are holding the trade, then definitely we are going to the upside. And this is using as a retest area. Price is using this, and we have a plenty of range to go to the upside. So definitely on the weekly we are bullish. On the daily also we are bullish. If you just see this structure, this was a higher low, this is a higher high, so this can be a potential higher low, then another higher high. Keeping this information in mind, this market structure very simple. We can also plot some EMAs to see if if you are having trouble in identifying the trend. If market is above 200, then you just go for longs. If you go to the 1 hour now, 1 hour is also above the 200. Yeah, that was a good area on the 15-minute to go longs. This was the area. So I would likely to take longs from here, and I can place my stop loss here, and we can target this high, which is 1 to 1.7. It is not bad. So this is my buys for intraday kind of a move. Of course, your TP can take maybe 1 or 2 days to get triggered, because we are almost, not almost, but the market is gonna close today as we are later in the New York session. So you might can see the TP if it has to go to the upside tomorrow. What is this? It is 70 pips. Yeah, I think tomorrow this is a good area to go long from. If price decide to consolidate today and didn't reach this area, then this area is still valid for tomorrow. So I like this area, and definitely looking for longs here on EuroCAD. But I was planning for this gold shorts, which of course trigger 1 to 1 as per my liquidity strategy. First fair value gap, we don't take it, we take second fair value gap. So as per my strategy, um, my entries would have been something like this. Of course, I didn't took this trade. I was waiting for NAS 100 or US 30. I do have a good area for US 30, which I would like to go long from, which is, I think price will not tap that area. We have to deal with the kind of impulse or a correction type of information that we might can have in upcoming 30 minutes. We can use that information, but if that is not the case, then this area is valid to go long from. Why this area? If you go to the 2 hour, let me erase everything just to be little bit clean. Let's see the charts. Okay, this is a order block or demand area in my opinion, or I see it that way, and I can treat this low as a liquidity move and price coming to the downside. I would like to take entries here for longs. And what can I target? I can target this high, which was a session high, or this fair value gap. So this is a very good area to go long from. This area is valid for today. Tomorrow we might can see some new price action. Tomorrow my buys might can shift. If we tap this area today, then definitely looking for longs on this area, from this area. NAS 100, we are having this support area, if I'm not wrong. This is way too this is not clean, as momentum started right from here. So technically our support area or demand area is here, but this is a small order block which I've just marked. I don't like to go I don't like this area. So US 30 is cleaner than this area. But again, if that thing didn't happen, if we saw an impulse to the upside, then definitely I will be looking for a correction pattern on the 1 minute or on the 5 minute. Then I will be taking advantage of that move if price just straight impulse to the upside. Of course, we can fill this gap right here. So that is the two confirmations, or I'm just waiting for these two things to happen. Let's see what price does now. So yeah, it is just waiting game on these two pairs. I want either impulse to the upside or impulse to the downside, and tapping my area on US 30, which is this area. Because look at it, price just started an impulse right from here. So this is a very good demand area. Keeping that thing in mind, definitely this area is good for longs. Now we have to wait, either
We have one.
the upside.
Yes.
Yeah.
Sorry to interrupt. We have someone asking about 30 minutes ago if the 5-hour chart is lagging. Have you noticed that, Samir? Have you
No, I
noticed
haven't
anything about?
noticed it. Maybe
Okay, I
you just check
checked.
your internet connection.
Yeah, I just checked on my side of things, and it's not lagging right now. I don't know 30 minutes ago, but as of now, I don't see any lags. If there's a lag, my friend, then what I would ask you to do is go to the lower left corner where you see the number with a slash and KB. That's kilobytes, and you can click on it and change the access server. Right, choose one that is closer to you or the next one on the list, and probably that could fix it. Maybe you have a little issue with the connection. That's what I can give you as advice, since I don't see any lags, and I know it dependent on your connection, especially if you're on Wi-Fi. Wi-Fi is not the most stable internet connection, right? It can be fast, but not as stable as cabled. So you want to be connected with a wired connection if you're having issues with lags and so on. EU is sort of breaking that low of the previous H4 candle. It was a little reaction. It looks like a liquidity grab on EU. If you look at the low of the previous H4 candle, it tapped it and had a nice reaction up back. You look at it, if you zoom it, you'll see that it had a little reaction off of that.
Yeah, it just broke this and had the fair value gap. I'm just seeing it that way.
I'm going to switch to mine. Let me double check that. EU on H4. You can see how the market was. The market is eager to see if, if it's gonna break down or not. Everyone is watching for that reaction, right? Because if it breaks this low, it tells us that there's nothing, right? It's gonna come down almost from the sky for that retracement, because there's nothing. If you look on the lower time frames, you'll see there's nothing to hold price from a much bigger move down. Let me clean this up a little bit, and perhaps let me watch it on the 5-minute. You'll see that we have, for some time, we don't have anything stopping price on many. There are a few small order blocks there in the 15-minute, but I mean, price being so expanded, it's easy for it to go much deeper. So everyone is watching this line, that line. Let me indicate it better for you, that line. And if you go to the lower time frames, what do you see? You see price coming close to it, and it reacts, right? It went like a pipette or so. It looks like a liquidity grab, but then it reacts the other way. Let me open it up again, zooming it a little bit more for you to see, right? So you can see how price comes in, taps a little bit. Maybe that is, I think that's not even a pipette, maybe two, maybe one. I'm not sure. Let me double check. That's that's a pipette basically. And then reacts off of it in the opposite direction, creating that order block on the 1 minute. This is only a 1 minute order block, doesn't mean anything, just a little reaction. Most likely the market is pushing and eventually will break it, and then we will have a retracement. Since we are so overextended, the easiest thing for price, once the panic of the move, once the momentum is, the acceleration is out of play, you'll likely see price breaking down and then continue much lower. We'll have to see. Who knows? Maybe it will, maybe it will not do that. But that was a nice reaction off of that H4 low, or previous H4 low. That reaction that I'm talking about. All right, but still, I'm gonna go look at EU CAD since we had the question, and I'm gonna do a quick top-down analysis and tell you what I think about it. All right, so on the monthly time frame, do we have a fresh order block? Yes, we do. Are we retesting it? Yes, we are. Okay, the fact that we have that doesn't mean I want to go short or long, just a possibility, something I want to know about to look for alignment. Let's go to the weekly. Do we have a weekly alignment? Do we have a quasi? There is no quasi in this time frame. And the weekly, this is the first retest of the weekly. And we have 2, 4, 6, 8, 9. So technically, this is still fresh and still able to be traded, and it has monthly and weekly alignment. So I'm interested in looking for the reaction that we typically have of these order blocks, which is opposite to the current candle's direction. So on the daily time frame, what do we have? Do we have a quasi? This is the neckline for the quasi line, right? This would be the head, the left shoulder, the neck. Let's mark that as the daily quasi line, and then make this right the lowest point. That would be the quasi, and let's look for possible entry order blocks, and we see one here, and that's an overlap of these two. Let's mark them. It's outside of the overlap of the weekly and daily, but you can still take advantage of it, because these structures sometimes they get squeezed and they can trigger the daily on top of them. That's we have another one here. which I like. Actually, it's a bit bigger than that. Let me make sure I get it correct. Let me clean this up as well. What's the high on this? 26.7. The close 26.1. All right, so it's valid. And that's the area that I want to be trading off. And those are the only two. So basically, I'm waiting for this idea, monthly, weekly, and daily alignment. I'm waiting for this area to be tapped into. And then I'm going to be taking a possible short from there if I get entries on the lower time frame. That's on the daily. There isn't anything else to look for, except there is a fresh order block short here that we can also use, even though, yes, I can still use this, even though it has been squeezed. But I can only use this if it has H4 alignment for the short. And do we have that? We have, but it's, you know, standing on its last leg, so to speak. Right? There is a quasi here on the H4. That's the daily that I'm looking for. The H4 quasi. That's the left shoulder neckline, the head, breaking of the neckline. And it goes through it, but does not close above it. So that still tells us you can still expect a little reaction off of it, as long as, you know, the reversal, the transition is completed here. So we'll have to go to the lower time frame to see if that is a thing or not. There's that holding up quite nicely. On the H2, the quasi is still valid. Yes. All right, so this is the area on H2. And as you can see, it's still valid, right? Still valid. That leaves us with basically one huge area to trade from. Let's see if I can finish up on this quasi. Remember, guys, if you enjoy these live breakdowns of the market, don't forget to hit the like button. It's not gonna bite, but it will support our efforts here at the Fivers for bringing value, education, funding, of course, to you, the trader, the one who wants to become better. That's not H4 but H1. Let's do that correctly. And we do have another one here. So actually this is much wider. So that means that we're gonna go like so, and there, that's the one. All of that is already being taken out already, but it still tells us if the area is valid or not as a quasi on that time frame. So we do have, okay, so that's it. That means that I'm interested in this area, which has the overlap, right? So that means that I'm only interested in the H4 because it does not get refined. So this is the level that I'm going to be looking for a possible short, but I can see that the market is very, very impulsive. So you only want to be taking this if your alignment actually triggers. Don't be a hero thinking, you know, because we have the overlap, it's going to react from here. You know, many times the reversal does not happen. So you want to wait for the market to actually tell you it's doing what it's supposed to be doing. Right, on the H2, you might want to wait for the close below that open, right, like right now, and then for the reversal to come in, and then you get your trade to go short if you're pondering on that short. On the 1 hour, it's not even there yet. You still have a bullish structure that needs to be taken out before you can start thinking about a possible short. But it's there. I mean, it's actually trying, and that wick there is interesting. But don't be a hero. The market is unable to break this H1 order block. I mean, the most logical conclusion is that the market is not ready yet, and it's going to have another push, another leg up, and likely it's going to break down the reversal pattern that I just drew, which is perfectly fine. don't waste time on trying to squeeze yourself into an impossible position. If that's what market wants to do, then you want to be going long. But the long on the H4 isn't there for me, right? The last order block would be this one to be trading long from. I think that's the area where Sam is looking for a long as well. So an actual long would be this level to me, right? Not where we are. Here I'm looking for the possible short. And if I do get the short, I don't really have a target other than that structure right there, but probably I would be using some daily ATR based TP for that, since you don't want to be too long in this short, since it's clearly that the market wants to push forward and higher after a day or two. That's my take on EuroCAD.
We have a question from Nico or Neko. Yeah. So what are your thoughts on this? Of course, you can share your thoughts first, and then I, of course, can give my views on this one.
No problem. And we have DJ as well, a regular in our show, saying he also traded today with the 5-ers, not lagging. Haven't had any issues on the 5-ers MT5 yet. Right, so that confirms that likely whoever it was that was having some lagging issue, it could be your connection, my friend. Take a look and let us know in the chat if you have any question. If you have any support questions, actually the right place to go is into the website Live Agents or the support section of our Discord community. Each way, which one you choose is which one you feel more comfortable checking. But coming back to the question, what are your suggestions for a beginner funded trader like me? Going aggressive on phases and slow on the master account. Any tips? I would say if you're thinking about whether or not being aggressive, yes, I think on the phases you should be as aggressive as possible. That does not mean you want to go all in, but you want to look at your normal drawdown, your max historical drawdown, and how often that takes place. Maybe that only happened once, right? Once a year or once in 2 years. Then you don't want to be using that max drawdown for your phases, because it's too infrequent, right? But you want to be taking something that as you're using your max drawdown for, let's say, the last 3 months, 6 months, something a bit more shorter, and use that max drawdown as your guide as to how aggressive you can be, because the max drawdown tells you, how likely it will be an indication how likely it could be for you to lose the account if you were to have a similar drawdown again in the future, and the chances are you will. So that's the best way to gauge how aggressive you can be. And you can be a little bit even more aggressive and say, well, I'm gonna take the max drawdown I had in 2 months or 1 month, and I'm gonna be putting my position size as aggressive as that. Chances are you will lose the account very quickly. Not very quickly, but the chance that you will lose that account are quite considerable, but you will likely pass the phases very quickly. So I would say phase 1, you can be as aggressive as you can be comfortably, maybe your max drawdown of the last 3 months. And then on the phase 2, you want to dial that down a little bit, maybe your max drawdown of the last year, something like that. Once you get to the funded, you want to dial that down, very, very low, because you're gonna have that account even if you go through your max drawdown historically ever, right? You wanna still have that account, because you don't want to be losing these funded accounts. Even if you do, it's no biggie, you get them again. But once you get the funded, you want to keep them as long as possible. So I would be doing something like that, doing on the phases aggressive, just like you suggested, and on the funded very conservative. That would be my advice.
All right. So, if I would share my thoughts on it, you already have covered majority of the things. But if I see myself, what I was doing, I think finding a sweet spot where your psychology doesn't go, wrong, and where you are okay losing that particular position if that particular position that you are taking is a loss. So you have to find a sweet spot. If you are comfortable losing 1% per position or per trade idea, if you're comfortable risking losing 0.5%, if you're comfortable risking or losing 1.5%, I think you have to find that sweet spot. What is your sweet spot? And data, as Victor has mentioned, it is really a big part of trading. Just find your overall drawdown, like how much losses you can have in a row, and adjust your risk management that way. I think that is a perfect risk management that you can have. And if you're a complete beginner and you don't know anything, if you just want to take the advice and you just strictly want to follow that, I would say risk 0.5%. Unless you have the cushion of 2%, then you can increase the risk to 1%, and then so on. If you have 5%, then of course you are like close to passing the challenge. You don't have to risk the whole amount, or you don't have to risk the higher percentage. So that's how you should trade challenges, keeping the thing in mind that you don't have a lot of money, on to blow on challenges. So you have to be mindful of trades you are taking and the risk that you are taking. So start with 0.5% if you are a beginner. Build the cushion. 2%, I know it is boring, it is hard to do, but I think that is the right way. That will build the right foundation as a beginner trader, and then you can use that foundation in live account, and then you can excel quicker than someone who has made a lot of mistakes, and at the end of let's say after 3-4 years, then he or she comes to know about the mistake. I think if you do this particular thing that I mentioned, I think you can be successful a little bit sooner, than the trader who is following the wrong practices, like he's risking so much. And that I think you should do. And once you have the confidence, then of course you can get aggressive in challenges. As you are beginner, you might be having a little bit nervousness, if I call it that way, some confidence issues. Build that confidence by doing this practice, which is risk 0.5%, build the cushion. Then I know it will take time, it can take 1 year to get used to these things, to get confidence, but I think that is the right way.
Another thing to consider, Nico was asking about this. The amount or the degree of aggressiveness that is adequate for you also depends on how valuable that account is. Like if you have an account that you saved for weeks or maybe months to be able to buy that account, then you don't want to be aggressive on phase 1 and phase 2, because you don't want to be risking something that's very valuable to you. So that's something you want to be considering as well. However, it's a 5K account and you can buy them, almost every day. Then why not go all the way, push the throttle to the max? But if not, if you can't afford to lose that account frequently, then you want to play it safe, or as safe as possible, and drag it out. Extend the life of that account as long as you can. And that being said, we have come to the end of our stream for today's, ladies and gentlemen. We still have a lot in store for you here at the Fivers. We have Discord community going on strongly. We'll have a session in about 40 minutes and some more, 40 some minutes. But I'd like to thank you. I'd like to thank you for your attention, your questions. You guys had great questions today. Keep them coming. That would be in the next session, though. But keep them coming. We appreciate that. Don't forget, we are on a mission to hit 100K subscribers. You can be part of that. Let's support this initiative of the Fivers to reach as many as possible. That's it for me. Any last words, Sam, before we heads off into the
Yeah.
sunset of this beautiful day?
Again, was a beautiful stream, and thank you to you guys. Because of you guys, we are here. And the last question was wonderful. I think if you're a beginner trader, just focus on the things that I mentioned, and that Victor also mentioned. Focusing on data and getting comfortable, getting that confidence, build that confidence, and use that confidence to risk a little bit higher, to make a little bit more percentage. So with that being said, guys, I will see you in the next stream. I will see you tomorrow, and take care again. Thank you so much. See you guys tomorrow. Bye bye. I'll see you tomorrow.
All right, that's it for us. Take care. See you next time. Bye bye.